first we'll start with your electronic commerce operator, TDS and TCS. When you talk about your electronic commerce operator, it is connected to your TCS, and basics of that we have already covered under your RCM chapter, section 9.5, also registration chapter. So if you see this area, the definition of electronic commerce, that you are supplying goods or services including digital products through electronic or digital network, that we have already discussed. The definition of electronic commerce operator, the person who owns, operate, manages digital or electronic facility or platform for electronic commerce. That is also discussed. Even if you see this particular area, taxation aspect, when you talk about ECO, we have discussed this in registration chapter. When you talk about electronic commerce operator for notified services under section 9.5, who will pay GST? ECO will pay GST. Mandatory registration. Now, if at all you are talking about other than notified cases, under section 9.5, what will happen? Who will pay GST? ECO will pay GST on its commission, and supplier of goods and GST services will pay GST on their supply. So, when you talk about that, own supply, even ECO, so assuming one more case of ECO is that, a very simple case, if the company itself is having a website, if the supplier itself is having its own website, if at all you are talking about, say, Titan company having its own website, what will happen in that scenario? GST will be paid by ECO only. There is no supplier through ECO, there is no supplier of goods through ECO, there is no supplier of service through ECO, because supplier himself is ECO. So that is a very normal scenario. Company having their own website, so that we are not touching. Normally when you are talking about ECO, we are talking about you are only acting as facilitator and someone else is supplying through you. If you are supplying your own product on your website or app, then you have to pay GST. That's very clear. When someone else is supplying, ask yourself a question, whether section 9.5 is applicable. Then ECO will pay GST on entire value of supply, not on its commission, but on the entire value of supply. In other cases, if you remember, I split ECO into three cases. 9.5 is applicable, 9.5 not applicable, TCS that, 9.5 not applicable, TCS not that. So, you will have two more scenarios where 9.5 is not applicable, but the payment is through ECO. TCS is applicable. 9.5 is not there, but payment is not through ECO. ECO is not getting the payment in their bank account. Directly who is getting the payment in the bank account? The payment is received in the bank account of supplier. Then TCS is not applicable. There is no TCS. Are you clear with this understanding? So not just because 9.5 is not that doesn't mean that TCS is applicable. There are two conditions for TCS to be applicable. Rather, there are three conditions. Supply of goods or services should be through ECO. Section 9.5 is not applicable. Consideration should be routed through ECO. Only then TCS is applicable. Right. See, TCS is not changing the tax angle. Whether or not TCS is applicable, ECO will pay GST on its commission, and supplier of goods or services will pay GST on their supplies. That is not changing. That is not at all changing. This you keep in mind, that this aspect is not at all changing. Right. Now, if you are talking about registration aspect, I am not going to take this again. When to take compulsory registration, when not to take compulsory registration, this was entirely discussed in your registration chapter. Right, so I am not touching this particular aspect again. Now we will directly focus on your TCS. Now that you know when TCS is applicable, supply is through ECO, not a note 9.5 case, and payment is routed through ECO. Consideration is received by ECO and ECO deducts its commission, etc., etc., and pays the balance amount to supplier. Now, what is actually happening? Let us see the sequence. That is a supplier who is supplying through ECO, and consideration is also routed through ECO. Supply is through ECO, payment is also through ECO. Payment is also through ECO. Now, what will happen next? What this ECO will do? ECO will get the payment and deduct TCS at 1% on net value of supplies. On net value of supplies. What is net value of supplies? Net value of supplies is after your supplies returns, which means supply during the month. Supposing I am supplying through Amazon. I am supplying through, my supply through Amazon in the month of October is 1 crore. And in the month of October there are 20 lakhs return. There are 20 lakhs return. So TCS will be on 1 crore or 80 lakhs? 80 lakhs. You might wonder there is one more deduction. That one more deduction is very normal point. That it will not cover 9 by cases. Because in 9 by, ECO will pay GST on the entire value. Right? So collecting TCS and depositing in the other person's account does not make any sense. So net value of supplies is supply minus supply return, not including 9-5 cases. Not including 9-5 cases. Right? So the percentage is 1%. 1% of what? 1% of total supplies by the supplier. So I supplied through Amazon total 1 crore goods and return were 20 lakhs. Amazon will collect TCS at 1% on 80 lakhs. Rather, normally we use collect TCS. Here it will be deduct TCS. Why? Amazon has the payment. Now, Amazon, while giving back the payment to me, it will retain that 1% and give me the balance payment. Give me the balance payment. So that is happening now. Next, what will happen? If you recall your return filing chapter, you can easily now link it. You are supplier. I was a supplier through Amazon, right? I will file my returns. GSTR1 and GSTR3B. I will file my returns. GSTR1 and GSTR3B. So my supplies of 1 crore minus 20 lakhs will go in my GSTR1 and GSTR3B. The same thing will be done by ECO. See, please make one thing clear. ECO will have two registration. One normal registration for paying GST on its commission. One TCS registration for deducting and paying TCS. Right. Now ECO is acting in the capacity of TCS collector. TCS. So it will file GSTR 8. I will file my GSTR 1 and 3B on 11th and 20th of the next month respectively. And ECO would have already filed GSTR 8 on 10th. Supply should match or not? It should match or not? ECO has given not its supplies. ECO has given my supplies through it. My supplies through it. So what will happen is matching will start. Matching will start of place of supply and mainly the value. Mainly the value. Right. In case of any discrepancy, it will be notified to both. If not rectified, see, depending, there can be two possibilities. And if you look at government is so intelligent. Two possibilities. First possibility, I am the supplier through Amazon. I have shown 80 lakhs as my supplies through Amazon. I may have other supplies. Through Amazon it is 80 lakhs. And Amazon has shown 90 lakhs. Amazon is saying that I have supplied 90 lakhs. But I am telling that I have supplied only 80 lakhs to Amazon. So what is happening? There is a shortfall of, which means government tells supplier, Amazon, I will believe Amazon. You have shown 80 lakhs. If Amazon rectifies this, then the chapter closes there, or if I rectify it, the chapter closes there. If no one is doing anything, then Government comes to me, supplier, not Amazon, and tells that you have suppressed your supplies to the extent of 10 lakhs. Please pay tax with interest. In the month succeeding, the month after discrepancy is notified, because they give me a time for rectifying. They give me a time for, when supposing they intimate me in October, this will be added in the return of November. So if they intimate me in the month of October, I could have rectified in the month of October. So this will be added in November month. Now you may ask, okay, what happens in the ulta case, reverse case? Reverse case means I am supplying to Amazon. I am showing my supply as 80 lakhs, but Amazon is showing only 70 lakhs. Then government cannot come to me. I am telling that through Amazon I have sold for 80 lakhs, but Amazon has collected TCS only on. So there is more supply shown by the supplier than eco. Now government tells that supplier, I am leaving you. I'll catch hold of eco. What they will do? They will tell that you have collected short TCS. You have collected short TCS. Pay that with interest, and even penalty will be there. Pay that with interest, and even penalty will be there. Interest is normal. Pay that with interest. Normal. So whatever TCS you have not paid, pay that with interest. Including penalty can be there, which is 10,000 or TCS short collected, whichever is higher. In our example, TCS short collected. It can be TCS not collected or short collected or collected but not paid. So 3 impacts. First, they have to pay TCS with interest, and also penalty. Now, if you see this particular chart, you'll have a clarity as what is happening throughout. Now, one small example is given just to make sure that there are some certain ifs and buts and you understand it. Supposing item A is there and item B is there, which I am supplying through eco. Item A and this is case A, case B actually. This is case A, cases. These are all cases, not items. These are all scenarios. Right. I am supplying item A through eco on which GST is 250. There is some GST. Whether TCS will be there? Yes. Supposing I am supplying only exempt item, TCS will not be there. It doesn't make any sense. Why? See, if ego is collecting TCS, it will go and sit in the cash ledger of supplier, and he is telling that I don't have any tax. Why should you collect TCS and give it in my account? It doesn't make sense. Or if at all, there are supplies of taxable item A, but you are unregistered person. The supplier is unregistered person. Even then TCS does not make sense. Not applicable. Supposing I am supplying again taxable item, but it is taxable under RCM. Even now TCS doesn't make sense, because tax will be paid by recipient. So eco cannot collect tax at TCS and give it to suppliers cash ledger. Taxable supply, but supplier is under composition scheme. Even then TCS is not there. By the way, it cannot be there, because even if you recall composition scheme, if at all you are supplying through eco where TCS is applicable, you cannot opt for composition scheme. So you will find that in these 3 cases, answer is no. In the last case, net crux is same, no TCS. Are you clear with this understanding? Net crux is, it should be a taxable item where you are registered, where you are under regular scheme, where RCM is not applicable. It should be taxable item. The supply should be of taxable item where supplier is registered, working under regular scheme and FCM case. Only then TCS will make sense. Right. Now, calling for information. Wait, we have just missed out with this one small point which was there. If you recall, there is an annual statement filed by ECO. Annual statement filed by ECO. GSTR 9B. That will be filed on 31st of December of next financial year. 31st of December of next financial year. Annual statement. Now, understand that if there are any error or omission, what you can do? You can give it in your annual statement. What is the last date? Due date of September month return of next financial year or actual date of annual return, whichever is earlier. So this point we have been discussing for long. Written filing means this is the last date for rectification of mistakes. Now one small area is left out where this is an extracting information by officer from ECO. Just to check whether the stock of supplier that is showing is correct or not. Supposing there is an inspection against the supplier and stock is taken. I tell that my stock is 1 crore, out of which 80 lakhs is with me and balance 20 lakhs is in the warehouse of Amazon, which is also my additional place of business. I would have added that as my additional place of business. Now, don't you think that officer will have right to go there and verify? So, proper officer higher than the rank of deputy commissioner may give a notice to ECO to give the total supplies of goods and services that a supplier has supplied through it. Also, the stock that is held by the supplier in the godown of electronic commerce operator, which is declared by him as additional place of business. Cross verification, external confirmation. External confirmation. Right. And that ECO has to reply. Right. They are telling that if ECO is not furnishing this information within 15 days, he shall be payable, he shall be levied with a penalty of up to 25,000. CGST, copy paste for SGST. So, ECO is forced rather to give this information. This is actually external confirmation by officer via electronic commerce operator. Via your electronic commerce operator. Are we clear with this understanding? Are we guys clear with this understanding? And if you see this particular last point, circular, this is rather a circular, this will give you utmost clarity, highest clarity that you can have in your TCS. Now what is happening is, Tea Board of India is the operator of e-auction for trading in tea. The participants in the auction are buyers, sellers and auctioners. Buyers pay to Tea Board of India, who then pays to sellers and to auctioners for their brokerage. Payments is never made to auctioners for supply of goods. Now, in this case, TCS will be on what all? TCS will be on what all? See, there is a seller, there is a buyer, there is auctioner, there is Tea Board of India. Seller, buyer, auctioner, that is Tea Board of India. Who collects that payment? Who is having all that payment? All these payments are made to whom? Tea Board of India. Tea Board of India. Via, and then the payment is given to seller, also to the auction, to the seller for supply of goods, to the auctioneer for supply of services. Now, just answer this. When TCS is applicable, just think of that. Supply of goods or services is via ECO. So, via online platform it is happening. Right? First condition. Not a 9.5 case. Neither sale of goods can never be in 9.5 and this brokerage service is not in 9.5. Third, payment is via ECO. Tea Board of India. It's all via your ECO. Now, there are two supplies. One, supply of tea via Tea Board of India. One, supply of brokerage services, auctioneer services via ECO. So, there will be TCS. There will be TCS both for sale of goods against the seller of goods and auctioneer for its services. Classic example. where in one transaction there are totally 2 TCS. Why? Actually, there are no one transaction, multiple transactions are involved. Seller to buyer via T Board of India. T Board of India will collect TCS. Auctioneer getting its commission via T Board of India. Again, TCS will be that. TCS will be that. That is everything about your TCS. ECO and TCS are closely connected. Now you have a very clear picture of ECO under 9.5, ECO's registration aspect as well as your TCS aspect. Now when you talk about your TDS, make one thing very clear that TDS is for government contracts. TDS is for government contracts, which means supplier is government or recipient is government. Supplier is government or recipient is government. Recipient is government. Recipient is government. So who are the notified recipients? Where they will deduct TCS. So I'll be using this word. Whenever TCS comes, we'll be using ECO. Whenever TDS comes, it is government contract. Now, why it is government contract? If you see who shall be the notified recipients, department or establishment of central government, state government or local authority, government agencies, other notified body. If you look at other notified body, for example, point number 1, it will include public sector undertaking, society which is established by government, not normal societies. Societies which are established by government under Societies Registration Act, and authority or board or any other body which is either set up by an act of parliament or state legislature or which is established by the government. In both the cases, the participation of the government is more than 51%. Either try to buy at it or make your life very simple by calling it as government or government related bodies, even government companies. Now first time even government companies. You're getting this understanding. So now you get to know why we are calling it as government contract. Recipient should be these categories. Recipient should be these categories. Now how it will actually work? Supplier is supplying to the recipient. Whenever there is a bill mark, it means notified recipient, and we have seen the notified recipient category. A very important point, supply should be for more than 2.5 lakhs. Obviously, not calculating GST. Whether it is TDS or TCS, you don't calculate, you don't include GST. But for supply via ECO, there is no limit. If you are supplying via ECO and consideration is also via ECO, not a 9.5 case, TCS will be there, no limit. Here there is a limit. It should be more than 2.5 lakhs. Contract value, not transaction value. What difference it makes? Contract value may be 50 lakhs. Under contract, you have promised the government that you will be giving for 50 lakhs. And then for each transaction, you are giving invoice for 2 lakhs. But contract value is 50 lakhs, more than 2.5 lakhs. You are not required to see the transaction value. You are going to see the contract value. So you are going to see the contract value. Now, what government will do? Government will deduct TDS at 2%. TDS, see, when I tell TCS at 1%, TDS at 2%, understand that TCS rate in the section is 2, but notified rate is 1. Whereas TDS rate is 2 and there cannot be notification because it is fixed. That's the difference. TCS maximum rate can be 2, but as of now it is 1%. TDS, the rate is fixed, it is 2. There is no maximum. The rate is fixed, it is 2. So there is no question of any notification. 2%. 2% at the time of making payment. When the payment is made, 2% will be there. So just to differentiate, on payment basis it is there. It is on payment basis. Right. Obviously, the person who is deducting TDS will file a return. We have discussed that GSTR 7, 8 is TCS 7, 10th of the subsequent month, and that will automatically sit in the cash ledger. 7. See, whether it is TCS or TCS, the opposite party, that is eco or government, will pay TCS or TDS by cash ledger, and the opposite person will get in the cash ledger. Now, there is a special case where TDS will not be there. When? If the location of the supplier, location of the recipient and place of supply. If all are in one state, TDS will be there. But if location of supplier is in, say, one state, recipient and place of supply is in another state, BB, TCS will be there. Why? See, recipient should get that in its cash ledger. So, place of supply and location of recipient are same state. Are same state. Both in first case and second case, they are in same case. The difference will be in the first case, it will be CGST plus SGST. In the second case, it will be IGST. Location of supply and place of supply is the deciding authority for CGST, SGST or IGST. Right? If it is CGST, SGST, 1%, 1%, IGST, 2%. Right? Right. But in the third scenario, if you look at this carefully, location of supplier is A, recipient is B, but place of supply is A. The opposite person will not be in a position to take the amount in the cash ledger. Therefore, what they tell in the such cases? Forget about TDS. Forget about, when you understand place of supply, you know that this also is possible. Location of supplier is in the state of Tamil Nadu. Recipient is Maharashtra, but place of supply is Tamil Nadu. But place of supply is? It is not Maharashtra. So when you see this, there will be a difficulty in passing the credit. There will be a difficulty in passing that. Why? I will explain again very clearly. What will be the, if at all, assume that what will be the type of TDS if at all it was there. If at all it was there, it would have been CGST plus SGST. But for Maharashtra recipient to get, it should have been, you getting that point? Therefore, they said that okay, in this scenario, TDS is not there. Difficulty in giving that amount. Therefore, they have said that will not have this particular confusion. Now, just like the example that we have discussed for your TCS, will have an item. Same scenario. Item A taxable, item B exempt, and these are cases. These are all situations or cases. If item A is 1 lakh and B is 2 lakhs, GST, forget about GST, will not be counted. So total contract value is 3,05,000. But whether TDS will be there? No. It should be more than 2.5 lakhs. And that too only basic value, forget about GST, and that too taxable item. But what is the taxable item? What is the taxable item? So you are only seeing. Next example, 2.5 lakhs taxable item, 50,000 exempt. GST on taxable item is 12,500. Now again, only see the value of taxable item. If you look at the wordings carefully, it should be more than, it's not more than I go to, more than 2.5 lakhs. So again, no TDS. Third scenario, taxable item, 3 lakhs. Forget about GST, you are only seeing the value, 3 lakhs. Whether this time TDS will be there? Yes. This time TDS will be there. Fourth case, the value of taxable item is 3 lakhs, but the supplier is unregistered. If the supplier is unregistered, he will never get in his cash ledger, so there is no TDS. Next scenario, value is more than 2.5 lakhs of taxable item, but it is under RCA. Again, the opposite person, even if it gets in cash ledger, it is of no use to him. So it will not be there. Last. Supplies of 3 lakhs taxable item. Supplier is under composition scheme. But wait, this time there's a change. You'll have TDS. Don't worry. Composition taxable person will use it. Why? He'll get that in his cash ledger. He'll use it. Actually, if you see, in both the cases, certain things are common. It is only for a taxable item. It is only when you are talking about supplier is registered. It should be a FCM case. It should be a FCM case. But when you talk about composition scheme, there's a difference. For TCS, supplier cannot go for composition scheme if it is via eco. So not applicable. And when you talk about TDS, even if it is a taxable item, if supplier is registered, if it is taxable under FCM, even if you are under composition scheme, TDS will be there, and don't worry, the opposite person will, the composition scheme supplier will get in his cash ledger. So if you look at this, here it is yes, and then when you discuss about your, it was not applicable. It was not applicable. Not because of the provisions of TCS, but because of the provisions of composition scheme. But because of the provisions of composition scheme. Right. Now when you're talking about penalty for non-deduction, same. Just like your TCS, 10,000 or TDS not deducted, short deducted, or deducted but not. This is penalty. So if you are paying late, it will be with interest. Penalty. This is only the penalty portion. And if at all you have deducted excess or erroneous TDS, refund shall be granted either to deductor or deductee, because after all it is even the deductee's amount that will be there. But wait, if the amount is not credited in the cash ledger of deductee, what are they trying to tell? Even if there is excess TDS which is being deducted, if the opposite person is getting in his cash ledger and using it, there's no question of refund. There's no question of apply the same thing in your income tax. Say for example 194A instead of 10%, 20% TDS is deducted. The deductor has paid it, the opposite person has gotten in 26 days and they are claiming it. Then there's no question of refund. Then you will understand then what is the situation where refund will come? I have deducted extra, but while filing the return I have shown the correct amount. So opposite person, supposing I have deducted instead of 2%, 4%. While filing the TDS return, the government is showing only 2%, and the opposite person is getting in cash ledger only 2%. That excess 2% is paid but not gone to the cash ledger of deductee. Then can you go for refund? Yes. Then you can go for refund. That is the situation which is discussed here. And this I am not going to take because it only tells the differences between your TDS and TCS, and we have covered in our entire discussion. So this is only the difference between your TDS, whatever we have discussed. If you have very less time, if you want to cover in 3-4 minutes the entire TDS and TCS concept, this might help you to go through all the ifs and buts of your TDS and TCS. Now we'll start with your accounts and records. Few important points are here and there. Normally you don't get any questions from this area. If at all you get, you will get only in your MCQs. Now when you talk about your accounts and records, basic questions you have to ask. Who is required to maintain accounts and records? Normally, registered person is required to maintain accounts and records. But there are certain unregistered person who are also required to maintain accounts and records. Who are they? You are talking about simple language, warehouse keeper and your transporter. Owner or operator of warehouse or godown or any other place of storage, you can make it simple. Warehouse keeper and transporter, they are the two categories where even though they are not registered, but they are still required to maintain accounts and records. Now the next question which would come up, a very important point, that till when to maintain your accounts and records. What is the time period till which I need to maintain my accounts and records? Normal scenario, a very basic normal scenario, 72 months from the due date of filing annual return, not the actual date. Due date of filing your annual return, 72 months. To be very precise, 6 years. 6 years from your due date of filing annual return. If it gets extended, obviously, you have to maintain for more time. Right? So, normally it is 72 months from the due date of filing annual return. But, if at all, the books are related to a subject matter which is pending in appeals, revision or other proceedings or investigation proceedings. Which in simple terms, if certain proceedings are going on for a particular year, in that particular scenario, you are required to maintain your accounts and records. Again, the basic time limit is the same 72 months from the due date of filing annual return or 1 year after the completion of proceedings, whichever is later. Whichever is later. So that is the timeline to maintain your accounts and records. Now, what are you required to maintain? I mean, basically you are required to maintain the records that are given in section 35 read along with rule 56. We will be discussing. In the next pages, we will be discussing what all records you are required to maintain. But can it be relaxed? Yes, Commissioner may notify that who are required to maintain lesser records and who are required to maintain additional records. So Commissioner may tell that these categories you can keep lesser records. These categories you have to keep more records. So that may be that. Now, next question which will come up is, we have discussed who has to maintain, till what time to maintain, what records to maintain, we are yet to see. The list of records we are yet to see, where to maintain, a basic question that comes up. Please understand that you are required to maintain records at principal place of business as well as each place of business. But for that each place of business, the accounts and records related to that place of business. The accounts and records related to that place of business. Say for example, I have a head office and a branch. I cannot have all the records only at head office. Yes, maximum records will be there at my head office. But for the goods stored at my branch, where I have sent the goods from my head office to branch by way of delivery challan. So that should be documented that this is a stock there in the branch and these are all the inward documents. So that should be surely there in your branch. Now, unless otherwise provided, if any records of a registered person are found at a place other than mentioned in registration certificate, they shall be presumed to be maintained by the registered person. To put in a very simple terms, a lot of businessmen have two records, right? Two records. One to show, one not to show. Correct? So when you're talking about that two records, right, what they will do, they will keep that record of unaccounted transactions in a separate place. Now when that is found, right, it is presumed that that is also of registered person. That will be, you have to prove. See, this presumption is rebuttable. You may tell that these are not my records. You have to prove it, rebuttable presumption. But basically it will be presumed that they are maintained by the registered person and whatever is mentioned in those records are also belonging to the registered person. So that will be there. And if you remember, we have already discussed this elsewhere, I don't remember exactly, but if at all, there is a place of business where you have kept goods but there are no records, right, then we have discussed about the deemed supply. So there is another deemed supply where the registered person fails to account for the goods and services. So he is not having it. There are goods and services but there are no records for those goods and services. Then he is required to pay tax with interest and penalty on those goods and services as they are not accounted as if they have been supplied, deemed supply. Deemed supply. See, simple understanding. If I have some stock for which I don't have the corresponding accounts and records, right, they will tell that. You might wonder how it can be deemed supply because there is an extra stock. There is an extra stock for which I am not having any records. They will tell that if you are having this extra stock where you are not having any records, you would have anyway supplied without tax. Now we are treating it as deemed supply before you supply. Now it doesn't mean that the next time when I supply, I am not required to pay tax. Again, when you actually supply, you are required to pay tax. When you have unaccounted stock, someone else would have given you that stock without bill. We are not in a position to cash that person. We are not in a position to cash that person. We will treat it as deemed supply for you. Isn't it? If I have some goods and goods without my accounts and records, someone should have given me those goods without invoice. So it is supply by him to me. But as the department is not willing to go to the previous step, they are telling that it is deemed supply for you. When I actually sell them again, I have to pay tax. Right, so the implication of not having proper accounts and records is huge. And what is meant by documents? Again, if you see the infographics, it is very clear. It covers everything, whether it is a written document or a printed document or an electronic document, everything is covered. Written. There are days that every document was written. If you see your old documents, now it is printed. Even electronic document, digital signature certificate, even that is not required. You can share it in soft copy. That is also acceptable. Right. Now you are talking about the list of accounts and records that are maintained by registered person. What are the list of accounts and records that are to be maintained by every registered person? So if you see the list of accounts and records, they are quite simple. Basic accounts and records. Details of inward supply, outward supply, that is your purchase invoice, self invoice, your sale invoice, goods imported, exported separately you have to keep, and whatever is tax you are paying under RCM, for that separately you have to have invoice. If the supplier is registered, his tax invoice. If he is not registered, you have to create a self invoice that you have to maintain. Now for taxes, details of tax payable, what is your output tax, tax collected pay from the customer, and what is your input tax credit. But when you talk about these tax details, they are not required to be maintained by composition taxable person. Composition taxable person will not maintain the tax records for a simple reason. He is not having any input tax credit, and whatever he is going to pay on his outward supply, directly he will pay 1%, 5% or 6% as the case may be. Inventory details. So inventory details, you are talking about stock of goods received and supplied containing. Inventory details, how you do maintain generally? Opening balance, receipt, goods supplied, or goods lost, stolen, destroyed, written off, disposed by way of gifts of free samples or waste and scrap. Isn't it? So your outward supply is normally sales, but it might have lost, stolen, destroyed, written off, or given by way of gifts of free samples. The extra point, if you are a manufacturer, that will be waste and scrap, sale of waste and scrap. And finally the closing balance. You have to maintain that separately for your raw materials as well as for finished goods. Finished goods might not have purchases, but it will have the raw materials converted to finished goods as quantity manufactured. Right. Now, when you talk about this, again, a relaxation. It is not required to be maintained by composition taxable person. See, a composition taxable person need not maintain. These are the advantages for a composition taxable person. Stock details is not required. Tax details is not an advantage basically because he will not have any input tax credit. So this is one of the advantage where composition scheme will be beneficial because he is not required to maintain any stock details. Now, when you talk about other details, this is all basically about your goods, services, details. Other details, what you have to maintain? Suppliers list from where you have received the taxable supplies, and person to whom you have given the goods and services wherever required. See, this point wherever is required is given because when you see your document chapter, there is a relaxation. What relaxation? One is supplier details, one is customer details. Basically, customer details, there is a relaxation. Because if your customer is unregistered and if the total value including tax is up to 50,000 and he is not demanding his name and address, you need not write his name and address. So wherever required you will find, because this was discussed in your document chapter. And important area, the list of places wherever the goods are being stored including during transit. See, at times what happens is the goods are in transportation and the customer is not taking the goods are there in the transporter's place for say 10 days before you find the next customer in that city. So including that details you should have, right? If any taxable goods are found to be stored at any other place, then it is deemed supply. See, two things are there. One, if there are goods without proper document, that is deemed supply. Goods without proper document, that is deemed supply. Or if you have goods in an account in a place which is not disclosed. In a place which is not disclosed. It is deemed supply. It is deemed supply. Are you getting these points? So you're talking about hidden deemed supplies are there at many places. If you see hidden deemed supplies, first thing you found it at your docket. First, not schedule one and hidden deemed supplies. Job work, you had hidden deemed supply. Sale on approval basis, you had hidden deemed supply. Now when you're talking about your accounts and records, you have another hidden deemed supplies. What? Goods without documents, goods at unaccounted or undeclared place of business. So third hidden deemed supply. One more hidden deemed supply you will find when you're talking about summary assessment. Summary assessment. Right? These are all cases of hidden deemed supplies. And for advances, you are required to maintain details of advances, that is receipt voucher, refund voucher. And when you're talking about other documents, you have to maintain the list of all the documents. Whether it is invoice, credit note, debit note, bill of supply, delivery challan, receipt payment, refund voucher, documents register. Why document? Normally all the softwares will have document register. Which invoice number to which invoice number you have issued during this month. Which invoice was cancelled. Isn't it? So that document summary you will have. Basically, if you see, all the details can be there in your software. All the details. Just imagine any software. Take a very basic software, Tally. All these details can be very much incorporated within your Tally. Everything, right from supply details to tax payment details to inventory details to details of your supplier, customer and place of business. You will have separate tallies. At times you will have tally for your head office, tally for branch office, and you will consolidate. You will have advances details. Every details will be there in your software. You can easily maintain that in your software that you are using. Now, this is the normal list by every registered person. Now you are talking about certain special list maintained by specified registered person, which means it is an extra. These specified persons should maintain the records that we have discussed above. In addition to them, they are required to maintain certain other records. What are they? If you are talking about manufacture of goods, they are required to maintain monthly production accounts. Gone are the days where they have to maintain daily production accounts. Now it is monthly production accounts. So you will have the quantitative details of the raw materials used in manufacture and the quantitative details. So manufactured, that is final product. Both the details of raw materials and the details of final product, including waste and scrap. Put in a simple language, monthly production records. In exercise you have daily production records. Here you are having monthly production records. This is for a manufacturer. What about a service provider? Service provider will have the quantity details of the goods, not the services, and services used for providing the services and the service supply. To put in a very simple term, details of outward supply, details of inward supply. Outward supply is of service, inward supply is of service as well as goods. For service no quantity, for goods including quantity. Agent. If at all you happen to be an agent, very basic details. If you are an agent, whether normal agent or special agent, you should have an authorization to act as an agent for the principal. Next, you should have the details of all the goods received or supplied on behalf of principal. Details of account furnished to every principal. You will be giving the details, right? This was the quantity that I have sold on your behalf, purchased on your behalf. And tax paid on the receipts or supply. This will be very relevant for your special agent. See, I keep telling this again and again. Your books and GST will never match. So a special agent in GST is required to file GST returns treating it as purchases and sales. But in books of accounts, he will show it still as commission. He has to match it. Your GST records will not match with your accounting records. Your GST records will not match with your. Basically, they do know that in this particular case, GST records and accounting record will not match. Therefore, they are asking to keep a track of that. And finally, you are talking about a works contractor, basically builder. So when you are talking about a works contractor, for each of the work that they are doing, each of the work, they have to maintain separate works contract agreement. So if I am having 10 works contract in my hand, for all the 10 works contract, I need to keep all these details. The name and address of the persons on whose behalf I am doing this work. So if I am works contractor, I have to tell for which promoter or builder I am doing this particular work. Description, value and quantity of the goods received and used. Supposing I am a contractor for this particular building, I would have received cement, sand, steel, etc. Isn't it? A lot of goods and services I will receive and I will be using it for execution of my works contract. So quantitative details I need to give, payment received for each work contract, and name and address of each supplier from whom I have received the goods and services. So I need to maintain all these details, basically receipt details as well as utilization details. Why? You will find that many times in a works contract, the details that will be pending stock. There will be pending stock which will be there for each contract. Right? They have to keep track of that pending stock as well. So these are the details which are required to be maintained by special details, additional details maintained by these four categories: manufacturer, service provider, agent and works contractor. Now, the first part was details to be maintained by a registered person. First was every registered person, then specified registered person. Now you are talking about details to be maintained by unregistered person. Unregistered person. Basically, we are talking about warehouse keeper and transporter. In addition to that, we'll be also talking about a special person called as custodian. Warehouse keeper and transporter are the basic persons that we are talking about. So when you talk about warehouse keeper and transporter, they have, though they may be unregistered, they are required to maintain the records. Just think of transporter to understand the situation. Transporter is actually supply of services. Even warehousing is also supply of services. But they do have the details of all the goods received, transported, isn't it? The moment the truck is being inspected, the first person who will be in panic is the transporter, isn't it? So they are required to maintain additional details even though they are unregistered. These are not additional records, these are the records to be maintained even by them, even if they are unregistered. Details of consignor, consignee. When you are talking about warehouse keeper, details of consignor, consignee and the details of goods, which means the period till which the goods were there in warehouse, right from the starting point when they were received, dispatched, disposed, etc. So till the time they were dispatched by the consignor, they were moving towards the warehouse, they were received in warehouse, they are disposed from warehouse. And they have to be kept item wise and owner wise, so that physical verification or inspection is easily there. If you remember, we have discussed this in eco indirectly. Supposing, assume that there is a warehouse which is having big warehouse. If you go to outskirts of any city, you will find big warehouses. There will be a lot of goods stored there of multiple persons, right? So they have to tell that who's the consignor and who's the consignee. Who's the owner of the goods? Consignor. Consignee if he is identified. Basically the owner, right? And to whom it is being dispatched at later point of time. That is at a later point of time. Consignor should be must, consignee if it is dispatched at a later point of time. They should have all the goods owner wise, item wise. If you go at any warehouse or if you even Google and download the picture of any warehouse, you will easily find a bifurcation. B1, B2, B3, A1, A2, A3. There in A1 only one particular owner's goods will be there. Owner wise and item wise. Even there item wise will be there. So if an officer is coming for inspection of a particular company who has said that they have stored the goods in this particular warehouse, they should easily go there and find that particular place. Rather, the owner of the goods would have added this warehouse as his additional place of business. As his additional place of business. So that you need to understand. Now, transportable details, what at every branch transporter is required to maintain the goods being transported, the goods which are delivered. At times the goods will be in transit, which means supposing there is a breakdown of the vehicle, or supposing the consignee is not coming to pick up the goods, or supposing the consignee has cancelled the order, the consignee is telling that keep the goods for next 10-15 days, I will find the next customer. So all the details, the goods which are transported, delivered or even in transit, that is to be maintained. GST along with the GST number of the consignor or consignee. See, for them, their recipient or their customer is either the consignee or the consignee. Either the consignee or the, both for warehouse keeper and transporter. Their customer, their client is either the consignee or the consignee. Right. Say for example, I have sold the goods to X Limited. X Limited is paying for the freight. So for the transporter, who's the recipient? X Limited. I am not the recipient. And X Limited has directly taken the goods to warehouse where the goods are kept, where the goods are stored. For the warehouse keeper, who's the client? I am not the client. Who's the client? X Limited. Right. Recipient means the person who's liable to pay consideration. The person who's liable to pay consideration is X Limited, both to the transporter as well as to the warehouse keeper. Now, you are talking about a third special person where you are talking about custodian. It is mentioned in the separate section, separate provision, rule 56. It tells that any person who's having custody of the goods in capacity of a carrier or clearing or forwarding agent to deliver or dispatch the goods to recipient on behalf of any registered person. It's just carrying and forwarding agent, not the transporter. Carrying and forwarding agent has to maintain true and correct records of the goods that are handled by him on behalf of registered person, and whenever demanded by the proper officer has to give the details. Right, CNF agents. We call them as CNF agents. They have to just give the details. Just give the details when they have to maintain the details. Whatever goods have been transported or delivered on behalf of registered person, and whenever proper officer is asking such details, they need to be given to the proper officer. If you see, the first two categories are the main categories. For the first two categories, they have a concept called as centralized enrollment for transporter and warehouse keeper. Centralized enrollment. What is this concept of centralized enrollment? Centralized enrollment means though they are not registered, they'll be having some contact with GST portal. So when you're talking about unregistered transporter or warehouse keeper, mandatorily they should go for centralized enrollment. Centralized enrollment. They don't have an option. They don't have an option. They have to go for mandatory. It's not registration, enrollment. Right. So above persons, that is unregistered transporter, unregistered warehouse keeper, shall submit the details of their business in a particular form called as ENR 1. They will be given unique enrollment number, and they need not take that in every state. Pan India they can take in one state. Pan India they can take in one. That is the reason it is called as centralized. This is the reason we call it as. See, if it is registration, you have to take in each state. It is not registration, it is enrollment. You can take in one state and it is equally good for throughout India. Now, they will update the details, or they are required to furnish the details when are called for on the common portal. Right. Basically, I'll make it very simple. E-way bill authorization you give to transporter while filing Part A. How the transporter is able to fill Part B even though he is not having GST number? Because they are having enrollment number. They are having enrollment number. You are getting that particular concept? Now, there is one more concept called as centralized enrollment, which is only for a transporter. This centralized enrollment is only for a transporter, but this time it is only for a registered transporter. Registered? This facility is not available for warehouse keeper. You will understand, for e-way bill purposes. It is only for transporter. It is only for a transporter, not for a warehouse keeper. Which transporter? Registered transporter. Mandatory or optional? Optional. Why, sir? See, for a registered transporter, they will be generating e-way bill with the help of their GST number. So in each, they will be registered in multiple states. They will be registered in multiple states, and they have to generate e-way bill with multiple GST number respective states they have to do. Supposing they want to make it simple and they want to generate e-way bill through a common place. The control of e-way bill should be at a common place. It should not be at each state. Then what they'll do? What they'll do? They'll go for centralized enrollment number. So if you look at this particular point, the registered transporter may opt for unique enrollment number even though it's registered with GST in multiple states. When I tell unique, enrollment, centralized enrollment number, it will be Pan India one. It will be Pan India one. That form is ENR02 because it is now optional. It is not mandatory, it is now optional. Once it is validated, you can generate e-waybill only using unique centralized enrollment number. You cannot generate e-waybill using GST number. So once you are telling that no, I want to manage my e-waybills centrally. So forget about your GST because GST number will be in multiple states. I want to manage my e-waybills centrally, though you are registered. Then you can go for optional centralized enrollment number. You go for that and you manage your e-waybill only using that particular unique centralized enrollment number. Then you cannot use your GST number for managing e-waybills. So that you need to understand. Now the last part, mode of maintenance. A small part, a very mode of maintenance, how you are required to maintain the records. We are done with what records to maintain, who has to maintain, till what time you have to maintain. Now we are talking about the last part, mode of maintenance. Right, records you can maintain it either manually or electronically. Both are allowed, manual as well as electronic records are allowed. But there are few conditions when you maintain manually, few conditions when you maintain electronically. So when you talk about your manual maintenance, you should not have erased something or overwritten something, or there should not be incorrect entries. Right, and if at all they have been scored out, it should be under attestation. Supposing I have written 10 lakh rupees, now I am converting to 1 lakh rupees. There should be attestation of the person who has converted that 10 lakh into 1 lakh. So that you have to take care when it is a manual record. Each volume of the books of account should be serial numbered. If you have told you have seen vouching at your office and if you have seen some manual books, there will be proper numbering. Of each books of account, there will be proper numbering. And on demand, you have to produce it to officer. That is a very common point. Whenever they demand, you have to give it to them. But when you talk about electronic records, then there are certain points which are very, very important. E-record shall be authenticated by way of digital signature. If at all they are electronic records, it should be surely authenticated by way of digital signature. Log of every edited or deleted entry should be maintained. This is said for companies time and again, isn't it? Now it is being mandated. They are keeping postponing, but it will come one day for sure that you have to keep a log. That whatever entries you are changing nowadays, what we do at when we finalize the accounts, right? The client does change a lot of entries. You have to keep a log. What all changes happens, you have to keep a log, right? If you see big companies, they keep SAP, where the access to change is very, very restricted or controlled, and whenever they change, there is a log. There is a log. Whatever editing or deleting you are doing, there is a log. And you are required to maintain proper backup, because you cannot tell the story that I maintain the records in electronic format, blah blah blah, and finally tell that no, I don't have any records. That records that I maintain in electronic format, I don't have it. So they are very specific. You maintain electronic records, you keep proper backup. And the person who is maintaining electronic records, whenever he is asked to present hard copy, he should give it. Just because you are telling that I will go by Go Green policy, office telling that I don't want electronic records, you bring hard copy. You have to bring it under attestation, and he will tell that you have to attest it. Whenever you are taking the printout of hard copy, you have to attest it. So you are required to bring it. Or he may tell that, okay, you give me Excel formats, you give me PDF formats. Isn't it? From your software you extract it to Excel or PDF, you give me that format. You are required to give. And when you have electronic records, officer, when at the time of say search and scrutiny, when they are coming to your office, you have to share with them all the passwords, all the codes. Different SAP will have different codes. At one particular command, it will act in a different way. So they have to share all the passwords, all the codes and other information which is required for officer to check the data. Right. Why these points are given? Just because you go by electronic record, you cannot tell the story that the data is lost. Take backup. You cannot tell the story that I will not give hard copy. You have to give if they demand. You have to give if they demand. You cannot keep changing things. If you are changing, make sure that there is a log. Make sure that there is a log of every editing or deletion that you are doing. And more importantly, When they come to a place and they are telling that, okay, we ourselves will check your records. We don't trust you, you extracting in Excel and PDF, giving us the data because you might manipulate it. We want to check the data. Our officer will check it. As you go in your office and check the data, you give them the access. All the passwords, every software will have unique codes, isn't it? Tally is having lot of codes, shortcuts, and this app will have different shortcuts. You give all the codes, there will be actually a code book. Every software will have a code book. What functions, basic functions it performs. If you are going for additional functions, it might not be there in the code book. So basic functions data will be there. All those details should be provided to the officer when they are demanding the same. These circulars are not so important, but when you talk about these circulars, basically what are they telling us? The first point, they are telling for tea, coffee and rubber, that normally when you talk about this additional place of business, you are required to add this additional place of business. You can sell through additional place of business. You have to add that additional place of business. So that is required. Supposing when you talk about this specifically is for tea, coffee, rubber. It's not for everything. Tea, coffee and rubber. Right. Auction happens in case of this plantation crops. Tea, coffee and rubber. So auction takes place in a separate place. You have to add that place as additional place of business. But records of that place of business, you can keep it in your principal place of business. That is the relaxation that they give. That is the relaxation that they are giving to this tea, coffee and rubber plantation crops. Now second, there was a scenario where transporter was also storing the goods of transport. Basically, I am a transporter, but I am also storing the goods that of my customer. So transporter will not have the goods for more than say 10-15 days. Now, at times few transporters are having the goods of certain people for more than 3-4 months. So now I am acting both as transporter as well as warehouse keeper. So I have to maintain the details that is required for a transporter. Also I need to maintain the details that is required for warehouse keeper. I am required to keep both the details. I am required to keep both the details because I am acting as transporter come warehouse keeper. So that is other clarification that is given here. Let us start with the concept of your audit and assessment. When you talk about your audit, you have only two types of audit. One is general audit, section 65. One is special audit, section 66, by taking the help of CA, CWA. When you talk about assessment, you have self-assessment, which is followed by scrutiny of returns. Then you have provisional assessment converted to final assessment. Then you have best judgment assessment for registered person, unregistered person. Finally, you have summary assessment. When you talk about the regular assessment concept, this regular assessment is nothing but show cause notice and demand order. So that is discussed in your demand and recovery chapter. Now what is meant by audit and what is meant by assessment? I'll just make this very simple. Audit is all about EVA. EVA. So you're talking about examination of all the records. Then you are talking about verification. Then you are talking about assessment. EVA. EVA. Examination of what? All the records, returns, other documents which are maintained. This is a continuation of this, which are maintained by the registered person. So it is examination of all records. Then verification of what? Verification of numbers. Verification of numbers. Your turnover, your tax paid, your refund claim, your ITC claim, verification of certain numbers. And assessment of what? Assessment of your compliance. Your compliance with various provisions. So it is nothing but EVA. EVA. When you talk about assessment, assessment is very simple. Assessment does only with numbers. Actually, the scope of audit is more. Scope of audit is more than assessment. Why? When you talk about assessment, it is only determination of tax liability, finding out how much you are required to pay. That's it. That is the scope of assessment. It includes different types of assessment like self-assessment, reassessment, provisional assessment, summary assessment, best judgment assessment. All the different types of assessment that we are going to discuss, it includes all these categories. Now first we'll see your audit. Audit can be categorized into two: general audit, otherwise called as departmental audit under section 65, special audit under section 66. Now when general audit will start? General audit is started by commissioner or officer authorized by him, either by way of a general order or a special order, which can be taken place at the premises of registered person or premises of officer. So at general audit, officer may tell that I'll come to your premises and do general audit, or he may tell that you bring the records here, I'll complete the general audit here. And this can be for a financial year or part thereof, or multiple of financial years. So it can be for 1 year, 4 years, 3.5 years, 2 years, 9 months, 2 years, 3 months. Alright, so that is the way general audit is taken. Now when you talk about general audit, special audit, there was a point. Normally, general audit is by way of general order, which means randomly they'll select. Randomly they'll select. But it can also be way of special order. They'll tell that no. I want to do audit of this particular. Random selection is general order. Specific selection is special order. So it is possible by way of both. Now this is a starting point of your general audit. Right? Who's the auditee? Now when you talk about special audit, what is happening? Very simple understanding. Officer is doing some work. He is held up in between. He don't know how to proceed. He understands that the case is complex. He is going and crying in the front of commissioner, telling that please help me out. And commissioner is referring whom? To CA or CWA. So assistant commissioner with the prior permission of commissioner. So he'll go and tell commissioner that I am finding it difficult. He is directing a registered person to get his books audited under special audit. Why? He is already doing some sort of scrutiny, inquiry, investigation or any other proceedings. He is in between. He is in between scrutiny or inquiry or investigation or any other proceedings. But because of the nature of the case or complexity of the case and in the interest of the revenue, he is going for special audit because he knows either value is not declared, which means output tax is less paid, or ITC is taken more. He has seen the accounts, he is having a feeling whether value is declared less or ITC is claimed more. He is having a feeling. To protect the interest of the revenue means government is losing some revenue because value is not declared, less declared, or ITC is claimed more. But he is not able to go ahead because of the complexity of the case. Therefore, what will happen? Special audit will be initiated, and special audit can be initiated even if general audit is done. So assessee cannot tell that no, department already came for general audit, why you are asking for? So that argument cannot be made by the assessee. Now who will do the general audit? The commissioner or the authorized officer. But who will conduct the special audit? It is CA/CWA nominated by the commissioner. Now what about the fees in case of general audit? Department officer are paid only to do the work. So there is no fees for general audit. But for special audit, CA/CWA will get the fees which is determined and paid by the commissioner and which is final. Right. Now what is the time limit or the procedure for while doing general audit? First, understand that when you talk about this general audit, advance 15 days notice will be given. Minimum 15 days notice will be given that we are going to come for general audit, or you have to bring the details at our place. Minimum 15 days advance notice will be given to the registered person. And one important point, whether it is general audit or special audit, you will find that it is against only a registered person. Now coming back to general audit timeline, 15 days notice first will be given. Then audit needs to be completed within 3 months plus 6 months extension by commissioner. From which time? From the date of when the records were fully made available or when the actual audit started, whichever is later. This time limit of completing the general audit, which is 3 months plus 6 months, will start from where? See, they might have given you 15 days notice and you have kept all the records ready. but they came after 1.5 months. It is highly possible they were busy in doing other audits. So it is from the dates when the books are fully made available or when the audit actually started, whichever is later. It may happen that they started the audit, but you have not given the full details. So only when you give full details it will start, whichever is later. Whichever is later. Now, when you talk about special audit which is done by a special person, again roughly you will find that basic time limit is the same. 3 months here it is 90 days plus 90 days extension by commissioner, either at the request by the auditor or commissioner himself suo motu may give, seeing the circumstances of the case. Right, so there it is 3 months plus 6 months, here it is 90 days plus 90 days. Now what will be the audit report? In case of general audit, the audit report will list out the discrepancies and the observations and inform it to the registered person for his reply. Proper officer will finalize the findings after the reply is given. It will be a kind of friendly audit. These are the observations and these are our comments. Reply will be given by the company, will be by the registered person, and then final findings will be shared. This has to be done within 30 days of the completion of audit, and final report needs to be shared with even the auditee, that is the registered person. That is the registered person. Right. Now here what will happen? Why this special audit started? Special audit started because AC was having difficulty in moving with that scrutiny or investigation or inquiry or any other proceedings. So this audit report, which is signed by CACWA, will be given to the assistant commissioner so that he can continue his pending work, scrutiny or investigation or inquiry or any other proceedings. And the copy of that will also be given to the auditee. Now, what is the audit outcome? In general audit, understand that audit does not create any liability. General audit, you are informed, you are given the final report. If you want to pay and closes that. Otherwise, department will give notice under section 73, 74 and proceed. What is the audit outcome of your special audit? For what special audit was starting? To make sure that ACDC carries on with the pending work. So he started the work, inquiry, scrutiny, investigation or any other proceedings. He was finding it difficult. Therefore, he went to the commissioner and asked him to nominate a CACWA who can do special audit for him. That report will be shared with assistant commissioner, also the registered person. Now, what that assistant commissioner will do? Will complete the pending work. And one thing they are clarifying, that before anything is used against the assessee, there should be principle of natural justice. Fair enough. There should be principle of natural justice. That is everything about your general audit and your special audit. Section 65, section 66. Now friends, we are talking about your assessment. What we have done with your assessment is, we have made a comparison analysis. One of self-assessment followed by scrutiny of returns, and provisional assessment followed by final assessment. Provisional assessment followed by final assessment. So first we will see that there are other types of assessment also. Best judgment assessment and summary assessment. That also will take care. Now we are talking about self-assessment followed by scrutiny of returns, section 59, read along with section 61. Now self-assessment is a basic concept of any tax law that you have. Whatever you assess will be believed by the officer. So every registered person is required to self-assess the tax and file their returns. That it's all about self-assessment. You are required to do your own assessment. You are required to do your whatever is your outward supplies, input tax credit, everything you truly declare it. Now, it is highly possible that officer is randomly selecting the returns for scrutiny. Correct? If at all, supposing out of 10,000 cases, officer selected only say 100 cases for scrutiny. Right? Out of 100 cases, he has found in 90 cases everything is fine. In 10 cases, he is finding some discrepancy. What he'll do? He'll inform the discrepancy to the assessee. What assessee will do? Assessee will either accept the discrepancy and correct them, or give explanations within 30 days plus extension. He has got two options. If he finds that okay, whatever points officer is selling, he'll accept it and correct them, pay extra taxes with interest and close the matter. Or he will give explanation within 30 days plus extension. Now, what officer will do? If the explanation is acceptable, officer will drop the proceedings. Drop the proceedings. If discrepancies are accepted and corrected, which means assessee has accepted it, again drop the proceedings. When the proceedings will not be dropped, if explanation is not at all offered or offered but not acceptable, discrepancies are accepted but they are not corrected in the following month, isn't it? So either you don't reply, or your reply is not satisfactory, or you accept that is a mistake but you don't rectify. Then what will happen? Proper officer either may go for general audit section 65, or may start with special audit section 66, or may go for inspection search seizure section 67, or may give show cause notice section 73, 74. See, first three methods are indirect ways. After doing general audit, special audit or inspection search seizure, it will be followed by section 73, 74 notice. Either go via 65, 66, 67, then followed by 73, 74, or directly go for 73, 74. If you have all the details on hand, directly go for 73, 74. If you want to collect the data, go for 65, 66, 67, then 73, 74. Depends on whether data is available or data is not available. Now, this is all about self-assessment and scrutiny of returns. Now you are talking about provisional assessment and final assessment section 60. Now for the first time you will find that you are talking about a taxable person. You are talking about in general audit, special audit, it was registered person. In self-assessment, scrutiny of return, it was registered person. Now you are talking about taxable person. So taxable person is not able to find out his value or rate. He is having doubts with value or rate. So he is requesting for provisional assessment. Either he is having some doubt with his value or he is having some doubt with his rate. So he is requesting for provisional assessment. So when he is requesting for provisional assessment, proper officer has to pass provisional assessment order within 90 days of the request. Which means proper officer will tell what is the rate of tax or what is the assessed value which you have to take as of now, roughly. This is provisional assessment. That has to be done within 90 days. See, assuming that you have doubts with respect to rate, say 5% or 12%. Officer may tell provisional assessment at 5%, which is at lower side. If provisional assessment is on lower side, then you have to give a bond along with surety or security. Security value will not be more than 25% of the bond value. Supposing the difference between 5% and 12% is say coming to 70,000. 70,000. Bond value will be of 70,000. But security will be not more than 17,500. Up to 25% of the bond value. Bond value will be of entire risk. But security will be only of up to 25% of the bond value. Bond value is of entire risk. What is the risk that government is taking? Officer may have asked to pay 1,20,000, but now he is telling that as of now pay 50,000. The risk is of 70,000. So bond value is of 70,000, but security will be not more than 25% of 70,000, which is 17,500. Right. But it may happen that officer is telling that we will go for higher side. That as of now you pay 1,20,000. When it is on higher side, there is no bond, there is no security. So only when it is on lower side, only when the provision assessment is on lower side, there will be bond. Here there will be no bond. Only when there is a bond, it will be along with surety or security. If there is no bond, there is no question of any surety or security. Now that is the second stage. Third stage, final assessment will be done. So officer is required to pass final assessment order within 6 months. Second 6 months 6 months extension can be given by joint commissioner, additional commissioner. Another 4-year extension can be given by commissioner, which means office is having maximum time of 6 plus 6 plus 4 years. 5 years total. 6 months, 4 years. Total 5 years from the date of provisional assessment order. From the date of provisional assessment order. Means totally having the time limit of 6 months plus 6 months plus 4 years. 5 years from the date of provisional assessment order. Now, when final assessment is there, you have to find out whether there is any payable or refund. Assuming provisional assessment as 5%, final assessment is also at 5%. Nothing will happen. You already paid it. Assuming provisional assessment is at 12%, final assessment is also at 12%. Nothing will happen. In the first case, provisional assessment at 5%, final assessment at 5%, you would have given a bond along with security that will be returned to you. In the second case, provisional assessment at 12%, final assessment at 12%, nothing will happen. You never gave any bond. But when issue will be there? Supposing provisional assessment was at 5%, final assessment is at 12%. Then there is a tax payable you have to pay along with interest. From where? Right from the due date of payment till the actual date of payment. Which means the provisional assessment is done for October 2022 and final assessment is done for October 2022 month. Provisional assessment is done in January 23. Final assessment is done in say Jan 2025. But for which month it was done? October 2022. So interest will start from due date of payment, which is in our example 20th November 2022 to actual date of payment, which will be shortly after January 2025, because I came to know that I have to pay only in Jan 2025. Though there is no mistake of mine, but I have to pay interest. So I have to pay the differential 70,000. Assuming 12% is 1,20,000, 5% is 50,000. I already paid 50,000. Now I have to pay differential 70,000 plus 70,000 multiplied by interest rate. When you pay the interest rate is 18% per annum. From which date? From the due date of payment till the actual date of payment. Now, reverse scenario can also happen. Provisional assessment was at 12%, final assessment is at 5%. You can have a reverse scenario where provisional assessment is at 12%, final assessment is at 5%. What will happen in that reverse scenario? It is refundable. You have paid 1,20,000, but you have to pay finally only 50,000. So that refund will be given. But wait, refund will be given along with interest from which date? You have to file a refund application. After the expiry of 60 days from the date of receipt of refund application. Let us keep the same dates. This is for October 2022. Final assessment you get on January 2025. Then you have to file a refund application somewhere in March 2025 you file. Even then interest will not be there. After you file in March 2025, 60 days after March 2025 till the actual date of refund. If at all you file refund application in March 2025 and in April you get the refund, you will get only 70,000 rupees, no interest. And one more important aspect, when you get interest, it is not at 18%, it is at 6% per annum. See both. When you pay, rate of interest is higher. When you get, rate of interest is lower. When you pay, period is higher. It will start from due date of payment, which means if it is October 2022 matter, so it will start from 21st of November. It will start from, to be very specific, next day. 21st of November 2022 till you actually pay. But when you get the refund, interest will not surely come. It will come after same matter, October 2022, final assessment Jan 2025. You are giving refund application March 2025. After 60 days of you giving the refund application. So it will start after 60 days from the date you are giving refund application. If you get the refund within that 60 days, no interest. No interest. Still you get the refund amount. So end time is not a problem. Right. So after final assessment is done, if at all you have paid everything, if at all bond was executed within 7 days, after if you have paid everything, see, bond will be there only in lower side. If provisional assessment was on lower side, that is the final assessment. Final assessment which may result in payment or which may not result in payment. If it results in payment, you have to pay with interest. If it is provisional assessment 5%, final assessment 5%, no payment. Provisional assessment 5%, final assessment 12%, you have to pay tax with interest. So what you have to do, you have to make an application for release of security, and after you have paid the tax, if any, tax with interest if any, they will release your bond and security. They will cancel the bond and release the security. That is everything about your provisional assessment and final assessment. You can expect interest questions from this area. Pardon? They are? No, that is in a very special scenario. Very special scenario. If you see refund chapter, that's 9% is in a very special scenario. Normal interest rate is always 6%. 9% interest rate in refund chapter and GST is there, but in a very special scenario, not in this particular case. Are you clear with this understanding? So interest question can be easily asked from this particular area. Now friends, we are talking about the last set of assessments where you are focusing on your best judgment assessment against registered person, best judgment assessment against unregistered person, best judgment assessment against registered person, best judgment assessment against unregistered person. And both of these best judgment assessment against whether registered person section 62 or against unregistered person section 63 has got its roots in registration chapter. They have got its roots in registration chapter. Now if you look at this particular point, when this best judgment assessment against registered person will start? Registered person is not filing his returns. He is not filing his returns. He'll get a notice from the proper officer, notice under section 46 to file his returns within 15 days. Within 15 days. And thereafter, even after getting the notice, he is not filing his returns. You have to follow the numbers. Even after getting the notice, he is not filing the returns. Then, officer will give best judgment assessment order under section 62. So, you are talking about this aspect discussed in your written filing chapter. Written filing chapter. The next aspect you will find that something is discussed in registration chapter. So this we have already discussed in your written filing chapter, that if you have not filing your returns, you may get a notice under section 46 against which you have to file all your pending returns within 15 days. If you don't file, then officer can start best judgment, pass best judgment assessment order under section 62, and the time, that's a time limit, 5 years from the due date of annual return. That's the time limit. After that, best judgment assessment order cannot be passed against registered person. So 5 years from the due date of filing of annual return is the maximum time limit till which you can go for best judgment assessment under section 62. Now, this is actually all about your best judgment assessment under section 62. Now there is a special point which is given here. Now what is this special point? Special point tells that best judgment assessment order has come. That's the second opportunity that is given to you. You have received the best judgment assessment order, but after getting the best judgment assessment order, you are filing all your returns within 30 days of best judgment assessment order along with interest and late fees. Best judgment assessment order is withdrawn, deemed to be withdrawn, automatic withdrawal. Automatic withdrawal. Now if you see this fifth point, now you are filing your returns. You are not filing your returns, you got a notice, Within 15 days, again you did not file return, you got best judgment assessment order. Now that you get best judgment assessment order, you are afraid seeing the numbers because best judgment assessment numbers will be huge. They are claiming that your turnover is 500 crores. You are telling that it's not even 5 crores. Right? So what do you do? Now, afraid of best judgment assessment order, you are filing all your pending returns within 30 days of best judgment assessment order, along with paying tax, along with interest and late fees. Automatic withdrawal of best judgment assessment order. Automatic withdrawal. Now, this particular steps, it's not important for exam. CBIC has given the steps that is to be followed by officer. So what they are telling the officer, you give reminder SMS 3 days before the due date to assessee, telling that please file your returns, please file your returns. If they are not filing their returns, send them mail or SMS after due date. First something before the due date, then after the due date. Then you give notice under section 46 5 days after due date. Normally it doesn't happen. Notice will get somewhere after 6 months, 1 year, 2 years and all. But this is a procedure that CBIS is asking his officer to follow. You give a notice immediately after 5 days after due date is over, asking them to file the returns within 50 days. If they don't file, then you pass best judgment assessment order. And after best judgment assessment order, if they file all their returns, automatically it will be withdrawn. But if they don't do, see, you have to even evaluate a scenario that even after best judgment assessment order, even after 30 days after best judgment assessment order, nothing is being done. Then you please transfer the case to recovery cell. Forceful recovery will happen. Recovery cell. They will start attaching your properties. They will start attaching your properties. Also simultaneously, you please start initiating cancellation proceedings. But not in all the cases. This will happen only if you have not filed your returns for continuous period of 6 months or compensation scheme dealer 3 quarters. And the last and the least, but not the least point, they tell that when we are going to see recovery chapter, we can also start provisional attachment. You can also, which means when you are going through the process of best judgment, till it is not over, you can even attach provision. What is the beauty of provisional attachment? Government is not claiming that it is their property, but it is telling that you cannot deal with it. You cannot deal with your assets. Provisional attachment is also possible under section 83. That is also possible, but provisional attachment is a very stringent action. So even CBIS is very cautious with the wordings. Only in deserving cases go for provisional attachment, not in all the cases. If assessee is not going to run away and all, these are provisional attachments are for persons where government or officer feels that the assessee will run away. Selling of all the assets, he will run away. Only in those deserving cases go for provisional attachment. Now, this is all about best judgment assessment against registered person, section 62, against unregistered person, section 63. Now, what is actually happening? You are talking about an unregistered person who is liable for registration but he is not taking registration. Who is liable for registration but is not taking registration. Case 1. Case 2. Who was registered but proper officer has cancelled the GST number suo moto. See, two extreme cases. One, a case where you are liable but you are not registered. Second, you are registered but proper officer has cancelled your GST number. Two extreme cases. Right? Proper officer is telling that though you have not taken GST number, but there is some recovery, there is some payment, or you are registered, I am cancelling your number. That doesn't mean that I cannot recover. You have some pending dues. So proper officer is sending notice under section 63. Again, he can pass his best judgment or assessment order against section 63, same time limit. 5 years from the due date of annual return. 5 years from the due date of annual return. Right. Now, here, one very important point to notice is there is no concept of withdrawal. There at least there was a second inning, second chance. Here there is no second chance. Here there is no second chance. See, indirectly you will easily digest the fact why there is no second chance. When the proceedings for cancellation was happening, already first chance was given. Already first chance was given. When suo moto registration was given, You are liable for registration, but you are not registered. So motor registration would have been given. Already first chance was given. So here there is no second opportunity. No second opportunity. There is no question of withdrawal of best judgment assessment order. Which means only what you can do is go for appeals. Go for appeals. Now the last concept of assessment where you are talking about your summary assessment, and ICAI has asked the difference between best judgment assessment and summary assessment a few times, where you are talking about section 64 summary assessment. Summary assessment. Now what is happening? Follow the numbers. Proper officer is having the evidence that taxable person is having some liability to pay. See, if you see in many, if you see compare, they have used registered person and taxable person in different persons. Say for example, general audit, special audit, only registered person. Self-assessment followed by scrutiny of returns, only registered person. But provisional assessment, taxable person. Taxable person. Best judgment, one is against registered person, one is against unregistered person. And we are talking about summary assessment against taxable person. Against taxable person. So proper officer is having evidence against taxable person that he is having some liability to pay. And also proper officer is having sufficient grounds that delay in passing the order will adversely impact the revenue. You can see the infographics. He will run away. He will run away. If there is some delay, this person will run away. This is a very soft language that they've used. That sufficient grounds to believe that delay in passing the order will adversely affect the revenue. Simple meaning, that person will run away. So that being the case, what officer is doing? He is taking the permission of additional commissioner and or joint commissioner. See, this is a very serious step that he is going to take. So he is taking the permission of additional commissioner or joint commissioner, then he is passing summary assessment order. Summary assessment order against that taxable person. In worst scenario, it can also be against the transporter warehouse keeper. First, we'll only discuss against the taxable person. Now, there's one point. This is actually, this is the overall concept of summary assessment. But summary assessment order will adversely impact the assessee. Assessee can make an application to withdraw the summary assessment order within 30 days of receipt. Understand, it is not automatic withdrawal like best judgment order against registered person. You have to make application within 30 days. To whom application will be made? To the higher boss, additional commissioner, joint commissioner. Now additional commissioner, joint commissioner, either on his own motion or after receipt of this application, which is within 30 days of after summary assessment order, he will withdraw the summary assessment order if he finds that summary assessment order is erroneous and officer could have followed normal step of section 73-74. He should not have come for this shortcut. He could have gone with the normal route under section 73-74. This will happen against reputed companies. If you pass summary assessment order against Reliance Limited will make the life of the officer hell. It is a black dot against Reliance Limited. Why? That summary assessment order may hold good even for 1 minute in courts. But Reliance Limited is telling that I am not going to run away. Why you are passing summary assessment order? You go with normal route. You give me notice. I'll reply. You pass order. I'll go for appeals. See, if you look at the summary assessment order, one thing you have to carefully understand. There is no principle of natural justice. There is no principle of natural justice. And another thing that you have to understand, that you are indirectly telling that assessee will run away. Indirectly, it is very clearly mentioned that we are going with this summary assessment order because we feel that assessee will run away. Right? So, assessee will tell that you withdraw it. But withdrawal of summary assessment is different from withdrawal of best judgment assessment against registered person. There, you file the returns within 30 days of best judgment assessment order, automatic withdrawal. Here, after you get summary assessment, you file an application within 30 days, then additional commission, joint commission will decide. They will decide that this was erroneous and normal route under 73-74 could have been taken. They will decide. No automatic withdrawal. Now, The last point of the summary assessment. This summary assessment can be against even a transporter, warehouse keeper. Transporter or a warehouse keeper. If taxable person to whom liability pertains is not ascertainable, he is vanished. Yes, vanished. Then the transporter or the warehouse keeper shall be treated as the person who is supplying the goods. They shall be deemed to be the taxable person and they are liable to pay taxes. We are talking not only about transporter, we are also talking about warehouse keeper. If they are having some goods in their truck or in their warehouse and they tell that we don't know whose goods they belong to, why basically it will be done? Because they want to hide the identity of the real owner, as the real owner has given the instruction. If someone is catching hold of you, don't worry, you will be reimbursed for all the expenses, all the penalties, but don't take our name. Don't take our name. Officer is trying to tell that who is the real owner, will take action. Action will be taken against both transporter and owner in any cases. But action against transporter is generally lesser compared to the owner. But in this case, the transporter or the warehouse keeper is not at all revealing the identity of the real owner. Then they will be treated as deemed taxable person and they have to pay taxes. Which means, though it is in their hand, the goods are with them, it will be said that it is deemed to be supplied. You have to pay tax with interest and penalty. With interest and penalty. Against them, summary assessment can be done. This is a special summary assessment. This entire concept which I have circled in light blue color is a separate concept of summary assessment against transporter, warehouse keeper. It has got nothing to do with the normal chain. Separate concept of summary assessment. This is the fourth hidden deemed supply. One is in job worker, one is in sale on approval basis, 6 months concept. One is in your accounts and records where you are talking about having goods but no records or goods stored in place which is not declared. The last is summary assessment. Summary assessment. So these are the four concepts of hidden deemed supplies that you have. So that is everything about your assessment. Now we'll start with your inspection, search, seizure. Another tool of data collection. When you're talking about your inspection, search, seizure, this happens to be one more tool for data collection in addition to accounts and records, your audit assessment. Next tool of your data collection. Now if you see your inspection, search, seizure, you have section 70, 71, 72. 72 is only asking other officers to help the GST officers. So basically it's 70 and 71. Now what is the data collection method that they are resorting in section 70? Proper officer shall have the right to summon any person. Summon any person whose attendance he considers necessary to give evidence or to give document or any other thing in an inquiry. So there is an inquiry going on. What kind of inquiry? Forget about it. Proper officer feels that I want an external confirmation. And I want external confirmation not by way of document, but I want that person to come. I want that person to come. Either to give me some evidence or to give me some document which he brings along with him or some other thing that he has. Now such inquiry shall be treated as judicial proceedings as per your Indian Penal Code. Indian Penal Code. And understand that summons cannot be supported by authorized representative. If you are summoned, you have to go. Right? You cannot tell that, okay, I'll send my authorized representative. That cannot happen. Right? That cannot happen. It is a very serious thing. Therefore, CBIC understands the importance of that and it has said that summons should be used at last resort. See, officers, there should be always a balance. You cannot misuse your powers. So there are certain instructions. It should be used as a last resort for assessees who are not cooperating. Normally, it is not to be issued to top management. Okay, I want to meet Mukesh Ambani. Let me issue someone to Mukesh Ambani. It cannot be issued to top management unless they are directly involved in the decision process which is impacting the revenue badly. Summons by the superintendent to be issued only after obtaining approval from the officer of assistant commissioner or higher, which means AC, DC, joint commissioner, additional commissioner, commissioner. So superintendent level, they don't give the powers. Please take the approval from the higher officers. So that is one of the data collection mechanisms said in section 70. Section 71. See, one way, if you look at the infographics, what it is telling, you come here and give me the data. What is the other picture telling? I'll come to your place, wait for me, I'll collect the data. So any officer authorized by proper officer, by whom? Joint Commissioner. See, Joint Commissioner may authorize me, and then I can ask any other officer to do that work. Right? So Joint Commissioner or above. Joint Commissioner or above. When I tell Joint Commissioner above, it is a serious thing. So JC, Additional Commissioner, Commissioner, Principal Commissioner. They are all the persons. They can have the access to place of business of a registered person. See, again here the difference. Here it is registered person. Summons can be issued to any person. To any person. You may not be the registered person or unregistered person. You may be a third party. It can be issued to you as well. For what? They are going to the place of business of registered person for inspecting the records. When I tell records, it is not only manual records, it is also electronic records. So computers and all will also be covered. For what purposes they are collecting records? To do either audit, scrutiny, verification, any check. They may collect the records for doing audit or scrutiny or verification, or to further carry out section 73 notice, section 74 notice. So that can be for any purposes. Now every person in charge, now there is something which is put on the opposite party. What they have to do? Simple language, they have to cooperate. They have to cooperate. So that is said that the person in charge shall on demand make available all the data to them. Right, including either to the officer or to CA. See, at times CA, CWA will go for special audit under section 66. Officer may not go. Who will go? CA, CWA who is doing special audit under section 66 will go there. Now the opposite person who is a registered person, he has to make all the data available to whom? Either the officer or to CA, CWA who is doing special audit under section 66. Within how many days? Within 15 working days, they may ask for extension. The extension may be granted. What all data he is required to give? Every records, all the records that is maintaining, and is declaring to the proper officer that I have maintained all these records, make available. Trial balance or its equivalent. See, now all the softwares can make you, can give you trial balance. There were scenarios, situations, old softwares which were not giving you TB concept. Now any software that you use will give you trial balance. Audited financial statements, duly audited wherever required. Cost audit report, if at all is there is any. Income tax audit report, if at all there is any other relevant record. Which means they are keeping a scope for any other information also. They can tell that, okay, we have purchased from this supplier, right? Get an external confirmation from that particular supplier. Get your ledger copy in his books of accounts. In his books of accounts. So any other details. But yes, certain specific details they are very clear. Records that you have said that I am maintaining, trial balance, audited financial statements, income tax audit report, cost audit report if at all it is available, and finally they are telling that any other records shall also be there. Now if you see the last infographics, you will find that all are family. All the officers are family. So following officers shall assist the proper officer in implementation of the act. Let it be the police officer, railway officer, customs officer, SGST, UTGST officers helping CGST officer, or CGST officer helping SGST officer, land revenue collection officers, right, including village panchayats, even those officers, or any other class of officers where commissioner notifies. So they we are all our family, please help us in giving the details. Very simple example I will give. Right, income tax officer is having certain information. There is an income tax rate which has taken place, but the information is not yet revealed. The GST officer may go to the income tax officer and tell that, okay, you share all the details, you please carry on your income tax proceedings. I'll see whether there is any scope for GST. I'll carry with my GST proceedings. So that is discussed in section 72. Don't you think that all these details, again, in a very simple manner, it is all collection of data. Collection of data. Now, after you collect the data, obviously, you will first do inspection of the same. you may proceed with your search, seizure, and they have also discussed about power to seize and power to purchase. Other means. We are talking about the next steps. So when you are talking about inspection, again understand that this is also to collect data. This is also another tool to collect data. Now, proper officer of the rank Joint Commissioner or both, that is Joint Commissioner, Additional Commissioner, Commissioner and Principal Commissioner, he has reason to believe that the taxable person has suppressed any supply of goods or services, or suppressed the stock, or has claimed excess ITC, or has indulged in any activity to evade tax. 4 specific reasons. Suppressed the output tax, suppressed the stock, claimed excess ITC, or has done something with an intention to evade tax. What he will do? This is the first category, taxable person. Second category, you will always find these 2 special persons always involved, because these are the persons who normally assist the taxable person. So you are talking about transporter or warehouse keeper who are keeping the goods which has escaped tax payment. Either they are having the goods or having the accounts of those goods where it is very clear that those goods never had any tax on them. Right, so that category. First you are talking about taxable person category, second you are talking about transporter, warehouse keeper category. So what they will do? They need to go and check that. Say for example, if you see taxable person, one of the point is they have suppressed the stock. How will they find that stock is suppressed? Only when they go there and physically take the stock. To be giving you a very practical example, Tamil Nadu for the last 4-5 months, which means right starting from your July 2022, if I am accurate with the data, right, is using the section 67 badly. Why? Finance Minister is not releasing the funds to Tamil Nadu. So what they did? We want money. What are they doing? Left and right, you are getting section 67 notice for inspection. What they will do? They will go there and inspect the place of business to find whether there is any unaccounted suppressed sales or suppressed stock or excess ITC or any other activity with an intention to evade tax. Or if you are a transporter warehouse keeper, they will see that whether you are having any goods which has escaped the tax payment, or you have kept any accounts or goods in such a manner which is likely to cause evasion. Either it has already evaded or likely to cause evasion. They will go and inspect that premises. They will prepare a report and understand that this team will force you to pay the tax, but you can clearly tell no, because this is only a collection of data information which they will pass on to the jurisdictional officer who will start doing their other work. They may directly give section 73, 74 notice, or they may go for audit, then give section 73, 74 notice. That depends on them. Now, here, whether any goods are detained. No, nothing is being detained. So there's no question of any retention. Now, more serious action. We are moving towards more serious action. Again here, proper officer of the rank of Joint Commissioner above, either pursuant to an inspection or otherwise, which means it is a follow-up action of inspection, or it may be an independent action. Either it is a follow-up action of inspection or independent action. He has reasons to believe that the goods are secreted in a place. Which goods? The goods which are liable for confiscation. Either in this case they are not only talking about goods, but also they are talking about DBT, documents, books or things which are useful for any proceedings. You may be having certain documents where you have recorded your unaccounted transactions, right? So what are they doing? That particular officer, that is above the rank of Joint Commissioner above, he is having reasons to believe, and moreover it is a follow-up action of inspection, and they have clarified that not necessary it should be a follow-up action of inspection, either as a follow-up action of inspection or otherwise. He has reasons to believe that Following things are secreted in any place. They have been hidden. They have been hidden. What things? Either goods which are liable for confiscation or document, books or things. Now one may ask, okay, when you are talking about goods liable for confiscation, you should know what are the goods which are liable for confiscation. That is given in your section 130. Section 130, goods liable for confiscation, where any person supplies or receives goods with an intention to evade tax or does not account for the goods. Is not accounting for the goods on which he is liable to pay tax. Unaccounted transactions, or supplies any goods without obtaining registration, or contravenes any of the provisions with an intention to evade tax, or knowingly uses any conveyance to transport the above goods. If you see again here, first 4 points are talking about the taxable person. Last point, you are talking about a transporter or warehouse keeper. So what are the points here? First here, normal point, supplying without paying tax. Here they go a step extra, supplying or receiving. You may be a supplier or you may be a receiver. Normally you will find this term, supplying. But here you are finding, just to make you understand the difference, if you see your inspection point, they are talking about suppressed tax on supply of goods or services. Here only they are talking about the supplier. But in this case, they are telling that you may be supplier or recipient of the goods which is not having any tax. Second point, not accounting the books, unaccounted transactions. Third, you are supplying but without obtaining registration. You are liable for registration but you are not obtaining registration. Now fourth is a normal point. They will always have this normal point, residuary point, contravening any of the provisions with the intention to evade tax. This was there even in inspection, last point. And fifth, you are talking about knowingly uses any conveyance to transport the above goods. Transporter knows that these goods are not having any tax on it. They have been evaded, tax has been evaded on these goods, but he is knowingly transporting these goods. All such goods and conveyance are liable for confiscation, and you will have penalty as per section 122, both against the owner of the goods as well as against the transporter. Right. Now, there are certain points which you have to take care when you are doing this search and seizure. This is the conceptual point that we have discussed. Search and seizure, when they are doing, you have to prepare an inventory. You have to prepare an inventory containing the description, quantity, etc. So what goods they are taking away, they have to prepare an inventory and get it signed by the person. Panchnama report. You have to prepare you have seen in a lot of movies that they prepare a Panchnama report. Isn't it? We have seen in Shivaji, we have seen in a lot of other movies there where they prepare a Panchnama report and tell that we are taking away all these goods. If it is not practicable to take that goods, what to do? You may tell that we are keeping the goods here, but you should not deal with the goods without our permission. Without our permission, it is the responsibility of the owner or the custodian to keep that goods safe. If at all there is a manager of the company, there is a big plant and machine that they want to seize, they cannot seize that. What they can do? They will tell that we are keeping it here. Normally in that cases what they will do, they will put their seal, lock and seal, and tell the officer, tell the person in charge telling that you should not deal with these goods in any manner whatsoever without my permission. Right. And during the process of the search and seizure, they have the power to seal or break open the door. Either to seal it, just now we have discussed that they will keep the plant and machine in a door and they will put the seal, or to break open the door, which means that they are doing the search and seizure. Can they, you have seen in many movies that they will even remove the beds and see. All these things are actually given. They have all these rights. They have all these rights. Right. Wherever they feel that it is hidden in the above roof or concealment, they will do whatsoever is required. So whatever, mostly when you see movies, everything is exaggeration of what actually it is. But these are the examples where exactly they have the powers to do all these things. Now, the goods and the documents, books and things are taken away. Now it is all about retention. How long they can retain. How long they can retain. So when you talk about retention, the normal understanding is, if notice is served for the proceedings, they can retain till the completion of proceedings. if the further action is taken, put in the simple words, if the further action is taken, they can keep those goods till the proceedings are over. If notice is not served, don't you think that it is harassment on the assessee to keep the goods for a long time? In that scenario, they can be retained for 6 months plus 6 months extension from the date of seizure. So very logical point. This point we are talking about your goods. If notice is given till the proceedings are over, keep the goods. If notice is not given, don't keep for long. 6 months plus 6 months. Now let us see for document, books and things. If at all they are relevant for the proceedings, as long as required they can keep it. If they are not at all relevant for the proceedings, they have to be written within 30 days of the issuance of this particular notice. And even if they are keeping as long as they want it, don't worry. What you can do as the registered person, they can always demand the photocopies of all those documents, books or things in the presence of proper officer, and proper officer have to give it. So if your books or documents are with the proper officer and they are telling that we want it till the completion of proceedings, what you can do? In the presence of officer, you can go and take the photocopies of the same. In rarest of the rare cases, they will deny it. In rarest of the rare cases where they feel that no, even taking photocopies will affect our case, they will deny it. Normal case, they will allow it. Now, this is about documents, books and things. You have certain special points for goods. Goods which have been seized, what is the special point? The seized goods may be released on provisional basis. See, whenever you are taking the goods on provisional basis, government is very clear. You have to pay the tax, interest or penalty. Either pay the tax, interest, penalty and take the goods on provisional basis, then do anything. Or give a bond along with bank guarantee, security, equivalent to tax, interest and penalty. If such provisionally released goods are not produced before the proper officer when asked for, now they are giving you the goods to deal with it, but if they are not again given back to the officer, then what proper officer will do? He will encash the security. See, either you have two options: pay tax, interest, penalty, take the goods, do anything, or give a bond along with bank guarantee. But when you are giving a bond along with bank guarantee, make sure that whenever it is asked for, you bring the goods. If you don't bring it, they will use the bank guarantee and convert that into amount, money. And again they give at this point, you will find in even other acts, if the goods are of perishable nature or hazardous goods, or they have storage constraints, they cannot be kept for long, then what they can do? They will be disposed of, which means they will be sold and the dues will be adjusted, which means if the sale value is 1 crore and the due pending is 60 lakhs, they will adjust against the dues. Alternatively, they'll give another option to taxable person to pay lower of the dues or market price of the perishable goods or hazardous goods. See, again the same concept applies here. They'll give you two options. Either we will sell the goods because we are not we don't have the right to keep these perishable goods or hazardous goods or goods which are having huge storage constraint for a long time. We cannot keep them. So what you do, either pay amount, take it, or we'll sell it off, we'll adjust the dues, give you the balance amount. When you're talking about payment, it is lower of the dues or the market price. Which means the dues are say 1 crore, but the market price is only 60 lakhs. You are not going to pay 1 crore, you are going to pay only 60 lakhs. Reverse. If the market price is 1 crore, but the due is only 60 lakhs, again you are going to pay only 60 lakhs and take away those goods. There is a note 2 which is for the other 2 points. Now the last aspect, power to seize and power to purchase. This power to purchase is done practically by all officers of all the states for the last 1 year. What is this power to purchase? Officer will come in the guise of the customer and tell that I want the goods. He'll see whether you are giving proper documentation or not, giving tax invoice or not. And if you are not giving tax invoice, means it is a set practice in your shop that you are not giving tax invoice. Then he'll take the further action. He'll follow the further proceedings. Other proceedings will be initiated. But the problem is, Supposing officer has purchased the goods for say 10 lakh rupees. Big antique piece was that. Now again he is telling that I am an officer. The assessee may tell that, oh no, you be officer, but I am not going to return your 10 lakh rupees. That should not happen. That should not happen. Now this provision talks about if a proper officer, commissioner or any officer authorized by him to see whether the person is giving the goods on issuance of proper tax invoice or bill of supply in the guise of the customer, he may go and purchase the goods or services from taxable person. He is just checking whether you are giving tax invoice or bill of supply, and he will return the goods, and you are required to refund the amount and cancel the tax invoice or bill of supply already issued. So this point is only said to make sure that officer will reveal his identity and tell that I only purchased this item only for checking whether you are giving tax invoice or bill of supply or not. If you are giving, well and good. If you are not giving, I will take other action. But I will return you the product, you refund me my amount and cancel that tax invoice or bill of supply if you have issued any. So that is power to purchase. Power to seize. Power to seize. If proper officer has reasons to believe that a person has evaded or attempting to evade taxes. This is a general provision, which means it is a random provision rather. If you see inspection, well thought of provision against that registered person. Well thought of provision. Rather, if you see inspection, it is also against your taxable person. Even if you see search seizure, it is again well thought of provision. Randomly and all is not happening, but this seizure is randomly happening where he has reasons to believe that the person has evaded tax or attempting to evade tax. What he'll do? He'll only seize the accounts, documents registered. He'll only take that. Goods is not covered here. He'll only take those accounts, documents and registered produced before him and grant him a receipt. He'll tell that, okay, take this receipt. I'm taking over your books. I have doubt that you are not having your accounts properly. Why I am calling this as random? Because it is not well thought of, first point. Second point, there is no groundwork which is done. After getting the documents, books and records, groundwork will be initiated. Groundwork will be initiated. Now he can retain those books as long as he may feel it necessary for proceedings and prosecution. For any kind of proceedings including criminal proceedings, he can keep those books. I again conclude this chapter by only telling the same point again. This is only data collection. This is only data collection. The main data collection happens in your inspection, search and seizures. The other 2 points, the power to seize your only your records, or power to purchase and check whether the opposite person is giving invoices, or again data collection means just to check whether the opposite person is giving invoice or not, or just to check when I am having doubt that he is likely to evade tax or he has evaded tax, I am just taking the books and verifying the books whether all the things are proper or not. Data collection information. That's everything about your inspection, search, seizure. One more point, but there's one more inspection, search, seizure, which is section 68, which is nothing but welcome to the world of e-way bill. That inspection happens during the movement of conveyance. Movement of conveyance. That is section 68, which is not given in this chapter because it is given along with your e-way bill. Yes, now let us quickly go through your demand and recovery chapter. So after collecting all the information, whether by way of your audit and assessment, or whether by way of your inspection, search, seizure, or by checking the accounts and records, later on what will happen is you will get a notice and then there will be demand. After demand you have 2 options, either to pay and close the chapter or recovery will start. So what is this entire process? First, it is all about collection of information. The officer will collect all the information, whether by way of your audit or your assessment, including scrutiny of returns, inspection, search, seizure, summons, calling for information, etc. By many means, officer will try to collect the information. After which he will give a show cause notice. So first main thing you are talking about show cause notice under section 73, followed by order of section 73, or show cause notice under section 74, followed by order of section 74. Now we have certain other cases where you will be having notice under section 76, which is surplus amount. You are not talking about tax. You are talking about surplus amount, which means, say for example, tax rate is 5%, but you are collecting 12% and paying 5%. So rate is 5, you are collecting 12 and paying only 5. Right, so levy is of 5%, payment is of 5%, but you collected extra 7%. That is surplus amount. There, section 73, 74 notice will not be there. It will be section 76 notice followed by section 76 order. Extreme fraud case. You are cheating the customer in the name of the government. So you have a scenario where levy is 5, but you are collecting 12 and you are paying 5. So levy is of 5, payment is of 5, but you collected from the customer in the name of government extra 7% surplus amount. Then friends, you have something called as best judgment assessment. So when you talk about your best judgment assessment, there will be, if at all it is against registered person, there will be first notice for filing your returns within 15 days followed by best judgment assessment order under section 62. Or if at all you are talking about best judgment assessment against unregistered person, you will get notice and order under section 63. So here friends, you are talking about best judgment assessment. Best judgment assessment. And finally friends, when you talk about your summary assessment will not have any notice. Directly there will be an order. We have discussed in summary assessment also. There is a negative point in summary assessment that there is no concept of principle of natural justice. Directly you will be getting an order. So these are all the ways where order will be raised. Normally it is section 73, 74 order, or best judgment order section 62, 63, or summary assessment order without a notice, which is section 64, or you are talking about surplus amount order section 76. Now after getting the order, you do have two options. Either pay the dues within, basically the time limit is 3 months, because first appeals time limit is 3 months. Pay the dues or go for appeals. Either pay the dues or go for appeals. But if you are not taking any action, if you are showing this mentality that I don't care, that I am not going to pay the dues, I am not going to go to appeals, basically the time limit is 3 months plus 1 month extension is there for the assessee, then there will be forceful recovery. Department will start attaching your properties. Right, now when you see the time limit, you have to understand that there are certain cases where directly recovery will be there without any notice and order. It will surpass it directly from first stage with a collection of information. Directly there will be recovery. Now what are those cases? If self-assessed dues are not paid, whatever your self-assessed dues are there, you have not paid. Self-assessed dues in returns, you have shown them in your GSTR 1 as your sales, but you are not showing in GSTR 3B and you have not paid, then directly there will be recovery. There is no need of any notice and order. Also when you are talking about if at all you have given a promise under a bond, undertaking or a surety and you don't fulfill the promise, directly recovery. Also there is one more scenario, interest. For interest you don't have any time limit, directly there will be recovery. So please understand that for these three scenarios, two scenarios is mentioned here, there will be one more scenario which will be discussing interest. There is no need of any show cause notice, there is no need of any demand order. There is direct recovery. Right, self-assessed dues which are shown in return are not paid, or you promise something under bond undertaking, or your surety is given or security is given but you don't fulfill the promise, directly recovery will happen. The same is true for interest. There is no time limit. Interest for late payment can be collected after 5 years, 10 years, 15 years, 20 years, 25 years. Directly recovery will be there. Now talking about the first aspect where you are talking about your demand. Now understand that when you are talking about your demand, basically first we are discussing about your section 73, 74. Demand under section 73 which is a bona fide case, section 74 which is a fraudulent case. So section 73 show cause notice will come where you are talking about any reason other than by way of fraud. There is no fraud, there is no willful misstatement, there is no suppression. Whereas section 74 notice will come if at all department is alleging that there is fraud, willful misstatement or suppression of facts with an intention to evade tax. So there are two criteria. There should be fraud, willful misstatement, suppression of facts. Second criteria, intention to evade tax. Then it is a fraud case, section 74 case. Otherwise, it is a bona fide case, section 73 case. Whether it is a fraud case or bona fide case, you will be getting notice for 5 reasons. Either tax is not paid, or it is short paid, or it is erroneously refunded. Non-payment of tax, short payment of tax, erroneous refund of tax, or ITC is wrongly availed, or ITC is wrongly utilized. So there are totally 5 reasons. 2 reasons are of output tax, short payment, non-payment. Non-payment and short payment. 2 are of ITC, non-availment, wrong availment, wrong utilization. And 1 is of refund, erroneous refund. So remember it's 2 plus 2 plus 1. For output tax, short payment, wrong non-payment. For input tax, wrongly availed, wrongly utilized. And 1 is for erroneous refund, wrong refund you have taken. Now, what is meant by separation of facts? They have tried to clarify. Separation of facts means there is a non-declaration of certain things which are required to be declared in a written or a statement or report or anything which you have to declare but you have not declared. That is a non-declaration of a particular fact which you have to declare somewhere, whether it is written or record or any statement or any report, or not providing the information that is asked by the officer. So, when you talk about the term separation of facts, it means 2 things. Either you are required to give in a particular form, whether it is a written or a report or a statement or any other document, but you did not give it. Specific question was asked that you have to give this information, but you did not. You just escaped that question and you pass on to the next question. That was not given. Second, officer specifically said that you have to give these details, but you did not. You never gave those details. That is also separation of facts. And as already discussed just a few moments ago, I already discussed. For few cases, there is no need of notice, there is no need of order, directly there will be recovery. So when you are talking about self-assessment tax which is not paid, you have self-assessed tax declared and written but not paid, there will be direct recovery. When I tell that self-assessed tax are not paid, it means that you have declared somewhere and written but you are not paying the taxes. Direct recovery will start under section 79. Now understand that you might wonder, when there is a self-assessed tax which is declared and written, how come it is not paid? Because when you declare something in your GST or 3B without payment, you cannot file your 3B. Now what this meant is self-assessed tax not paid basically talks about a scenario where you have declared your taxes in GSTR 1 or your information furnishing written GSTR 1 or IFF but not shown them in GSTR 3B. So self-assessed tax declared and written not paying means you have shown them in GSTR 1 or information furnishing written but you have not shown them then in GSTR 3B. So that is the concept of self-assessed tax which is reported and written but not paid. For this, there is no need of any show cause notice, no need of any order, directly recovery will be there. Now, talking about the entire process, how it will work, how you will get the notice, what is the process, talking about this entire process, let us understand the entire process. Now, initially officer will give you a notice under section 73 if it is a bona fide case. If it is a fraudulent case, it is section 74. It is section 74. You will be getting a notice. Now, when you get a notice, obviously, you are going to represent yourself. So, when you are representing yourself, you can represent either yourself or through an advocate or a CA, CS, CWA or a retired officer or a GST practitioner. Authorized representative can represent you. So either you can represent yourself or authorized representative can be there, and the maximum adjournments that you will get is 3 adjournments. You can request for 3 adjournments maximum. More than 3 adjournments you cannot request. And if at all any action is taken which is against you, adverse decision, if the order is against the assessee, always there will be an opportunity of being heard. So there will be an opportunity to let assessee give his point of view. So that will be the second stage. Third stage, there will be order. So when you talk about the third stage, there will be an order. When you talk about order cannot be based on new grounds. So whatever grounds were raised in show cause notice, only that ground should be there. See, 2 important facts. When you talk about order, it cannot have new grounds. When you talk about order, the amount in order cannot be more than the amount in show cause notice. The amount in order cannot be more than the show cause notice. So very important facts, because if there is a new ground, you should be given an opportunity. Plus if the amount is more in order, then again you are not given an opportunity. So very 2 important points. When you talk about your order, please understand that grounds in order cannot be new grounds. It should be same as in show cause notice. Tax amount in order cannot cross your show cause notice amount. Also to understand the fact that interest portion, when you talk about interest portion, it is mandatory even if not mentioned in order, because interest keeps on changing. So interest is calculated on day basis, so interest will keep on changing. So whether or not that order is giving you interest or not, you are required to pay interest. So it will only tell the tax portion and penalty portion, but understand that you are required to pay interest, because till the moment you pay the tax and interest and penalty, your interest will continue. Right? So interest, even though it is not mentioned in order, you are required to pay. And as regards penalty is there will be a separate calculation for penalty, which we will be discussing in table 1. And also understand that when you talk about the order, it should be a speaking order. What is meant by speaking order? Speaking order means that particular order where everything is very crystally clearly given, no need of any explanation. So everything, whatever grounds are there, whatever amount is there, how they have calculated it, what basis they have done it, everything should be there in the order. So when you talk about penalty, penalty will be discussing in a separate table. Now let us talk about other few important points about your notices. Then we will talk about your penalty. So penalty will be discussing it separately. Now talking about other few special points. When you talk about, there's something called as deemed show cause notice. At times you can have a statement which is deemed show cause notice. Now what is this concept? If a show cause notice is already issued for an earlier tax period and later for the later period, they are having the same grounds, you have to give another show cause notice. So already a show cause notice is given for, say for example, in standing in 2022-23, there is a show cause notice given for financial year 19-20, and the same subject matter is repeated in 2021. For the later period, they have to give another show cause notice, and time limit for them is very much clearly there. Instead of giving the notice, again mentioning all the grounds, again writing it very clearly, same thing, repeating it in 10 pages, 15 pages, they can give the reference of show cause notice in a statement, tell that the same grounds we are doing, whatever grounds we took in financial year 19-20, we are taking the same in financial year 2021. So for financial year 19-20, there was a show cause notice. 2021, there will be a statement which is giving reference to show cause notice of 19-20. No need to repeat the grounds, telling that same grounds we have taken. So important point. First, this is not applicable for fraud cases. This provision is not applicable for fraud cases. It is applicable for bona fide case. So, and second important point, grounds should be the same. So whatever grounds you took in the previous show cause notice, earlier period show cause notice should be the same. So instead of giving a detailed show cause notice for the later period, you can give a statement for the later period, and that shall be deemed to be show cause notice. So two important conditions. It is not applicable in fraud cases. Grounds which are there is the same. So it is nothing but show cause notice. If I want to write, it is show cause notice followed by statement. Statement will be treated as deemed show cause notice. So you are talking about a scenario where there is a show cause notice followed by a statement, and that statement is deemed show cause notice. Two conditions, ground should be the same. Second, you are not talking about fraud case. And third important condition, show cause notice should be for a previous period, and statement should be for the later period. So supposing show cause notice is for 19-20, statement should be for period after 19-20, so that time limit is not escaped. Now that is one important point. Second important point, which is again to make sure that the department's inability is hidden in some manner. Now, where a show cause notice is served under fraudulent case, section 74 show cause notice, but finally it is held by appellate authority or appellate tribunal or high court or supreme court that this show cause notice under fraud case is not maintainable because there is no fraud. Because there is no fraud, willful misstatement or suppression of facts with an intention to evade tax. Then, strictly speaking, that show cause notice is void ab initio, which means when officer is giving you show cause notice under section 74 alleging it is fraud or misrepresentation or suppression of facts with an intention to evade tax, later on when the appellate authority or appellate tribunal or high court or supreme court tells that there is no fraud, then that show cause notice is void ab initio. But to overrule that particular point, what they are telling? They are telling that show cause notice is still valid, but now treat it as a show cause notice under section 73. Previously it was a show cause notice as per section 74 fraud case. When it is held to be invalid, then they tell that the same show cause notice will be treated as show cause notice for bona fide case. If it is a fraudulent case, you get extra time. If it is a bona fide case, you will get a shorter time. So previously our department gave a notice under fraudulent case where they would be recovering say for 5 years. The moment that fraud is not proved, then the same show cause notice is valid. But now recovery cannot be for 5 years, it will be for a shorter period, say for example 3 years. We'll be discussing how 5 years and 3 years we have got. That is all about this entire process which will happen. Now talking about the penalty. As discussed, when you talk about penalty, one thing we have very clearly stated that when you talk about penalty is different in bona fide case section 73 and it is different in fraudulent case section 74. Let us make it simple. When you talk about the penalty, you categorize the cases into 4. That is show cause notice, that is demand order. So there is a timeline where you are talking about show cause notice and there is something called as demand order. And there is something called as within 30 days of show cause notice, there is something called as within 30 days of demand order. So if at all I tell that there is a bona fide case and if at all I tell that there is a fraudulent case, if it is before show cause notice, you have to categorize them into 4 timeline. Before show cause notice, within 30 days of show cause notice, after 30 days of show cause notice, but within 30 days of demand order and after 30 days of demand order. So there are totally 4 situations. Before show cause notice, within 30 days of show cause notice, after 30 days of show cause notice, but within 30 days of demand order, after 30 days of demand order. In bona fide case, whether it is before show cause notice or within 30 days of show cause notice, penalty is 0. And if it is after 30 days of show cause notice or within 30 days of demand order or after 30 days of demand order, then it is penalty is 10% of tax or input tax credit or 10,000, whichever is higher. So it is 10% of tax or input tax credit or 10,000, whichever is higher. So you are talking about whichever is higher. Now for fraudulent case, if you see, for bona fide case, first 2 situation same penalty, last 2 situation same penalty. But why we have categorized them into 4 cases is for fraud. Here you have 15% penalty of tax interest, then you have 25% of tax or ITC, then you have 50%, then you have 100%. So when you talk about fraudulent case, there is a reduced penalty. If it is before show cause notice, 15%. After show cause notice within 30 days, 25%. After 30 days of show cause notice, before 30 days of demand order, 50%. After 30 days of demand order, 100%. And when you want to get this benefit of reduced penalty, you have to make sure that you pay the tax, full interest. The moment you want this benefit of reduced penalty, you call it as reduced penalty, you have to pay full tax plus full interest plus reduced penalty within the time. So if at all you want to get this benefit of 15% or 25% or 50% of tax or ITCS penalty, pay full tax plus pay full interest plus pay the reduced penalty within the time. So if it is 15%, pay full tax, pay full interest and pay 15% of tax or ITCS penalty before show cause notice. If it is 25%, pay full tax, pay full interest plus pay 25% of reduced penalty within 30 days of show cause notice. If it is a 50%, pay full tax, pay full interest and pay 50% penalty of 50% of tax or ITC within 30 days of demand order to get this particular benefit. So that is one special point which is given here. And here also there is a special point which is given here. What is the special point which is given here? 0% will not be there. If at all you are talking about a scenario where self-assessed tax is not paid within 30 days of due date. If at all there is a tax which is not paid within 30 days of due date of payment, then the penalty will be 10% of tax or ITC or 10,000, whichever is higher, which means even this 0% can be 10% of tax or ITC or 10,000, whichever is higher, if at all you did not pay the tax within 30 days of due date of return. But there's a circular which is clarifying and telling that this will be applicable if any proceedings is already initiated. Now let us understand bona fide case 2 situations. If it is before show cause notice and within 30 days of show cause notice, generally penalty is 0. So if at all there is no proceedings which is initiated. If at all there is no proceedings which is initiated, the penalty will remain 0%. This is scenario number 1. If there is any already proceedings which is initiated, already there is a proceedings which is initiated, but you did not pay the tax within 30 days of due date of payment, then it will be 10% or 10,000, whichever is higher. So the circular tells that just because you have not paid the tax within 30 days of due date of payment does not mean that always there will be 10% or 10,000, whichever is higher. This point is very clear. Normally for bona fide case, if you pay before show cause notice or within 30 days of show cause notice, penalty will be 0. But in cases where already proceedings has been initiated by the officer in some case, first condition, second condition, you did not make the payment within 30 days of due date of payment, then the penalty will be 10% of tax or ITC or 10,000, whichever is higher. So this is explained. Whatever we have discussed is clearly given in this entire area. Plus we have also discussed the small circular which was given here to understand that 0% penalty in bona fide case. Right. So now that is all about the penalty part. There are a few clarification. If at all after making the payment, if officer feels that there is any short payment, for short payment he can issue show cause notice. Normally when you make the payment before show cause notice, you have to intimate the officer that you have made the payment, and officer will not issue show cause notice because you have already paid the amount. But if the officer finds that you have paid something short, for that he can issue show cause notice. So point is very clear. If you are making the payment before show cause notice, please intimate the officer so that he is not issuing notice for that particular amount. But if he finds that you have to pay 1 crore but you have paid only 80 lakhs, for 20 lakhs he can still give show cause notice. And if at all the amount is paid after show cause notice, if you have paid the amount after show cause notice, whether it is full tax, full interest or reduced penalty or full penalty, all the proceedings shall be deemed to be concluded. All the proceedings initiated against you shall be deemed to be concluded. Now that is again clarified when you see the point here, the expression all the proceedings of the said notice shall be deemed to be concluded, which means all the proceedings will stop, will not include criminal proceedings, will not include proceedings under section 132. So which means if you have paid the tax, interest, reduced penalty or full penalty, all the proceedings against you will stop, but not criminal proceedings which is initiated against section 132. Your tax proceedings, civil proceedings will stop, but your criminal proceedings will continue. Also another important point, if at all proceeding is initiated against the main person who is liable to pay tax, also against some other persons. Supposing there is some evasion of tax by the owner of the goods and transporter is helping the owner of the goods. So proceeding is initiated against the owner of the goods and the transporter. If proceedings is initiated against the owner of the goods and the transporter, that is the core culprit. And if proceedings against the main person are concluded, if the main person, if the owner of the goods has paid full tax, full interest and reduced penalty or full penalty as the case may be, then proceedings against the co-person, which means there was another action against the co-person, that is transporter, co-culprit. Whether you are talking about penalty under section 122 which may be initiated against transporter, or penalty against the transporter against under 125. So against the other person, co-culprit, there may be penal proceedings under section 122 or 125, they are also deemed to be concluded. So understand two important points. If you are the owner of the goods and if there is a transporter who is helping you out in doing some evasion. Now as far as owner of the goods, when he makes the payment of tax, interest and penalty as the case may be, all the proceedings against him, tax proceedings, civil proceedings will stop, but criminal proceedings section 132 will continue. And when the main person proceedings are concluded, automatically the other person, that is transporter's proceedings, which if at all it is penalty proceedings under 122 and 125, that will also automatically stop. He need not pay anything if he has not already paid anything. Now, this next point which is given here, proper officer may ascertain the demand and intimate the tax person by DRC 01A prior to show cause notice. So proper officer, before giving show cause notice, he may intimate about some discrepancies in DRC 01A. And if proper officer is doing so, assessee will get a benefit under section 74, which means before show cause notice, proper officer may, not always, it is an option, may give DRC 01A. Now how it will help the assessee? Understand that it does not make any difference when you talk about bona fide case, because for bona fide case, whether you pay the amount before show cause notice, penalty is 0, or whether you pay after show cause notice within 30 days, penalty is 0. So it will not help you in bona fide case. It will help you in fraudulent case. It will help you in fraudulent case. When you talk about fraudulent case, what happens is, if you pay the amount before show cause notice, 15%. After show cause notice within 30 days, 25%. Now, if at all officer has given you DRC 01A before show cause notice, you may decide to pay the penalty before show cause notice itself. You will be paying only 15% penalty. If officer decides that he will not give DRC 01A, directly is giving show cause notice without giving DRC 01A, then you don't have an option to pay before show cause notice. You will be paying within 30 days of show cause notice. If at all you want to pay, you have to pay 25%. So if officer is going for DRC 01A followed by show cause notice, penalty will be 15%, because if you are paying, you will be paying amount before show cause notice. If officer is ignoring DRC 01A, directly giving show cause notice, penalty will be 25%, because obviously now you have to pay only after show cause notice, but within 30 days of show cause notice, if you pay, penalty will be 25%. So there will be difference in penalty if officer decides to go for DRC 01A and if he decides not to go for DRC 01A. Now the next point is only a clarification, both the points, where the appellate authority, so if you are talking about a scenario where the appellate authority or the appellate tribunal or the High Court or Supreme Court modifies the tax amount, automatically interest and penalty will also be modified, because interest and penalty are based on tax. If the higher authority, that is appellate authority or appellate tribunal or High Court or Supreme Court, are changing the tax, automatically your interest and penalty will also change. Where a penalty is imposed under section 73 or 74, no penalty against the same person under any other provision shall be there. If there is a penalty proceedings against the person under section 73 or 74, he should not be levied penalty under any other provisions like your section 122, 123, 124, that should not be there. So if there is a penal proceedings against a person as per your section 73, 74, he will be covered only by penalty as per section 73, 74. Other penalties will not be there. Other penalties will come when there is no 73, 74 proceedings, directly there is civil proceedings, penal proceedings are initiated. So that you need to understand. Now, talking about the other important aspects of your demand. Now understand that there is a time limit for giving show cause notice, there is a time limit for giving demand order. Now understand the time limit are pretty simple. If at all it is a bona fide case, if at all it is a bona fide case, if at all it is a fraudulent case, right? So there is a time limit which is there for giving show cause notice, there is a time limit which is there for giving demand order. Show cause notice time limit for bona fide case is 2 years 9 months and order 3 years, and fraudulent case time limit for giving show cause notice is 4 years 6 months, demand order 5 years, and both should be satisfied. If it is a bona fide case, officer should satisfy the time limit of show cause notice as well as demand order, and if it is a fraudulent case, officer should satisfy the time limit of show cause notice as well as demand order. Officer cannot give you show cause notice after 4 years 6 months but complete demand order within 5 years. Officer cannot give you show cause notice after 2 years 9 months but give order within 3 years. That is not possible. You have to take care of both. Now understand that when you are calculating this particular time limit, this time limit will start from where? Now you have totally 5 cases of proceedings. One is 2 of output tax, non-payment, short payment, 2 of input tax credit, wrong availment, wrong utilization, 1 is erroneous refund. Now if it is non-payment, short payment of output tax, wrong availment, wrong utilization of input tax credit, these all time limits will start from due date of annual return of that year, due date of your annual return. And if it is erroneous refund, it is from the date of you getting erroneous refund. So all these time limits will start from, if at all it is non-payment, short payment, wrong availment, wrong utilization, due date of annual return. So if the recovery is for financial year 18-19, due date of annual return of 18-19, from that you have to calculate 2 years, 9 months or 3 years or 4 years, 6 months or 5 years as the case may be. And if it is erroneous refund case, it is the date of erroneous refund. So that is all about your time limit. That is all about your time limit. Now in these time limits you have to add something. Certain things are excluded. Certain things are excluded. If there is a stay period, if there is a stay period on stay order on show cause notice, stay order on demand order, that stay time will be added. Whatever was the stay time will be added. If there is a stay on giving notice or a stay on giving order in your own case, not in others' case, in your own case there is a stay. If higher authorities have given stay in giving show cause notice or stay in giving demand order, when you are calculating this time limits, first calculate normally 2 years, 9 months or 3 years or 4 years, 6 months or 5 years. Then with that add the stay time. You have to add it. When I tell that it is excluded, you are going to add that scenario. That is the first case. That is the first case. There is one more case when you are talking about you have to exclude something when you are talking about your demand order. When you are talking about your demand order. In other person's case, and that is only for applicable for your demand order, not for show cause notice. If at all the same subject matter is there in another person's case, supposing we are talking about Tata Limited, if the same subject matter is already there in Reliance Limited and some other case, other person's case, our subject person is Tata Limited, but the same matter has been decided by courts in Reliance Limited. If at all it is there in other person's case, against Tata Limited, officer has to give show cause notice in time. But after giving show cause notice, they cannot give you demand order, because if the matter is pending in other company's case, already appellate authority has decided, or appellate tribunal has decided, or high court has decided. So the time between the appellate authority judgment and appellate tribunal judgment, or appellate tribunal judgment and high court judgment, or high court judgment and Supreme Court judgment will be added. So if in other company's case already judgment is there given by appellate authority or appellate tribunal or high court, plus it is pending at higher level. It is pending at higher level. If it is decided at appellate authority, it is pending at appellate tribunal. If it is decided at appellate tribunal, it is pending at high court. If it is decided at high court, it is pending in Supreme Court. Then what you have to add? The time between the judgment of appellate authority to the judgment given by the next authority, appellate tribunal, or appellate tribunal to the judgment given by high court, or judgment of high court to the judgment given by Supreme Court. Please understand the logic of this. When there is a stay can be both on show cause notice and demand order. The moment there is stay in your own case, officer cannot take any action. The moment he cannot take any action, whatever the time limits are there, whether it is 2 years, 9 months or 3 years, 4 years, 6 months or 5 years, along with that stay time will be added to calculate the last date to give show cause notice, last date to give demand order. In the second scenario, if you look carefully, the subject matter is decided in some other company's case, not in your company's case, some other company's case. Officer has to give show cause notice. There's no relaxation. Officer has to give show cause notice, no relaxation, no addition. There's no relaxation or no addition of time for show cause notice. He has to give show cause notice in time, 2 years, 9 months or 4 years, 6 months. But for demand order, he'll be getting extra time. Because when officer is deciding in Tata company's case, he's seeing already the same subject matter is decided by appellate authority or appellate tribunal or high court in some other company's case. To give an order against them will not be fair, so he'll wait. He'll wait till the next higher levels order. So he'll wait, if at all the order in other companies' cases of appellate authority, he'll wait till appellate tribunal order. If the order in the other companies' cases of appellate tribunal, he'll wait for high court order. If the order in high court is in other company is there, he'll wait for Supreme Court order. This he will do when those orders are in favor of assessee. Though it is not written, when these orders are in favor of assessee. So when these orders are in favor of assessee, he'll wait so that the next authority may give orders. These orders are in favor of assessee. Though it is not given, obviously it is implied that these orders in favor of assessee, and officer do not want to pass a judgment against these higher authority orders. Right, so he'll wait for the next level. So that will be added only in case of demand order. So when you see this particular time limit, whatever we have discussed, this entire scenario we have discussed. Now there are certain other points where you are giving any order because of the direction of appellate authority or appellate tribunal or court, where the order itself is passed because of appellate authority, appellate tribunal or court, then order shall be given within 2 years from the date of communication of the said order. Here that is no order. Initially there is no order. Some other matter is being challenged in appellate authority, appellate tribunal or court. Now court is telling that to give an order. When you are giving an order as per the direction of appellate authority or appellate tribunal or court, that should be completed within 2 years. So that is a very special point which is there. Now proceedings are deemed to be concluded if above time limit are not adhered to, which means if you are not giving show cause notice or not giving demand order within the time, then our department cannot give show cause notice or demand order after the expiry of time. Department has to adhere to these time limits. If they are not giving show cause notice in time or demand order in time, they cannot do anything. Now as already discussed, this we are discussing for the third time. If at all you are talking about self-assessed tax not being paid, or interest not being paid, or you have made a promise under bond, undertaking, surety or security, right, there is direct recovery, no need of any notice, no need of any order. So 3 scenarios: self-assessed tax declared in written but not paid, declared in GSTR 1 IFF but not paid in GSTR 3B, or interest on late payment you have not paid, or there is a bond or undertaking with surety or security that you have given but you have not fulfilled the promise. Then there is no need of show cause notice, no need of demand order, direct recovery will be that. So that is all about your time limits and other aspects of your show cause notice and demand order. Now we are talking about a small petty matter where we are talking about monetary limits for giving the show cause notice. The simple understanding, higher the amount, higher the officer. If at all you are talking about superintendent of central tax, then you are talking about deputy commissioner, assistant commissioner of income tax, finally you are talking about additional commissioner, joint commissioner of income tax. What are they telling? If at all CGST is up to 10 lakhs or IGST is up to 20 lakhs, CGST is up to 10 lakhs, SGST is up to 10 lakhs, IGST is up to 20 lakhs, then who will handle the matter? The matter will be handled by superintendent. Then they clarify, what if the recovery is of CGST, SGST and IGST? If at all it is of all the scenarios, the amount should be up to 20 lakhs. It should not be adding up. If CGST recovery is there up to 10 lakhs, only CGST recovery, superintendent up to 10 lakhs. Only IGST recovery up to 20 lakhs, you are talking about superintendent. That is CGST and IGST recovery, don't add it, up to 20 lakhs. Likewise, if at all you are talking about only CGST recovery, more than 10 lakhs but up to 1 crores. More than 10 lakhs but up to 1 crores. Only IGST recovery more than 20 lakhs but up to 2 crores. Both CGST and IGST recovery, again limit is the same, don't add up, more than 20 lakhs but up to 2 crores. The matter will be handled by assistant commissioner, deputy commissioner. If at all you are talking about only CGST notice more than 1 crore, joint commissioner, additional commissioner. Only IGST notice more than 2 crores, additional commissioner, joint commissioner. If it is CGST and IGST both together, obviously it is including cess, then more than 2 crores, don't add it, more than 2 crores, it is additional commissioner, joint commissioner. So this point is important. When the recoveries of both CGST and IGST, you are not adding up both, you are just going to the higher level, you are just sticking to the level of only IGST case. So whether it is only IGST or IGST plus CGST, the limits are the same for giving show cause notice. Now we are talking about the next other parts. When you are talking about other parts of your demand and recovery. So first we are discussing about your section 76 case. This case we have already discussed in the beginning, that you are talking about say levy is of 5%, but you are collecting 12 and paying 5. So levy is 5 collecting from the customer is 12 but payment is 5. So it is a fraud in the name of government. You have to pay 5%, you end up paying 5%, but from the customer you have collected 12, which is called as surplus amount. For surplus amount, it is actually cheating the customer in the name of the government. You are cheating the customer but in the name of the government. You will get a notice under section 76 as it is a fraud, extreme fraud. I am calling it as extreme fraud because you are cheating the customer in the name of the government. There is no time limit for show cause notice. Show cause notice can be given after 5 years, 10 years, 15 years, 20 years. No time limit. Then assessee will represent his subject matter. Finally, officer will give order under section 76. But for giving order, after giving show cause notice, officer has to give order within 1 year of show cause notice excluding the stay period. If you look at the point, it is an extreme fraud case because you are cheating the customer in the name of the government. There is no time limit for show cause notice. Show cause notice can be given by the officer after 5 years, 10 years, 15 years, 20 years. No time limit. But once notice is given, the matter should be closed within 1 year of show cause notice. Now understand that as it is an extreme fraud case, you are required to pay not only the surplus amount with interest but also 100% penalty. There is no relief of penalty as it is an extreme fraud case. So for extreme fraud case, two special points. No time limit for giving show cause notice. The matter can be opened even after 20 years, 25 years. And when you are paying that tax, you have to pay with that, paying that surplus amount, rather not tax, you have to pay with interest and penalty which is 100%. There is no relaxation of penalty that you pay within 30 days of notice or 30 days of order. No relaxation whatsoever. Now, that is the basic amount. Now, understand that if at all you have collected extra from the customer, now government is asking for that extra amount. Please understand that this amount, excess 7%, does not belong to you. Even it does not belong to the government. So government actually it belongs to the person who has borne the insurance. It belongs to the customer. Because levy was of 5%, you paid 5%. You had extra 7% surplus amount in the name of the government. Now government has recovered from you. But government cannot also have this excess 7%. It has to be refunded to the person who has borne the insurance. Customer, it has to be refunded to the customer. But again, there is a clarification. If later on there is any proceedings against the tax payable against that person, if at a later point of time there is finally it is said that no, tax rate should not have been 5%, it should have been 12%. Again, you are not going to pay 7%. So if at a later point of time there is an action against the same taxable person for some tax payment, the amount paid under section 76 will be adjusted against it. I am giving a very simple example. Supposing later on it is found that the rate itself was 12%. You have collected 12 but paid 5 initially, then later on you paid 7%. Again, you are not required to pay 7% because in total you paid 5% initially, later on you paid 7%. So government is telling you to pay 12%, you in fact have paid 12%. Initially you paid yourself 5%, later on you paid surplus amount as 7%. Now that surplus amount will be converted to tax. So if at all there is any action or recovery against the same taxable person for the same tax period, whatever tax you have paid under section 76 will be adjusted. Now after the adjustment, such amount actually has to be given as refund to the person who has borne the insurance. Just now we have discussed. When that excess 7% does not belong to the assessee, it equally does not belong to the government. So that should be given as refund to the customer. Right? But if at all the customer does not come forward, then that amount will be transferred to consumer welfare fund. If no one comes forward, supposing that surplus amount is 10 crores, out of which 3 crores is given to the customers, the notice was given, general notice was given, and a few customers came forward and they applied for refund of 3 crores. It is given. Balance 7 crores, government will transfer from one pocket to another pocket. They will transfer from a bigger pocket, which is Consolidated Fund of India, to a smaller pocket, which is Consumer Welfare Fund. So that is all about your section 76. And friends, when you talk about section 77, it's a very simple concept. You have to read section 77 of CGST read along with section 19 of IGST Act. Right? It tells in a very simple manner, if at all your supply is, you have wrongly determined the tax liability. If at all it was interstate supply and you treated it as intrastate supply. So if at all it is interstate supply but you treated it as intra-state supply and you ended up paying CGST plus SGST. Or ulta scenario, if it was intra-state supply but you treated as interstate supply, you ended up paying IGST. Now what is the action that you need to take? Here they tell that first to pay the correct tax. First to pay IGST, pay the correct tax. Right? No interest. Normally interest will be there but without interest. Pay without interest. Second, claim the refund of CGST plus SGST. Here also same logic. First pay the correct tax. It should have been intra-state supply. So you should have paid CGST, SGST. Now you pay correct tax. CGST plus SGST. Again, without interest. Later point of time, claim the refund. After you pay the correct tax, claim the refund of wrong tax paid, which is claim the refund of IGST. So they are telling that if you have wrongly determined the liability, instead of IGST, if you ended up paying CGST, SGST, first pay IGST without interest, then claim the refund of CGST, SGST. Or if it was intra-state supply, but you did it as interstate supply, you wrongly paid IGST, then first pay the correct tax, CGST, SGST without interest, then claim the refund of wrong tax paid, IGST. So that is section 77 of your CGST Act, read along with section 19 of IGST Act. Now let's talk about the next stage where you are talking about your recovery. Basically recovery provisions are governed in your section 78, 79. Now what is section 78 telling? After you get an order, you are required to either pay the dues or go for appeals. If at all you are talking about paying the dues, you have to make sure that you have to pay within 3 months, because that is the first appeals time limit. So you have to either pay your dues or go for appeals. When you go for appeals, please understand that at the first two levels, appellate authority and appellate tribunal, you have to pay a pre-deposit, right? And the moment you pay that pre-deposit, recovery proceedings will be stayed. But if at all you don't pay and you don't go for appeals within time of 3 months. Why I am telling 3 months? Because 3 months is the time limit for filing first appeals to appellate authority. Then recovery proceedings will be initiated. Now, for reasons best known to the officer may record the reasons in writing and tell that normally there is a 3 months time limit either to pay the dues or to go for appeals, only then recovery will start. But officer, for reasons recorded in writing, may reduce this 3 months, also telling that no, this assessee will run away. It will be difficult to recover the dues, so we are starting recovery without waiting for 3 months. So normally, for recovery to start, you have to give an opportunity to the assessee for 3 months to decide whether he intends to pay the dues, close the chapter, or he intends to go for appeals. But at times, proper officer may reduce that particular time limit. And as far as appeals you are concerned, in the first two levels, you have to pay a pre-deposit and recovery will be automatically stayed. In the next two levels, High Court and Supreme Court, recovery will not be automatically stayed. You have to pay the entire tax dues as pre-deposit. Recovery proceedings will be stayed only if High Court or Supreme Court directs. So in the first two levels, you have appellate authority, appellate tribunal, where you have to pay a certain pre-deposit, automatically stay of recovery will be there. In the next two levels, High Court, Supreme Court, you have to pay entire dues, full dues. And if you are not paying full dues and if you don't want recovery to happen, you should apply to High Court and Supreme Court separately for stay petition, stay of recovery. Now, what will be the modes of recovery? Assume that within the 3 months time you don't pay, you don't go for appeals, now recovery will start. Now you need to understand that when you are talking about modes of recovery, you have to bifurcate them into 3 categories. First category, first 5 points. Second category, first 4 points rather. Second category, you are talking about last 2 points, and the third category, the 5th, 6th and 7th point. Now understand that recovery will attach all your assets. Whatever possible assets you are having, they will try to recover from you. Now, if at all you have to pay something to the government, therefore government is going for recovery, and if at all they owe you something, they have to give you some refund or they owe you some amount. They owe you some. When I tell they owe you some amount, it need not be only GST department. If at all the amount is owed by any government, if the amount is owed by any government, central government, state government, union territory, local authority, or a board or a corporation or country controlled by central government, state government, union territory or local authority. If government is owing you some amount, not only the dues of GST, but also there are some other dues. Supposing there is an income tax refund, so you are required to pay 10 crores dues. Out of it, GST refund to you is say 50 lakhs and income tax refund is 20 lakhs. So what they will do, they will not give those refunds. So you owe 10 crores to the government, GST department has to give you 50 lakhs, that will be adjusted. Income tax department has to give you 20 lakhs, that will be adjusted. So whatever refund or any other amount that government is owing you, not only GST department but also other departments, not only departments, I'm going to income tax department, it may be some other department of government or government controlled companies is also covered. So there's a government company which is required to pay you some amount, there's a government corporation or board which is required to pay you some amount, they will not pay you, that will be adjusted, right? So that is the first way they are going to try to attach those assets. In the balance sheet of this particular person, you will find that these are all receivables. Refund will be under current assets. Receivables from income, refund under income tax is also under current assets. Receivable from government body is also under current assets. Receivable from government company, government board, government corporation is also under current assets. So they will be all adjusted. Then the next way is to sell the goods. To sell the goods, whatever is in the control of proper officer or specified officer. Specified officer, just now we have discussed. Specified officer is any officer of central government, state government, local authority or union territory, or any officer of government board, government corporation or government company. So they are going to sell your goods. Whatever goods are available with the GST officer as well as the specified officers that we have discussed will be sold. They will also sell all the other movable and all the other movable and immovable properties. So whatever dues you have from the government or government board or government corporation or government company, that will be adjusted. Whatever goods you have under the control of proper officer or specified officers, that will be sold. Whatever movable, immovable property you have, that will be attached and sold. And for the other receivables, what will be other receivables generally? Your other receivables will be your sundry debtors, your investments in shares, securities, your loans, advances given to others, etc. All the other assets, garnish proceedings will be happening. So all the, supposing I am the person who is to pay say 10 crores to the government, I have my sundry debtors, I have given loans to a few companies and friends, I have my investment in shares, securities, I have my investment in chit funds, etc. To all those persons who owe me some amount, government will give garnish notice, and it will tell in garnish notice telling that you don't pay this person so and so amount, you pay us. So garnish notice will be given to my sundry debtors, garnish notice will be given to my shares and the companies in which I am having shares and securities, garnish notice will be given to the person to whom I have given loans and advances, garnish notice will be given to banks with whom I have fixed deposits. Garnish notice means that amount the other party will not pay me, they will be asked to pay to the government, and if they don't comply with garnish notice, they will be treated as a person who has to pay to the government that amount. Garnish notice. To all my other receivables, let it be sundry debtors, let it be investment in share securities, investment in others, investment in chit funds, let it be fixed deposits, let it be insurance claim, to all these persons, garnish notice will be sent. So basically you are talking about attachment of all your assets. Then if at all someone has given surety for me, government will recover even from that person as if he was a defaulter. If at all my company is going for liquidation, government will give notice to the liquidator, and liquidator has to pay the government as given in section 88 of GST Act. So that is also that. So recovery from others is also that. Now we are talking about government has tried normal recovery, which is point number 1, attaching all my assets, or touching my surety or liquidator, asking my surety to pay or asking the liquidator to pay if the company is under liquidation. Then if at all nothing is possible, what government will do? Government will now ask the collector to collect the amount as arrears of land revenue by giving a certificate of dues. So government will go to the collector will give a certificate of dues, and that amount will be recovered as arrears of land revenue. Or magistrate can collect that amount as fine imposed by magistrate, or government can go to court and get that amount as an execution of decree. So then the final recovery can happen through the collector or the magistrate or the court. Collector will give a certificate that these are the arrears of land revenue and these needs to be collected. Magistrate will collect the pending amounts as fines imposed by the magistrate, or court will give an order to recover the balance amount. So this is the last resort that you have. So that is all about the 3 stages. Then there is a 4th stage, which is a clarification. This stage is a clarification. So you are talking about certain clarifications. Now what is a certain clarification? If at all Reliance Limited is having multiple registration, right, recovery can be done from distinct persons located in different states. If at all there is recovery from Reliance Limited Maharashtra, it can be done from Reliance Limited Delhi as well, because after all it is Reliance Limited. So if there is a recovery action against Reliance Limited Maharashtra, the amount can be collected from Reliance Limited Delhi, because after all they are one and the same company. PAN number is the same. So that is a clarification given here. And next clarification is, if any dues of central government are unpaid, even state government can collect as if they are arrears of state government and then share it to central government. So one government helping the other. If there is a due of CGST, even state government can collect it and give it to central government. If there is due of reverse also is true. If there is a due of SGST, central government can collect it and give it back to the state government. So that is again clarified here. So that these are the modes of recovery given under section 79. Now friends, we are talking about other aspects of recovery. The first of that other aspect is section 80, where you are talking about the assessee is ready to pay the amount, but he is telling that I don't have the financial capacity. Please give me an opportunity to pay in installment or to defer my payment. So assessee is making a request to whom? Not a normal person, to the commissioner. Assessee is making a request to the commissioner. So this request is by eligible taxable person. Who is eligible taxable person? It cannot be any person, and this request is to commissioner. When you talk about eligible taxable person will not include if a taxable person has already defaulted payment for which recovery is going on, then he cannot go for this option. If there is a taxable person, against him another recovery, old recovery is going on and he has defaulted in that old recovery payment, he cannot go for this facility. If the taxable person was not allowed this installment or deferment facility in last year, current year also he cannot go for it. If the amount is very small, 25,000, he cannot go for it. In these 3 cases, you cannot go for section 80. Why? The taxable person, you understand the amount. The last point is the amount is very small amount, less than 25,000. So small amount will not be entertained. The first 2 points, the taxable person has failed to pay the old recovery dues. So there was an old recovery also against the same taxable person, and he has failed in paying those recovery. So this time recovery, second recovery, he will not be given installment or deferment facility. Or last time also for old recovery he came for installment facility or deferment facility, but he was denied. So in the last year, if he was denied installment or deferment facility, this year also he cannot come. Now, why will taxable person go to commissioner? He will go to commissioner because of 2 reasons. Either he wants time for payment, deferment, or he wants to pay in installment, but the installment cannot be more than 24. So maximum monthly installment can be up to 24 monthly installment. So commissioner is also having the right only to give installment up to 24 monthly installment. Either he is asking for some time or he is asking to pay in installment, but that maximum installment, monthly installment cannot be more than 24. Now understand that this request will be made by assessee and order will be given by commissioner. When you talk about commissioner's order, it is a discretionary order, which means a commissioner may allow, commissioner may not allow. If he wants, he will give the installment facility. If he does not want, he will not give this installment facility. And you will see in appeals and revision that these are non-appealable orders. It cannot be challenged. If commissioner is telling that no, I am not interested in giving you deferment facility or installment facility, you cannot challenge the same. But before giving the order, commissioner surely will call for the report from the jurisdictional officer to understand whether really this taxable person is going to through financial crisis. This facility is only for a person who is having financial crisis. So he will call for a report from jurisdictional officer understanding the financial ability of the taxable person. Now, few important things to note. This deferment facility or installment facility will not alter the interest. Interest will keep on increasing. The later you pay, the more the interest. The later you pay, the more the interest. Also another important point, very important point. If at all you are not paying any one installment within time, if even a single installment is paid after the due date, then you are out of this section 80. The balance outstanding amount will be due immediately and they shall be forcefully recovered. So when you are given a deferment facility or installment facility and you don't pay on time even for a single installment, you are immediately thrown out of section 80. Though there was an order given by commissioner to give you deferment facility or installment facility, but if you are not sticking to the order, you did not pay in time or you paid an installment after the due date, you are out of this facility. Balance amount whatever is payable will be forcefully recovered without giving you any further notice. So that is all about your section 80. Now talking about your section 81. Section 81 tells that certain transfers will be held as void. If at all recovery is happening against you and you want to run away, you are selling all your assets and running away, those sale of assets will be treated as invalid, void ab initio. So certain transfer of movable property or immovable property will be treated as void. For a very simple reason that when there is a recovery going on against a person, he might sell those assets and run away. So those assets when sold, they will be treated as not sold at all. Though the assets are with some other person, they will be recovered from the other person also. So you have to be very careful when you are talking about the section 81. Now what is the scenario? Where a person against whom the recovery has become due. Where a person against whom the recovery has become due, the payment has become due. After the amount has become due, what he is doing? He is creating a charge or parting with the property. He is trying to sell those assets either by creating a charge or selling those property by way of sale, mortgage or any other mode of transport with an intention to defraud the government. What his intention is? So that when recovery is happening against him, he can tell that he is not having any assets, he is not having any cash. When assets itself are not there, he will tell that okay, you want to attach anything and everything you can attach, but I don't have the assets. Supposing that person against whom recovery is of 10 crores and he is having assets of say 15 crores, he has sold all the assets and there's no money with him now, like he has even kept the money outside India. Now he will tell that attach whatever you want, right? Clearly he is selling all these assets to make sure that he is not paying a single paisa to the government with an intention to defraud the government. Now what government is telling? Whatever charge or sale or transfer you have done, it will be treated as void. Which means, if I am the person against whom recovery has happened, I have sold all my assets to you. Obviously, now assets are not belonging to me, they have been sold to you. So when government is coming to me, I tell that I don't have assets. Government sees that in the last 1 month or 2 months, I have sold all my assets to various persons. Right? 3 or 4 persons of you, government has finds that you are all the buyers to whom I have sold the assets. They will go to you and tell that this transfer that this person has done is void. And now those assets will be recovered from the other person. Those assets will be recovered from the other person. Obviously, if you look from one angle, you will feel sorry for the other person because they have paid the amount. They have paid the amount. But still government will tell that no, there was a recovery against this particular person. In order to escape recovery, he has sold you all the assets. Now, though he has sold you all the assets and taken the amount, we will treat that sale as invalid and we are taking those assets from the other person. Now you will feel for the other person because he is nowhere in picture. Now for the other person there is an exception which is given. What is the exception? That transfer or charge will not be treated as void, which means it will be valid if the other person, now because the assets are collected from the other person who has nothing to do with this recovery, if the other person wants to be safe, what he has to prove? Either he should have taken the previous permission of proper officer before purchasing those assets. So he has two options. When the other person wants to play very safe, he has to either take the previous permission of the proper officer and tell that I am purchasing from so and so company, which we have heard he has to pay many dues to the government. So he is to take previous permission of the proper officer. Or normally this previous permission of the proper officer is very rare. But at least he can escape with the second point. The other person has taken or purchased the asset for adequate consideration. Second, in good faith. Third, without notice of such proceedings against the person. So he has to prove that he has paid adequately good amount. Plus he has paid in good faith. And he did not have any knowledge of any recovery against the seller. So he has to prove that he has, and this first condition is very important, adequate consideration, which means if a 10 crore property is sold for 2 crore, then that is not an adequate consideration. If at all the other person wants to tell that no, I will not give this property if this I have purchased, so he has to prove that he has given adequate consideration, reasonable consideration. If 10 crore property is sold for 2 crores, it is not adequate. So if 10 crore property is sold for 9.5 crores, then it is adequate consideration. Good faith. Plus the other person has to prove that he is not having any knowledge that there is a recovery going on against the seller. So if he proves these 3 conditions, then this transfer will be treated as valid. Government cannot attach the assets from the buyer of the person against whom recovery is on. So that is all about section 81. Now coming to section 82. Section 82 is about who will have the first charge on the property of the person against whom recovery is going to happen. Now, section 82 clearly tells that notwithstanding contrary to any provisions under any law, GST dues will have the first charge over the property of the person. So, GST department will have the first charge over the assets of the person. But there is an exception here, except insolvency and bankruptcy code. So if at all you are talking about insolvency and bankruptcy code, a person who has become insolvent or bankrupt, that person first actually the dues are to be paid to banks and financial institutions, then to preferential creditors like workmen dues, and finally then you will have GST dues. So when you talk about charge, GST department will have first charge. If it is a normal person, if you are not insolvent or bankrupt, GST dues will be having first charge. But if you are an insolvent or a bankrupt person, then the first charge will be of banks and financial institutions, followed by your workmen dues, preferential creditors. Then there will be crown debts, GST dues and other income tax dues will come there. So that is all about section 82. Now section 83 is a very peculiar section. It is telling that to protect the revenue, there can be provisional attachment, which means, see, this is actually between show cause notice and demand order time limit. There is a show cause notice, but there is no demand order, it is pending. So you are talking about this time. Between show cause notice and demand order, it will happening. So there is a proceedings which is initiated either against chapter 8 assessment or chapter 12 which is assessment, or chapter 14 inspection search seizure, or chapter 15 the demand and recovery. So there is some proceedings which is started. It may be against chapter 12. Previously it was against certain sections. Now it is against all the provisions of that chapter. Chapter 12 you are talking about assessment, or chapter 14 inspection search seizure, or chapter 15 demand and recovery. So there is some proceedings initiated against 12, 14 or 15, and commissioner wants to protect the interest of the revenue, which means you are talking about this, you are feeling that this person will run away. So for protecting the interest of the revenue, you are going to the commissioner, and commissioner is telling that okay, provisionally attach the property including the bank account of the taxable person, also his co-culprit, not only of the taxable person but also of his co-culprit, section 122(1)(a). So it is not only talking about taxable person, this can be initiated even against the co-culprits, right? The transporter's warehouse keeper who has helped the owner to evade the tax. Now they are telling that notice is given, any proceedings is started, but conclusion is not arrived. Plus commissioner is having a feeling that if this provisional attachment is not done, this person will run away. So he'll provisionally attach the properties of all the taxable person who is to pay, also of the co-culprits, which is covered under section 122(1)(a). Now understand that if the attached property happens to be hazardous property or perishable property, then you have an option to pay the lower of market value of such property or the dues payable. To pay the lower of market value of that property, whatever is the market value, or dues, whichever is lower, and release it. Or if you are not paying it, either you have to pay or give the surety security. If you are not paying or not giving surety security, the property will be disposed of and the amount realized will be adjusted against the dues. So if it is hazardous property or perishable property, you have two options. First, pay or give security for what? Lower of market value of that perishable goods, hazardous goods, or the dues, whichever is lower, you pay the amount, or the property will be sold and the dues will be adjusted against the amount realized will be adjusted against the dues. Understand that when you talk about release of property, when the property will be released, the copy of order will be sent to the person. Understand that there is no principle of natural justice. Here you are not giving any opportunity. After attachment is done, you will be given a copy. He may file an objection that his property is not liable to be attached, and commissioner after hearing may release the property. So understand that here there is no principle of natural justice. Directly provisional attachment will be done. Then the copy of provisional attachment order will be sent to the person. He may have certain objections which he can file to the commissioner, and he can tell that his property should not be provisional. Provisionally attached means government is not becoming the owner, but he cannot do anything with the property. When you are talking about provisional attachment, government does not become the owner like final attachment. But this property still belongs to the owner, but he cannot do anything with the goods. He may file, that the owner may file objection after the provisional attachment order, and commissioner, if he is satisfied, may release the provisional attachment. Or if commissioner is not satisfied, provisional attachment cannot be for more than 1 year. Provisional attachment cannot be more than 1 year. So here either there was a request by the assessee to consider the provisional attachment, and commissioner has said that okay, provisional attachment is not required, or later on commissioner satisfied that provisional attachment is not required. So when you talk about commissioner, there are two situations. Either when assessee has said that provisional attachment should not be done, he is satisfied that it should not be done, he has released. Or later on, not at the beginning, later on commissioner feels that no, provisional attachment is not required, he may release it. Or third situation, commissioner is not doing anything. The third point is signed to tell that provisional attachment cannot be more than 1 year. The moment 1 year time is over from provisional attachment, then it is invalid. After that, assessee can do anything with the goods. So that is all about your section 83. Now you are talking about your last provision of recovery, section 84, which is continuation and validity of certain recovery proceedings. Now understand that there can be two situations. You are talking about, basically you are talking about notice of demand, NOD. That is recovery notice in respect of tax, interest, penalty and other payments is served upon a person, and an appeal or revision application is filed, or other proceedings are initiated against such government dues. So you are talking about, basically let us understand this in a very simple manner. If in appellate authority, the higher authority are increasing those dues, if at all recovery is happening, there will be a notice of demand. Notice of demand. And you may file an appeals and other proceedings will be there. So if you are going for appeals, and if the government dues are enhanced in appeals, if assessee was going in appeals, so initial recovery was of 10 crores, demand was of 10 crores, not recovery, demand of 10 crores. Appeal said that it is not 10 crores, it is 12 crores. Now understand that for the original 10 crores, recovery will resume automatically. For the extra 2 crores, recovery will start only after fresh notice of demand. If at all the original demand was 10 crores and you went into appeals, now it is 12 crores. For the original dues, there is no need of fresh NOD. Notice of for demand recovery is already started. So there is no need of any fresh notice of demand, automatically recovery still start. For the enhanced dues, for the extra 2 crores, first before recovering it, you have to be given a fresh notice of demand. Recovery notice will be first given. If at all, in appeal proceedings, the dues are reduced. So original demand was of 10 crores, now it is of 8 crores. Obviously, now 8 crores, for 8 crores already recovery notice was given. So now recovery will resume without any fresh NOD. So if 8 crores, if 10 crores becomes 12 crores, for 10 crores, no notice of demand. For 2 crores, fresh notice of demand, fresh recovery notice. If 10 crores becomes 8 crores, automatically 8 crores will start without any fresh notice of demand. Recovery notice was already given. So that is everything about your recovery chapter. Yes, now let's discuss about your appeals and revision. Now before we take up your appeals and revision master summary chart, we'll first try to understand the setup, administrative setup, when you talk about your GST, first you have your Government of India, then you have your Ministry of Finance, then you have your Department of Revenue, followed by your administrative body, which is Central Board of Indirect Taxes and Customs. So GOI, Ministry of Finance, Department of Revenue, CBIC, Central Board of Indirect Taxes and Customs. Then you have two wings basically. One is your investigation wing and one is your administrative wing. When you talk about your administrative wing, you have first Principal Chief Commissioner, followed by Chief Commissioner, followed by your Principal Commissioner, followed by Commissioner, and opposite to Commissioner there will be someone called as Commissioner Appeals. Will not be part of adjudicating authority, it will be Commissioner Appeals. Then you have your Additional Commissioner, Joint Commissioner, and opposite to Additional Commissioner, Joint Commissioner, again there will be Additional Commissioner, Joint Commissioner, Appeals. Then you will have your Deputy Commissioner, Assistant Commissioner, finally Inspectors. So Principal Chief Commissioner, Chief Commissioner, Principal Commissioner, Commissioner, opposite to that Commissioner Appeals. Joint Commissioner, Additional Commissioner, Joint Commissioner, Additional Commissioner, Appeals. And finally you will have Deputy Commissioner, Assistant Commissioner and Inspectors. Now understand that they are all together called as adjudicating authority. They will pass the adjudication order. So all these authorities other than appeals, they are called as adjudicating authority. In your investigating wing, you will have Principal Director General, Principal DG, then you will have Director General, DG, then you will have Principal Additional Director General. So in just the rank of Principal Chief Commissioner, it is Principal Director General. Chief Commissioner, it is Director General. Principal Commissioner, here it is Principal Additional Director General. There Commissioner, you have Additional Director General. Then the same ranking, Additional Directors, Joint Directors, Deputy Directors, Assistant Directors, and finally Inspectors. So this is the entire your structure, internal structure of department. And who are called as your adjudicating authority? All the administrative officers other than appeals, they are called as adjudicating authority. Now talking about your appeals basic structure. So whenever there is an order of your adjudicating authority, we have discussed who is adjudicating authority. Whenever there is an order of adjudicating authority, now assessee can start appeals, even department can start appeals. Department will be guided by Commissioner. So assessee first will go to your appellate authority, then you are talking about appellate tribunal, then you are talking about your High Court, and finally you are talking about your Supreme Court. So you are talking about appellate authority, appellate tribunal, High Court and Supreme Court. So when assessee is going to appellate authority, assessee has to pay something called as pre-deposit, and the time limit for assessee is 3 months plus 1 month. When assessee is going to appellate tribunal, there also assessee has to pay pre-deposit, and the time limit there is 3 months plus 3 months. So first time limit is 3 months plus 1 month, then it is 3 months plus 3 months. Then you are talking about High Court, 180 days plus extension. Here entire amount should be paid full payment when you go to High Court and Supreme Court. Not a particular percentage of tax that you have to pay as pre-deposit. Entire payment should be made full payment when you go to High Court and Supreme Court. Supreme Court time limit will be decided by Supreme Court rules. The same way you have department time limit. Again, there also you have something called as appellate authority, appellate tribunal, High Court, Supreme Court. Right, but one change is in the first level. If at all you miss the first level, first bus, in the first level there are two things, appellate authority or revision authority. So department in the first level is having two chances, two innings. The first level time limit is 6 months plus 1 month, and after 6 months if you miss appellate authority, you can still think of your revision authority after 6 months but up to 3 years. So in the first level itself, department is having two innings. One is appellate authority, 6 months plus 1 month. 6 months plus 1 month, then you are talking about your revision authority, which is after 6 months but within 3 years. Now when you talk about the second level, you are talking about appellate tribunal. Here department is having time of 6 months. If you see assessee's time limit 3, department 6, Extension is same. First level, first appeals extension is 1 month and second appeals extension is 3 months for both department as well as assessee. Then you're talking about your High Court and then you're talking about your Supreme Court. High Court 180 days plus extension. Supreme Court it will be decided by Supreme Court rules. But here when department is going for appeals, obviously there's no question of any pre-deposit or any payment. So that you need to remember. So this is a basic outline when you talk about your appeals. Now let us first start with your appellate authority. So when you talk about first appeals, it is appellate authority or revision authority. Your first appeals is either appellate authority or your revision authority. Appellate authority can be either assessee can go for appellate authority or department go for appellate authority. But revision authority only and only department can go. Only and only department can go. Assessee cannot go. In the first appeals, department is having 2 innings. Appellate authority, if not revision authority. But assessee is having only 1 innings, appellate authority. So when you talk about your appellate authority, appeals to appellate authority, there is an order of adjudicating authority. And if you see the meaning of adjudicating authority, we have already discussed the meaning. Adjudicating authority means any authority appointed to pass orders or decision, but will not include many bodies. It will not include CBIC because it is an administrative body. It will not include A square or A cube R. They are there only for advanced ruling. It will not include appellate authority. It will not include revision authority. It will not include appellate tribunal. They are all appeals authorities. Appellate authority first level. Appellate revision authority first level for department second innings. Appellate tribunal second level. Anti-profiteering authority, which will take care of anti-profiting matters. So these bodies will never be your adjudicating authority. So your adjudicating authority will be normal officers, but they will not include what all things. They will not include your CBIC, which is an administrative body, your appellate authority, your revision authority, your appellate tribunal, your anti-profiteering authority, your A square R advanced ruling authority, A cube R appellate authority for advanced ruling. They will not be included there. Now there is an order of appellate authority which is there. If the assessee is agreed, he will go for appeals. If department is agreed by their own order, officer's order, then commissioner will challenge. Understand that department going for first appeals is very special because there is an order passed by the department, but department is not happy with their own order. So commissioner is asking their own officer to challenge their own order. Now when assessee is filing appeals, you need to understand that assessee has to pay pre-deposit. Assessee is required to pay a pre-deposit. Now what amount of pre-deposit is required to pay at first levels? He has to pay 100% of admitted dues. So whatever he is admitting, he has to pay everything. Whatever is disputing, he has to pay 10% of the tax. And if it is CGST, the amount cannot be more than 25 crores. If it is SGST, the amount cannot be more than 25 crores. If it is IGST, the maximum amount is 50 crores. So if it is disputed dues, you have to pay tax plus interest plus penalty 100%. If it is admitted dues, for admitted dues you have to pay 100% of tax, interest, penalty. For disputed dues you have to pay 10% only and only of tax. Then that too, that's an upper limit. CGST cannot be exceed 25 crores, SGST cannot exceed 25 crores and IGST cannot exceed 50 crores. And there is a special pre-deposit for penalty under section 129. If at all there is a penalty under section 129, that is only penalty, there is no tax. Then you have to pay a pre-deposit of 25% of penalty. So under section 129 there can be only penalty, there cannot be tax. So this won't work out. This was a new addition later on, thinking that in section 129 there is only and only penalty. If there is no tax, you will escape. So they are telling that if you want to challenge that penalty, pay 25% of the penalty. So that is that. So the moment you pay the pre-deposit, please understand that automatically there will be stay on recovery. The moment you pay the pre-deposit, your appeals will be heard and automatically there will be stay on recovery. Recovery will not start. And what is the time limit within which you have to go for first appeals if assessee is going? 3 months plus 1 month. 3 months plus 1 month. And the same case if department is going, please understand everything changes. Why department will challenge their own officer's order? First thing you need to understand that commissioner is not satisfied with the legality of the order or proprietary of the order. Commissioner thinks that the order is illegal or improper. Right? He is asking his subordinate officer to challenge his own departmental officer's order to appellate authority. And here there is no concept of pre-deposit, and the time limit which is given here is more. It is 6 months plus 1 month. For assessee it is 3 months plus 1 month. Extension is the same. For department it is 6 months plus 1 month. So that you need to understand. And when you're talking about who is going to hear the appeals, if at all you're talking about orders of assistant commissioner, deputy commissioner or superintendent, then the appeals will be heard by joint commissioner appeals. If the orders of lower authorities, that is the deputy commissioner, assistant commissioner and inspectors, joint commissioner appeals will hear it. If it is by additional commissioner, joint commissioner, then the appeals will not be heard by joint commissioner appeals, it will be heard by commissioner appeals. And before any order is passed, there will be principle of natural justice, opportunity of being heard if at all there is an adverse order against assessee. How many adjournments will be given? Each of the party will be given 3 adjournments. And if appellate authority wants, a very special point, they may admit additional grounds. So on what basis you are fighting your case, that is called as ground. Admission of additional grounds is allowed by appellate authority if at all appellate authority feels that the omission was not willful and it is not unreasonable. So omission is not willful. You willfully did not omit it, and it is not unreasonable case. So your appellate authority can admit additional grounds. On what basis a person fights a case is called as ground. Additional grounds can be admitted. Now understand that they have also given the time limit within which the appellate authority has to pass the order, but that is not a mandatory time limit. Time limit is preferably within 1 year, excluding the stay period. So it is not a mandatory time limit, preferably within 1 year they have to close it. What types of orders they will pass? Either they will confirm the order of adjudicating authority, or cancel the order of adjudicating authority, that is annul, or modify, increase or decrease the order of adjudicating authority. But a very important point, your appellate authority cannot refer back the case. Remanding back the case to the adjudicating authority is not possible. And whenever you are talking about, friends, increasing the amount, the moment the amount is increased, if the liability is increased, see what types of orders can be there: confirm, decrease, increase, cancel. Right. So when you talk about increasing the liability, it has to be passed only within the time limits of section 73-74 after opportunity of being heard. So the moment you are talking about increasing the liability, for that also show cause notice should be given for increasing the liability. Notice time limit, and it should be within the time limits of section 73-74. So that you need to remember. And also understand that if at all assessee wins, if assessee has filed the appeals, he has paid pre-deposit, and if assessee wins, whatever pre-deposit if he has paid, if at all he has paid any pre-deposit, then that will be refunded with interest. But important point, interest will start from the date of pre-deposit, not after the completion of 60 days. So a logical calculation. If assessee has filed the appeals, he has paid pre-deposit, now he is winning the appeals, then the pre-deposit amount will be refunded with interest at 6% per annum, right from the date of deposit till the date of refund. Logical calculation. So that is all about your appellate authority. Now as discussed, when you talk about your revisional authority, it is nothing but first appeals, second innings to department. It is nothing but first appeals, second innings to department. It is opportunity is given only and only to department, not to assessee. So there is an order of adjudicating authority, right? And that order, what is happening? This revisional authority, either on own motion or on the information received or on the request of the commissioner, it is finding that the order is illegal or improper. So the revision authority is opening up the case either on own motion or on information received or on request from the commissioner. On motion, on own motion, or information or request received from commissioner, it is opening up the case. Now what is found on examination by revisional authority, or as a consequence of observation of Comptroller or Auditor General of India, revision authority finds that the officer's order is prejudicial to the interest of the revenue. It is against the department and it is illegal or improper, or material facts which are available at the time of issuance of order were not taken into account. So first, how the case is opened. Either revision authority on its own or on the request by commissioner will open up the case. Now what are the findings? Either revision authority finds or CAG, Comptroller and Auditor General of India, observes that the subordinate's order is against the department, plus it is illegal or improper, or whatever material facts are available at the time of giving the order were totally ignored, then the case will be opened up. The case will be opened up. Now who will be the revisional authority? Understand that if the order is of Assistant Commissioner, Deputy Commissioner, Superintendent, revisional authority will be Additional Commissioner, Joint Commissioner. Here appeals will not come. If the order itself is of Additional Commissioner, Joint Commissioner, revisional authority will be Principal Commissioner or Commissioner. So here understand that your appeals concept will not come. It is either the revision authority is either your Additional Commissioner, Joint Commissioner, or your Principal Commissioner or Commissioner. Now what action revision authority will take? The action which will be taken by revision authority is it will stay the operation of such order. It will make sure that that order is not considered, and after providing an opportunity of being heard, pass the order either enhancing the liability or modifying it or annulling such order. Either there will be an enhancement because it is against the interest of the revenue, it will be enhanced, or the order will be cancelled. The lower officer's order will be first put on stay, and finally when the order comes, either it will enhance the order or it will cancel that lower officer's order. Now finally we are talking about certain cases where revision authority cannot enter. Cases where revision authority cannot exercise its powers following other cases. Now what are the cases? If you see the first 2 points, it is talking about revision authority can enter only after 6 months and only up to 3 years. It can enter only after 6 months and only up to 3 years. Period for filing of appeals to appellate authority has not expired. If at all, department can go to appellate authority, department should not use this revision authority. So it should make sure that the period for filing of appeals before appellate authority has expired, which means has not expired. If it is not expired, go to appellate authority. If it is expired, come to revision authority. And 3 years have expired after the passing the order which is sought to be revised. So from the date of original order, 6 months should have crossed. It should have crossed 6 months, because if it is within 6 months, department can always think of appellate authority, and it should not have crossed 3 years. So after 6 months, but within 3 years. Now following will be the time limit which will be excluded in calculating 3 months. Very logical calculation. If the decision or order involves around an issue which the appellate tribunal or high court has given its decision. So if at all the subject matter is already decided by appellate tribunal or high court in some other company's case, not in your own case, in some other company's case, if in some other company's case what has happened, appellate tribunal has given a judgment on the same matter or high court has given a judgment on the same matter, then the time limit between appellate tribunal order to the next level high court order, or the time limit between high court order and the next level supreme court order will be excluded. Why? When the subject matter is already decided by appellate tribunal pending for high court, the time limit between appellate tribunal and high court will be removed, because revision authority will not take any judgment. If already the subject matter is already decided by high court, now it is decided, it is pending at supreme court. The time between high court order and supreme court order, revision authority will not do anything, because it is a lower authority, though it is in some other company's case. Though it is in some other company's case. The second exclusion is where there is a stay order given by court, appellate tribunal or court in your own case. Here you are talking about own case. So what is happening is, if in your own case there is a stay order, office of the revision authority cannot do anything, you have to add the time limit. See, when you are calculating 3 years, this time limit will be added. When I tell the time limit is excluded, it means it will be added back. In your own case, there is a stay given by tribunal or high court or supreme court, then that time limit will be added to 3 years. In some other company's case, this on the same subject matter, the matter is already decided by appellate tribunal pending at High Court, or the matter is already decided by High Court pending at Supreme Court. So time gap between appellate tribunal order and the High Court order, or the time gap between the High Court order and Supreme Court order will be added back to that particular 3 years. So that you need to understand. Logical. Why? Because during this time, revision authority cannot do anything. In your own case, if it is stay, revision authority cannot do anything. In some other company's case, if the matter is pending at High Court or Supreme Court, revision authority cannot do anything. Now, you're talking about other cases where revision authority cannot entertain the subject matter. Order is subject to an appeal before appellate authority, appellate tribunal, High Court or Supreme Court. In a very simple understanding, this order is already gone in the normal appeals, appellate authority, appellate tribunal, High Court or Supreme Court. When a subject matter is already touched by appellate authority or appellate tribunal or High Court or Supreme Court, revision authority cannot entertain that. A new subject matter can be entertained but not the old authority. Supposing you're talking about there are two issues. Supposing there are two issues in a particular case. Issue 1, issue 2. Now issue 1 is already taken up in your appellate authority, then appellate tribunal, then High Court, then Supreme Court. So issue 1 is already taken up. Now understand that issue 1 cannot be touched by revision authority, whereas issue 2 can be touched by revision authority. But when issue 2 is touched, there's a problem. Till the matter is decided by appellate authority or appellate tribunal or High Court, Supreme Court, revision authority will not touch it. Revision authority will touch issue 2, but after finality is given. So revision authority will touch this. There's a time limit. What is the time limit? Within 3 years of original order or 1 year from the date of appeals order. So above appeals order, whichever is later. It's not whichever is earlier, whichever is later. So the time limit for touching up issue 2 by revision authority is normal time limit. Normal time limit is what we have discussed. 3 years from the date of original order. It should be within 3 years from the date of original order of the officer, or 1 year from the date of appeals order. When I tell appeals order, I am talking about appeals order on issue 1. Because at a later point of time in appeals, appeals could have touched issue 2 as well. So till that point of time, revision authority should not touch. Revision authority should wait when the issue 1 is finally decided. Right, you have to wait till that, whichever is later, so that is given here. Now the last aspect which is given here is the order to be revised is already in revised order. Second time revision is not possible, or it is already taken up for revision. Either in both the cases you are talking about a simple scenario that you cannot take up second time revision. Second time revision is not possible. The order that you're taking up is already revised order, which means already revision order is given. You cannot take up for second time revision, or already it is pending for revision. So already it has been touched up. So second time revision is not possible. So this is nothing but the summary of your revisional authority. So we are done with your first level where you're talking about your appellate authority and revisional authority. Now friends, we are talking about your second appeals. Second appeals, you are talking about your appellate tribunal. You are talking about appellate tribunal. Recall your appellate authority. Appellate tribunal will be very, very simple. Now, who can enter appellate tribunal? Either the assessee or the department. Now, which order will be taken up in appellate tribunal? Either the order will be of appellate authority or it will be the order of revision authority. First appeals, there are two categories, right? Appellate authority, revision authority. The order which will be challenged in appellate tribunal is appellate authority's order or revision authority's order. Now, when assessee is going for appeals, it is very clear that he is required to pay a pre-deposit. So, whenever assessee is going for appeals, he is required to pay a pre-deposit. 100% of admitted dues or additional 20% of disputed dues. Not the whatever is already paid at first levels, you cannot set off that. Additional 20% of disputed tax. Not disputed dues, disputed tax. But maximum CGST can be 50 crores, maximum SGST can be 50 crores, maximum IGST can be 100 crores in the second part. Now understand that if it is a e-waybill case, section 129 case, Second time pre-deposit is not required. Only first time pre-deposit is there. So normal case, what is the pre-deposit? If at all, whatever you are admitting, it is 100% of tax plus interest plus penalty. Whatever is disputed, it is only 20% only and only of tax. That too with an upper limit. CGST 50 crores maximum, SGST maximum 50 crores and IGST maximum 100 crores. And e-way bill is special point. For e-way bill penalty, only at first appeals there is a pre-deposit of 25% penalty. For e-way bill penalty second level, there is no additional pre-deposit which is required to be there. And as already discussed, the moment you pay the pre-deposit, recovery will automatically be stayed. Now, what is the timeline in which assessee should file in the appeals to appellate tribunal? 3 months plus 3 months. 3 months basic time plus 3 months extension. And when assessee is filing appeals to appellate tribunal, there is also a fees which is rupees 1000 for every 1 lakh subject to maximum of 25,000. If I tell that the subject matter is of 10 lakhs, so for every 1 lakh rupees, 1000 are part thereof. So 10 lakhs it will be 10,000. If it is 10 lakh 50,000, so rupees 1,000 for every 1 lakh or part thereof. So it will be 11,000. But if it is say 50 lakhs, then for every 1 lakh it is 1000. So for 50 lakhs it will be 50,000. But maximum fees here is 25,000. So it will not be 50,000. It will come back to 25,000. For every 1 lakh rupees or part thereof it is rupees 1,000. And maximum fees cannot be exceeding 25,000. If any amount is coming more than 25,000, restrict it to 25,000. So that is when assessee is going for appeals. Can department challenge the order of revision authority or appellate authority? Yes. If commissioner is not satisfied with the legality or the propriety of the order of appellate authority or revision authority, he will ask the subordinate officer to go to appellate tribunal. And certain special points. When department is challenging the order, there is no pre-deposit, there is no fees. No pre-deposit, no fees. And the time limit is doubled. Basic time limit. Extension is same. 6 months plus 3 months. For assessee, it is 3 plus 3 months. For department, it is 6 months plus 3 months. Now, if at all you are talking about appellate tribunal, who will hear of the matter? If at all you are talking about any of the subject matter deals with place of supply, even if one of the issue is place of supply, then the matter will be heard by national bench or regional bench of appellate tribunal. If no matter is dealing with place of supply, it is a very simple case, nothing to do with place of supply, then the matter will be heard by a lower bench, state bench or area bench. If the matter is heard by national bench or regional bench, it always means that one of the subject matter is place of supply. If there is one of the issue dealing with place of supply, go to national bench, regional bench. If none of the issues dealing with place of supply, go to state bench, area bench. So whenever the matter is going to national bench and or regional bench, directly from there the case will go to your Supreme Court. Directly from there the place will go to Supreme Court, which means place of supply matters from appellate authority to appellate tribunal, directly it will go to Supreme Court. If the matter is decided by state bench or area bench, then matter will go to High Court, then Supreme Court. So normal chain. First go to appellate authority. If none of the issues place of supply, it is appellate authority, then it is appellate tribunal, then it is High Court, then it is Supreme Court. If it is place of supply matter, appellate authority, appellate tribunal, Supreme Court. So that sequence you need to understand. Also you need to understand that when you talk about appellate tribunal, there is a concept of cross appeals. So whenever assessee is filing appeals, officer will give cross appeals, or officer is filing appeals, assessee will give cross appeals in tribunal. So the opposite party will file memorandum of cross objection or cross appeals. That will be within 45 days plus 45 days on the receipt of the notice. Supposing assessee is filing the appeals to appellate tribunal, tribunal will give notice to the department telling that appeals is filed, and thereafter within 45 days plus 45 days, department has to file cross appeals. Vice versa is also true. And when you talk about the orders of your appellate tribunal, whenever the orders are against the assessee, there will be an opportunity of being heard, and maximum adjournments to each of the party is 3 adjournments. Can the appellate tribunal, just like your appellate authority, take up additional grounds? Yes, this area is exactly the same. This area is exactly the Same. So whenever there's anything against the assessee, opportunity of being heard, 3 adjournments, additional grounds can be entertained if at all the omission is not willful and not unreasonable. Also, the orders which are there by your appellate tribunal, they should be preferably passed within 1 year, either confirming the order of appellate authority or revision authority, or annulling the order of appellate authority, revision authority, or modifying, increasing or decreasing the order. But a very special point here is the case can be referred back. The reference back power is to tribunal, which was not there to appellate authority. Also understand the fact that when you talk about your appellate tribunal, that is the final fact finding authority, which means if at all the question is dealing only with question of fact, you cannot go to High Court and Supreme Court, you can only finally go to appellate tribunal. Only if it is a question of law, that will be entertained by High Court and Supreme Court. Another special point is appellate tribunal can rectify its order within 3 months of passing the order if there is an error which is apparent on records. So if there is a mistake or error apparent on the records, then rectification of appellate tribunal order is possible within 3 months. And just like your appellate authority, if assessee has paid pre-deposit and if assessee wins, whatever pre-deposit was paid will be refunded back with interest at 6% right from the date of pre-deposit till the date of refund. Logical calculation. So right from the date of pre-deposit, not after the completion of 60 days, right from the date of pre-deposit. If at all assessee has paid pre-deposit and if he wins, that will be refunded with interest at 6% per annum right from the date of pre-deposit till the date of department giving you the refund. Now if you want to highlight the differences between your appellate authority and appellate tribunal, there are multiple differences. First difference, we are highlighting the differences. The amount of pre-deposit is different. Second difference, time limit is different. For appellate authority, when assessee goes, it is 3 months plus 1 month. When department goes, it is 6 months plus 1 month. Here, it is 3 months plus 3 months, 6 months plus 3 months for assessee and department respectively. Third, when you talk about your fees, when assessee goes to appellate authority, there is no fees, but when assessee goes to your appellate tribunal, there is fees. So that is the third difference which is there. Fourth, who will hear the subject matter? That the subject matter is heard by a joint commissioner, additional commissioner appeals or commissioner appeals. Here it is heard by either national bench, regional bench or state bench, area bench. So that is another difference. Fifth, there in appellate authority there is no concept of cross appeals. Here there is a concept of cross appeals. Sixth, there appellate authority cannot refer back the case. Here appellate authority can refer back the case. Seventh, appellate authority is not the final fact finding authority, whereas appellate tribunal is the final fact finding authority. Eighth, in appellate authority, if at all there is any error on the face of the records, which is very apparent on the records, rectification point is not given. Here rectification point is clearly given. So these are all the evident differences that you find in your appellate authority and your appellate tribunal. Now next, when you are talking about your High Court and Supreme Court, understand that when you are talking about your High Court, normally when you will go to your High Court, only and only when the subject matter is not dealing with 2 points, when the subject matter is dealing with question of law, High Court should be satisfied that the subject matter is involving a substantial question of law. So first, High Court should be very clear that it is dealing with question of law. First, it will formulate the question of law. First, in the first hearing, it is called as admission day. It will only formulate the question of law on which it is going to listen the case. So respondents cannot argue on any other case, any other question. So first, High Court will take up the case, hear the case, see whether there is any question of law. If there is any question of law, it will formulate that question of law. Only on that subject matter the case can be heard, not on any other subject matter. But having said so, High Court has powers to hear any other substantial question of law not formulated by it, but it is its will and wish. Normally, only the question of law which is formulated by it will be heard. But High Court is having powers to tell that okay, we will take up another question of law which was not decided initially, but now we will hear even on the other question of law. So that is the High Court power. Now, talking about going to High Court, what will happen? Normally, what matters goes to High Court? If a subject matter is not at all dealing with place of supply, the sequence is appellate authority, revisional authority, then appellate tribunal. You are talking about your state bench, area bench, and then the case goes to High Court. Understand that when you are going to High Court, you have to pay 100% of all dues. You have to pay 100% of all dues. But High Court is having powers to stay the recovery proceedings pending disposal of appeal. So, normally when you go to High Court and Supreme Court, you file. You not only file appeals, but also you file waiver application for telling that please forgive pre-deposit because you are not able to pay the entire dues, and also you will file stay petition. You will also file stay application telling that now I am not paying pre-deposit, department may start attaching my assets, so please make sure that recovery is stayed. Waiver application is to relax from pre-deposit and stay application is to relax from recovery. It may or may not be accepted by High Court, that is High Court's decision. And what is the time limit within which you have to go to High Court? 180 days plus extension which is given by the High Court. Now understand that whenever you are going to High Court, your civil procedure code will be applied there, and at least 2 judges should be hearing up the case, and the case will be decided by majority. If at all you are getting a subject matter where equal opinion is there, it will be referred to other cases. Again, simple analysis, it will be minimum heard by 2 judges and it will be decided by majority. If at all it is heard by 2 judges, one is in favor, one is against, then you will call the third judge who will tell some answer and finally it will be decided by majority. Now also please understand that High Court is having powers which is not determined or wrongly determined by state bench or area bench, which means it can take up new grounds. High Court is having extraordinary powers to take new grounds. So it can also take up an issue which was not at all touched by state bench, area bench or wrongly touched by state bench, area bench. So first understand that High Court should be satisfied that there is a substantial question of law. It will hear the first hearing that there is whether there is a substantial question of law, formulate the question of law, hear only on that question of law, but it is having powers to take any other question of law if it wants. Secondly, High Court is also having powers to take up a subject matter which was not at all touched by state bench, area bench or wrongly touched by state bench, area bench, which means taking up new grounds. That is also allowed. So that is all about your High Court. And Supreme Court, understand that there are 2 routes to Supreme Court. If a subject matter deals with place of supply, directly from your national bench, regional bench, you will go to Supreme Court. Or if a subject matter deals with other than place of supply, you will go to first appellate authority, revision authority, then appellate tribunal, then High Court, then finally Supreme Court. And even when the matter is going to Supreme Court, please understand that High Court should certify that it is a fit case for appeals to Supreme Court. So there are 2 routes. If a matter is dealing with place of supply, then from appellate authority, revision authority, it is to appellate tribunal, then directly to Supreme Court because it is dealing with place of supply. If at all the subject matter is not at all involving place of supply, first is appellate authority, revision authority, then it is appellate tribunal, state bench, area bench, then it is High Court, and finally it is Supreme Court. Here also, these 2 points are exactly the same. Please understand that whenever you are going to High Court, Supreme Court, you have to pay all the dues. You are required to pay all the dues, but Supreme Court is having powers to waive the pre-deposit and also to stay the recovery. There is no time limit which is specifically given in GST law for filing an appeal to Supreme Court, unlike the first 3 levels. It will be decided by your civil procedure code and the Supreme Court rules. So that you need to understand. So that is all about all the first 4 appeals when you talk about appeal to appellate tribunal, appeal to appellate authority, revision authority, appeals to appellate tribunal, appeals to High Court and appeals to Supreme Court. Now let's talk about other small aspects of appeals. Now before we taking up other small aspects of appeal, let's discuss something about your appellate authority and appellate tribunal that we have completed. One point that we did discuss in your appellate tribunal is there's one more difference between appellate authority and appellate tribunal, that appellate tribunal will not take up petty appeals. It will not take up your petty appeals if the amount is up to 50,000. If the amount is up to your 50,000, appellate tribunal may refuse to take up the appeal, so that we can write it as the ninth difference. It will not entertain petty appeals. Now coming back to this particular other small points, what is the date of filing of appeals when you talk about your appellate authority and appellate tribunal? What is the date of filing of appeals in appellate authority and appellate tribunal? When you file an appeal, you will be filing in a particular form, say APL 05 appellate authority, APL 05 appellate tribunal. You will be getting a provisional acknowledgement. When you get a provisional acknowledgement, what you have to do? You have to give a certified copy of the decision along with the applicable fees within 7 days of provisional acknowledgement. So the moment you file that form, you will get a provisional acknowledgement. Within 7 days, you have to attach the certified copy of the order and you have to pay the applicable fees. Fees is only there at appellate tribunal. You will get a final acknowledgement with the appeal number. Now understand that after you get provisional acknowledgement, if at all you have given the certified copy of the order that you are going to challenge along with paying applicable fees, if it is given within 7 days, then your appeal filing date is the date when you got the provisional acknowledgement. Your date of filing of appeal is date when you got the provisional acknowledgement. But if you don't submit, after you get the provisional acknowledgement, you don't submit a certified copy of the order that you are going to challenge along with not payment of applicable fees for tribunal. If you don't do that within 7 days, then the date of filing of appeals is the date of submission. Is the date of submission, which means you are talking about finally when you are getting the final acknowledgement. If you do it within your 7 days, it is the date of filing of appeals is when you got the provisional acknowledgement. If at all you don't do it within 7 days, if you submit it after 7 days, the moment you submit it after 7 days, whenever you are submitting, that is the date of filing of appeals. So that you need to remember. The second part is when you are talking about your appellate tribunal, constitution of your appellate tribunal and its benches. As discussed, you have two categories. One is your national bench, regional bench, and one is your state bench, area bench. National bench, regional bench is handled by center, and state bench, area bench is handled by state. The name itself suggests that. Now, national bench, regional bench will take up the matters of place of supply. So it will have a president, a technical member from center, a technical member from state. State bench, area bench will not take up place of supply matters. It will have a judicial member, not president, judicial member, no president, and a technical member from center, technical member from state. So only difference is you are talking about in national bench, regional bench there will be a president, and in state bench, area bench there will be a judicial member. Now understand that just like High Court, even appellate tribunal has to hear the case minimum by 2 members, and here again there will be majority. If at all there is a conflict of reference, then they will be calling the third member. So minimum number of judges to be there in appellate tribunal, members in appellate tribunal, not judges, members in appellate tribunal is 2, and it will work like majority, just like your High Court. And if at all there is same ratio, then they will go to the third member. Now there is an exception to this formula which was not there in High Court. Appeal can be heard by a single member bench if at all. Point number 1. The amount is up to 5 lakhs. The amount involved is small, up to 5 lakhs. Second, it does not involve any question of law. It is only and only dealing with question of fact. So a single member bench of tribunal can hear the case if it is a small case and if it is not involving question of law. If it is dealing only with question of fact, then there is no need of 2 or more members. A single member bench of tribunal can hear the case. Pre-deposit example, we have already discussed that as a logical calculation, so we are not going to touch that. Now when you talk about certain special points, section 120, your appeal is not required to be filed by department in certain cases. 121, which is non-appealable orders which a assessee cannot, that is taxable person or assessee cannot challenge it. What is section 120 trying to tell? Section 120 is telling a very simple point. It is telling that because of certain monetary limits fixed by CBIC, at times, supposing there is a subject matter which is against the department, which department wants to challenge, but because of the limit fixed by CBIC is fixing a limit that if the matter is below this limit, forget about the case. Because of the monetary limit fixed by the CBIC, department is not taking up the case for appeals or application. So department is not filing the appeals because of the monetary limit prescribed by the CBIC. Now, what generally happens if at all there is a fight between assessee and department and assessee wins in one level, first appeals. Department wants to take it to second appeals, but because of the CBIC monetary limit, it is not going to take it to the second appeals because the amount is not so big. It does not mean that department has accepted the judgment. It does not mean that department has accepted the judgment. When next time when the same officer is handling the same assessee's case, example, extreme case, same officer handling the same assessee's case on the same subject matter. Same officer, same assessee, same subject matter. This time the amount is big. Now can department challenge it? Yes, department can challenge it, telling that last time when I did not go for appeals, it does not mean that I accepted the judgment. It meant that I did not go for appeals because of the monetary limit. Now, this time, same officer, same assessee, same subject matter, but the amount is big. Department can again challenge it and take it to appeals and take it on to the higher level. So that is section 120 for the department safeguard. It is just trying to tell that if department is not going ahead because of the monetary limits, it does not mean that department has accepted that decision, and it does not mean that department cannot challenge it next time for the same assessee. It can do it. Now when you talk about non-appealable orders from the point of view of assessee or taxable person, if at all there is a transfer order from transfer of proceedings from one officer to another officer, if your case is transferred from one officer to another officer, you cannot challenge it. You cannot tell that I don't like this officer's face. No. If your case is transferred from one officer to another officer, it is a non-appealable order. If at all there is an order dealing with seizure or retention of your books of accounts or records, then you cannot challenge it. Understand that when your books of accounts or records or documents are seized, you can always take photocopies. So you cannot challenge that order. So if there is an order which is dealing with the seizure or retaining your books of accounts or records or any of the documents, that cannot be challenged. If there is a prosecution or if there is an order sanctioning prosecution, criminal proceedings are initiated. If there is an order which is sanctioning prosecution, it cannot be challenged. Criminal procedure things cannot be challenged. Finally, if at all you are talking about order passed by commission under section 80, which is all about payment in installment or payment after some time, right? This again cannot be challenged. Rather, when you go under section 80, it is a request. You are begging the commissioner to give you installment facility or deferment facility to pay in some time. If commissioner is telling that no, I am not interested in giving you installment facility or deferment facility, it cannot be ordered. So these are the 4 orders where you are talking about your case being transferred from one officer to another officer, seizure of your books of accounts, order sanctioning prosecution, that is criminal proceedings, and finally your section 80 order. These orders are non-appealable orders. Assessee cannot challenge them. Right. Now friends, you are talking about your section 116 and rule 112, which is talking about certain special points. Now authorized representative, you are talking about in appellate authority and in appellate tribunal. You can take up your case in front of officer or appellate authority or appellate tribunal. When the adjudication proceedings is going on, or in front of appellate authority or in front of appellate tribunal, either you can go or your authorized representative can go on your behalf. But please understand that this is not possible in High Court and Supreme Court, because in High Court and Supreme Court only and only an advocate can go. Before any officer or before appellate authority or before appellate tribunal, either you can go or your authorized representative can go. Also understand that whenever you are talking about a person being called for examining on oath, if you at all you are called for examining on oath, only you have to go. You cannot ask your authorized representative. Right? Even when you are talking about before any officer or before appellate authority or before appellate tribunal, on your behalf, appellate authorized representative can also always go, but not possible when you are called for examining on oath. Now, who is authorized representative? Your authorized representative can be your relative or your employee. He can be your advocate who is not barred from your practice. He can be a chartered accountant or cost accountant or company secretary holding a COP and who is not barred from practice. He can be an officer. Now when you talk about retired officer, things are very special. He can be a retired officer of commercial tax department of any state government unitary or board, but he should have worked in a particular category, not below the rank of a Group B gazetted officer. He should have worked under a particular rank, not below the rank of Group B gazetted officer, worked for a period not less than 2 years. So a retired officer who was at least minimum rank of Group B gazetted officer worked for minimum 2 years, plus after he is discontinuing from his government post, 1 year should have been over. So 1 year time should have got over. Cooling period is 1 year. So if you are a retired officer or if you have resigned from your post of officer, 1 year time you cannot act as authorized representative because you can influence the other officers there. So 1 year time should have been got over. So there are actually 4 conditions here when you are talking about retired officers. Not below the rank of Group B gazetted officer, work for a minimum of 2 years. After resignation or retirement, 1 year should have been over. Plus 4th, he should not have been dismissed. He should not have been dismissed or removed from government service. So when you are talking about retired officer, check these 4 conditions. Check these 4 conditions. The rank, the category should be Group B gazetted officer minimum. Minimum service should be 2 years. After his retirement or resignation, 1 year should have got over. He should not have been removed from his post. He should have gone for retirement or resignation but not removed. So that you need to understand. And following officers, following categories, you cannot go for authorized representative. If you are guilty of misconduct, if you are a chartered accountant in practice but if you are guilty of misconduct, you cannot go. If at all you are convicted of any offence under GST Act or earlier indirect tax laws, you cannot go. Right, if you are guilty of misconduct, not possible. If you are convicted under any offence, final conviction is there under GST Act or earlier indirect tax laws, you cannot go. Permanent, this is all permanently you cannot appear. Permanently who cannot appear? If you are dismissed from government service, if you are guilty of misconduct, if at all you are convicted of under any offence under GST law or earlier indirect tax law, you cannot appear. Now, a person who is adjudged as insolvent, till he is insolvent, he cannot go. During the period of insolvency, he cannot go. Once he comes back, he can act as authorized representative. So that you need to understand. And finally, friends, you are talking about your additional evidence. Can you give additional evidence? Yes. Understand that additional evidence is only before your appellate authority and appellate tribunal. Additional evidence is that evidence that you did not give at lower level, officer level, now you are giving at higher level. So you did not give at officer's level, now you are giving at appellate authority. Or you did not give at appellate authority, now you are giving at appellate tribunal. So you are talking about production of additional evidence. Production of additional evidence. You did not produce it before the lower authority, now you are producing before appellate authority. You did not produce it before appellate authority, now you are producing before your appellate tribunal. Right. This is different from additional ground. Understand that additional ground means a new subject matter on the basis of which you are going to fight a case. Additional grounds can be entertained by appellate authority, appellate tribunal. Even additional evidence can be entertained by appellate authority, appellate tribunal. Ground means you are fighting on your case on 4 matters. You are adding now 5th point, 5th matter, that is additional ground. Or for the 3rd matter, you are giving extra evidence, that is additional evidence. So both at appellate authority and appellate tribunal, additional grounds can be entertained, but with the caution, additional evidence can be entertained with subject points that we are going to talk about it. When you talk about High Court and Supreme Court, they can always entertain additional grounds, they can always entertain additional evidence, that is extraordinary powers to them. Now, when additional evidence can be entertained? When the lower authority refused to admit it. You gave it but they did not take it. Or when the lower authority did not give you sufficient time. Which means it is a mistake of the lower authority. When the lower authority, you gave it but it did not accept it, or it did not give you sufficient time. So it is the fault of the lower authority. Or you are talking about the lower authority called for the additional evidence, or you wanted to produce the additional evidence but you are prevented from sufficient cause. Say for example there was a lockdown, or say for example, not lockdown exactly, say for example there was death in your close and dear ones, or there was a situation where you are outside India, so there was a sufficient reason where you are prevented. See, understand the 3 situations. One, you gave it, lower authority refused it. you are not given proper opportunity by the lower authority. These two are the mistake of lower authority. Third, lower authority called for the additional evidence, or you wanted to give it but you are prevented from sufficient cause. So it might be due to some illness or some death in your family, or you're talking about foreign visits, etc. etc. Now whenever additional evidence is admitted, understand that reason should be recorded in writing, and it will allow the lower authority to examine it or rebut it. So the lower authority will be asked whether you gave an opportunity or whether it was given to you but you refused it. It will be allowed to examine the additional evidence or challenge it, rebut it. Right. Now understand that when you talk about special power, this appellate authority or tribunal, they always have special powers to suo motu call for additional evidence. See, all these points that we have discussed is when assessee wants to give additional evidence. But suo motu, appellate authority or appellate tribunal, they can tell that okay, you please bring additional evidence. So that is a special power. So all the other things that we have discussed is assessee wants to give new evidence, but can your appellate authority or appellate tribunal can themselves call for additional evidence on their own? That is always possible. Now why are we not discussing additional evidence at High Court and Supreme Court level? First, understand the fact that appellate authority is the final fact finding authority. So normally additional evidence are permitted to be produced only here. Final fact finding authority is appellate tribunal. After that, in High Court and Supreme Court, it's not about fact finding, it is only about question of law. That being the case, we have not discussed about High Court and Supreme Court here. And secondly, High Court and Supreme Court have got extraordinary powers to entertain additional grounds, to ask for additional evidence. They got extraordinary powers. So that is everything about your appeals and revision. Friends, now let's discuss about your advance ruling. Advance ruling, as already you know that it is in a very simple context. It is there, just like taking private consultancy from department itself. The problem with consultancy, if you're going to professional and taking is, it might not hold good in department. So department may tell that you have gone for professional opinion, which is his opinion, and we are not under any obligation to follow that. That may create unnecessary liability on the assessee. So assessee at times he will decide to go for advance ruling and take the opinion of the department, so that department is bound by the opinion and they cannot touch the assessee to the extent of that particular issue. So that is advance ruling. Now, when you talk about advance ruling, they have defined what is advance ruling. Advance ruling is basically the decision by A square R. Authority of advance ruling, we call it as A square R or A cube R. Appellate authority of advance ruling to the applicant. Now, by the way, who is applicant? If you look at the wordings of applicant, it is very interesting to watch. An applicant can be any person, whether he is registered or desirous of obtaining registration. Either not liable, registered, he is already a registered person, or a person who is desirous of obtaining registration. He is planning to take registration, even that is covered. Now understand that on what matters you can go for advance ruling. You can go for advance ruling only on specified questions, right, which are undertaken or proposed to be undertaken. Either you have already done that work or you are proposed to undertake that particular work. So whether it is past or it is future, both are covered. So whether you have already taken that transaction or you are proposing to take the transaction. But understand, very important point, it is only for specified questions. Now first of all, understand that what are specified questions. There are listed specified questions for which you can go for advance ruling. Just because you have a doubt, you cannot go to advance ruling directly. No, the question should be specified. You have doubts with respect to, let me take you through a proper channel. You have doubt with respect to whether the transaction that you have done amounts to supply or not. Whether the transaction that you have done amounts to supply or not. So that is the first matter. Assume that the transaction amounts to supply. The next question is whether you are liable to pay tax and whether you are liable for registration. So first you need to evaluate whatever activity you are undertaking, whether it is amounting to supply or not, and whether, even if it is supply, whether there is liability to pay GST or not, and whether you are liable for registration or not. So that is also covered. Then once it is very clear that your transaction is supply, you have to pay tax, you are liable for registration, then other issues will come up. Now what are the other issues which will come up? One is about payment of output tax, one is about your input tax credit. So when you are talking about payment of output tax, It is all about value of supply, rate of goods. Rate of goods includes classification. You're talking about what classification it will be there. So value and rate, and as well as time of supply. When you talk about rate, it also includes application of notification. So not only exemption notification, this notification covers all the notification including RCM notification. So basically now when you have to pay tax, you're discussing about your value, you're discussing about the rate, you're discussing about the time of supply, you're also discussing about application of notification, whether there's an exemption notification which you can go for, or whether there's an RCM notification or any notification which is you can go for. Now also understand that the issue is also about your input tax credit, whether ITC is, you can take the input tax credit or not, admissibility of your input tax credit. So that I'm taking it as the last subject matter. So I have broken that into 8 parts. First, it is whether a transaction is amounting to supply or not, whether there's a liability to pay tax, whether there's liable for registration. If at all that is there, then value, classification, that is rate, time of supply, and application of notification including exemption notification, RCM notification, any other notification. And finally, friends, you're talking about your input tax credit. Now one needs to understand that there was a question which was asked by ICAI, where the place of supply, if at all you have doubts with place of supply for your transaction, whether you can go for it. Understand that when you're talking about liability to pay tax, it is covering 2 questions, whether you have to pay tax or not, whether tax will be there or not, when tax is there, whether it is CGST, SGST or IGST. So it basically covers 2 questions, whether you have to pay tax or not, or whether it is CGST, SGST or whether it is IGST. So when you're talking about whether it is CGST, SGST or IGST, basically you're talking about place of supply. So in that context, place of supply issues can also be taken up, because liability to pay tax can cover 2 situations, whether you have to pay tax or not, and if you have to pay tax, whether liability to pay tax is of CGST, SGST or it is of IGST, nothing but your place of supply matters. So IC has given both the views, both answers, but you can go with this particular view. So that is all about what is advanced ruling, when you go for advanced ruling, and who can go for advanced ruling. And friends, as discussed, there are 2 stages of your advanced ruling. The first stage is A square R, authority of advanced ruling, and the second stage is A cube R, appellate authority of advanced ruling. The moment you understand one thing, other thing is pretty simple. So when you talk about A square R, when you talk about A square R, who can go there? Only an applicant can go. So only an applicant can go for your A square R. So applicant will apply for A square R advanced ruling. There's no time limit, because it is for an activity undertaken or proposed to be undertaken. Now when applicant is going, you need to understand that he needs to pay an amount, and that amount is 5,000 CGST, 5,000 SGST. The question should be specified question, and you have to pay an amount fees which is 5,000 CGST, 5,000 SGST. A square R will forward the application to concerned officer. Will forward the application to concerned officer. Right. So A square R, what A square R will do? It will take that application, forward it to the concerned officer. If required, it will call for records and return them after examining. So it will forward the one of the application to the concerned officer. If at all it is required, it will call for records, and after examining the records, it will return back the records. That is the second step. Now the third step, understand that A square R will either accept the application or reject the application. Acceptance or rejection of application. There is no specific time limit, but you will see there is an overall time limit. This acceptance rejection will happen within the overall time limit, which we are going to discuss later. 90 days. Within 90 days, it has to accept and reject, and it has to give pronouncement. So there is an overall time limit. This acceptance or rejection of application is after examination of application and records, hearing the applicant as well as the concerned officer, and in case of rejection, principle of natural justice will be given. So on what basis acceptance rejection will be done? So it will see the application and the records which are there available. It would have called from the concerned officer. It will hear both the applicant and the concerned officer, and if at all it is being rejected, then obviously principle of natural justice, opportunity of being heard, will be given to the assessee. Also you need to understand that there is a mandatory rejection. if the question which is raised in the application is already pending or decided against the same applicant, whatever question is asking, it's already pending or it's already decided at any level. At any level means at adjudicating level or appeals level. It is pending at any level, any proceedings. So the question is already pending or decided at any proceedings. Any proceedings means it can be a very basic proceedings. If that is the scenario, mandatory rejection. Obviously, the moment you are talking about rejection, principle of natural justice. Understand that first part is optional rejection. It may be accepted, may be rejected. So you are talking about optional. If the rejection is there, it is optional rejection. But here it is mandatory rejection. If at all the same applicant's case on the issue for which he is going for advanced ruling, it is pending or decided, either pending or decided. Even if it is started, they are trying to learn, even if it is started at any level, adjudication level or appeals level, very basic level, forget about decided, it is even just pending, then A square R will not accept the case. Mandatory rejection, if they don't have an option, they have to reject it. Right. Next, they have to give the, if at all, first we have discussed about optional rejection, then we have discussed about mandatory rejection, and assume that it is not covered in optional rejection as well as mandatory rejection, the case is taken up. Now, A square R has to give pronouncement within your 90 days of application. As I said earlier, to accept or reject there is no time limit, but you have to do both the works, accept or reject and give the pronouncement within 90 days of application. Now, please understand that normal case, advanced ruling is pronounced after examination of materials as placed by the applicant and the consent officers. So, after preliminary inquiry where it is all about acceptance rejection, then they will call for the other materials placed by both applicant and consent officer, and opportunity of being heard will be given both to the applicant as well as the consent officer. Now, understand that if at all the members of A square R differ in any of the question, if they have different views, normally when you talk about your appeals, if there is a difference of opinion, you will go with majority rule. Here there is no majority rule. If at all there is any difference of opinion, the question will be referred to A cube R. They will not decide. Majority rule does not work here. Your majority rule will not work here. If they have difference of opinion, automatically it will go to the next level, A cube R. Now understand that both your first decision of acceptance or rejection, and if at all it is accepted, the pronouncement of advanced ruling, a copy of that will be shared to your applicant as well as the concerned officer. Final judgment copy will be given to applicant, concerned officer as well as the jurisdictional proper officer. So whether it is accepted or rejected, it will be shared only to the applicant and the concerned officer. But final pronouncement, it will be shared to applicant, concerned officer as well as the jurisdictional proper officer, so that he is also aware of the final advance ruling, so that he is not giving notice for proceedings on that particular subject matter. Now, talking about the second level, A cube R. Now, what are the three routes of entering into A cube R? There are basically three routes. First route is in A square R, the judgment is against the applicant, he is going. When he is going, he has to pay a fees of 10,000 CGST plus 10,000 SGST. Plus now, he has a time limit. When he is going to A square R, there is no time limit because it is for an activity undertaken or proposed to be undertaken. But now, there is a time limit which is 30 days plus 30 days after the pronouncement of A square R. If A square R is against the department, concerned officer will go to A cube R, again same time limit 30 days plus 30 days, but there is no fees. If CS1, concerned officer will go for appeals. Now understand that the first difference is there is a time limit. That's the time limit now, 30 days plus 30 days. Second difference, there is fees difference. In the first case, when only applicant can enter, and the fees is 5,000 plus 5,000. Here the fees is 10,000 plus 10,000. And if department is going in this case, there is no fees. And the third difference is when you talk about A square R, only applicant can go. Here it is applicant or consent officer. It may be even Referral case. What is referral case? If at all on a subject matter the members of A square are having a different opinion, it is referred to A Q bar. So here when it is referred to A Q bar, obviously there is no time limit, automatic referral is there is no question of any fees. So the entry points are 3 entry points. We are just highlighting the differences. In A square R only 1 entry point, here 3 entry points. In A square R, if applicant goes, the fees is 5,000 plus 5,000, here it is 10,000 plus 10,000. In A square R, there is no time limit. Here, whether the applicant goes or the concerned officer goes, time limit is 30 days plus 30 days. But when it is referred, obviously there is no question of any time limit. It is automatically referred, no fees as well. Now, what will your AQ bar do? AQ bar will either confirm or modify the order of A square R. Either confirm or modify the orders passed by A square R, and if at all A square has not given any order, it is referred back, then it will pass orders which are referred by A square R. If A square has given a judgment in favor of applicant or concerned officer, then it will either confirm that or change that. But if the case is referred back for the first time, it will be decided only in A cube R. Now the work to be done by A cube R, the same time limit should be done within 90 days of appeals or referral. Time limit is the same. They have to do the work within 90 days of appeals or referral. And just like your A square R, the copy will be given to applicant, concerned officer and the jurisdictional officer. Now if you want to understand the differences, here, there they can either pass the order or refer it. Here, they can either confirm or modify the order, not passing. And if it is referred back, they will be passing the order for the first time. Now, there, if the members of A square R are having difference of opinion, then the case will be referred to A cube R. If the members of A cube R are having difference of opinion, then it means advance ruling cannot be given. This is the next stage. If the members of A cube R are having different views, it means you cannot go for advance ruling. So these are all the differences which I have highlighted when you talk about A square R and A cube R. Now certain other points when you talk about A square R and A cube R. Now, no cross empowerment. If you see this point, what is mentioned here? A square R or A cube R constituted under SGST Act or UTGST Act shall be deemed to be authority for that state or union territory, which means under A square R and A cube R are for that particular state. It is not for pan India. Which means if at all I am working in Delhi, I cannot go and apply to A square or A cube R in Maharashtra. I have to go only to A square or A cube R of Delhi. At times planning also comes into picture. At times you have to see which state will be more beneficial for me, and you have to do planning accordingly. Then you can take that benefit. But normally, if at all I am there working in Delhi or I am planning to work in Delhi, I can go only to A square or A cube R of Delhi, not of other state. And who will be sitting in A square or A cube R? Officer of the rank of Joint Commissioner or above shall be the member of A square R. One member will be from center and one will be from state. So the rank should be a higher rank. We are talking about Joint Commissioner, Additional Commissioner, Commissioner or Principal Commissioner will be sitting as the member of A square R, and one member will be from center and one member will be from state. Now, there is a provision for rectification of errors which are apparent on records. That error may be highlighted either by A square or A cube R themselves. They might themselves found the error, or it may be highlighted by concerned officer or the jurisdictional officer, or it may be highlighted by the applicant. So there is an error which is very clear on the face of the record. Supposing 2 plus 2, if it is mentioned as 5, clearly it is evident that there is a mistake apparent on record. So either A square or A cube R themselves suo moto, or on the information given by concerned officer, jurisdictional officer, or on the information given by applicant, they can rectify the error which is apparent on the face of the record. In that case, rectification is possible, but there is a timeline 6 months from the date of order of A square or A cube R. So that is a timeline. You have to do this rectification within 6 months. And there is a caution. If at all any rectification which is done by A square or A cube R is resulting against the assessee, increasing the tax liability or reducing the ITC, then opportunity of being heard should be given to the applicant. So again, the normal point, if it's some action is taken against the assessee, there should be an opportunity of being heard. Now, very, very important point of your advanced ruling. Understand that the advanced ruling is not like a normal high court judgment or a Supreme Court judgment or a tribunal judgment or even commissioner appeals judgment. Advanced ruling is binding only on that applicant who has made the application and the concerned officer, jurisdiction officer, in respect of that applicant. Not even in respect of all the other applicants in their jurisdiction. No. It is binding only on that applicant and the concerned officer, jurisdiction officer when they are dealing with that applicant. When they are dealing with other applicants, they can ignore advanced ruling. Supposing advanced ruling taken by Reliance Limited is binding only on Reliance Limited and the officer of the Reliance Limited when officer is handling Reliance Limited case. The same officer, if he is handling on the same issue for Tata Limited, there is no binding nature. Now, advanced ruling will be bound unless law changes, facts and circumstances changes, which means if at all it is to be valid, law should remain the same, facts and circumstances should remain the same. If law changes, facts and circumstances changes, then advanced ruling will not be relevant anymore. And advanced ruling is not a judicial precedent. When I started, I said that it's not a judicial precedent. Supposing there is a judgment which is of Reliance Limited given by Supreme Court, everyone can use that judgment. But advanced ruling is not like that. But obviously, if there is an advanced ruling of Reliance Limited, Tata Limited cannot fully put its argument only on that advanced ruling because it is not having a judicial precedent. But while arguing the case, Tata Limited can tell that, see, in Reliance Limited also, they also went on the same issue to advanced ruling and the matter was in favor of Reliance Limited. It will have persuasive, you can convince the judge, but it is not having a judicial precedent, which means that if at all it was a Supreme Court judgment, then you have a very strong case. So there is Reliance Limited, Supreme Court judgment, Tata Limited can take the help of Supreme Court judgment of Reliance Limited and will have a very strong case if the facts are exactly the same. But if there is advanced ruling for Reliance Limited in favor of Reliance Limited, Tata Limited cannot refer to it as a judicial precedent. But while arguing its case, it can tell that as a passing reference, it can tell that okay, same facts, same law was there for Reliance Limited, and the judgment of advanced ruling was in favor of Reliance Limited. So that consideration may be there while arguing. So that you need to understand. Now, the next category you are talking about advanced ruling to be void in certain cases, which means if at all your A square R or A cube R finds that advanced ruling itself has been obtained by the applicant by way of fraud, suppression or misrepresentation of facts. So applicant has obtained your advanced ruling by way of fraud, suppression of facts or misrepresentation of facts, then advanced ruling will be declared as void ab initio right from the beginning, and all the provisions will apply as if there was no advanced ruling given. So if the applicant has taken advanced ruling by way of fraud, misrepresentation of facts, suppression of facts, advanced ruling itself is void ab initio and the case will be handled as if never advanced ruling was given in such case. Obviously, when something against this something against the assessee's action is taken against the assessee, there will be an opportunity of being heard. Now understand that when this happens, now till the time advanced ruling was there, supposing in favor of Reliance Limited, officer of Reliance Limited cannot take action against Reliance Limited. So if there is an advanced ruling of Reliance Limited in favor of Reliance Limited, officer of Reliance Limited cannot take action against Reliance Limited, can take action against others but cannot take action against Reliance Limited. The moment they find that this advanced ruling is void, then the timeline between the date of advanced ruling, and the date when the advanced ruling is said to be void shall be excluded in calculating the timeline of section 73 and section 74. When we talk about timeline under section 73 for show cause notice, it is 2 years 9 months for notice and 3 years for orders. In section 74 for notice, it is 4 years 6 months and 5 years for order. So normally you calculate the time limit, right? And after that you calculate the time limit, the time between the date when advanced ruling was given and date when it is held to be void, that will be added along with this time limit, because during this time when the advanced ruling came out and when it is held to be void, during this time the officer's hands were tied, he could not take any action. Now the moment it is held to be void, he can take action. So the time gap between advanced ruling, date of order of advanced ruling and when it is becoming void will be added to the time limit of section 73, 74. 4. And finally, there are other petty provisions. So what are the petty provisions which are given? When you talk about for the purpose of discovery and inspection, calling for attendance of any person and examining on oath, for issuing commissions and compelling production of books of accounts and other records, advanced ruling A square R and A cube R will have the powers of civil code. So as regards as your discovery, inspection, enforcing attendance of a person and examining that person on oath, issuing commissions, making certain commissions to discuss certain matters, or compelling production of books of accounts, they will have the equal powers just like civil code procedure. Also, they can have their own procedure. In addition to it, A square or A cube R can have their own internal procedure. What will be the timings, what will be the kind of dressing or uniform that you need to wear. So they can have their own internal procedure as well. In addition to these civil code procedures for these three subject matters, they can have their own procedure for their internal matter. So that is everything about your advance ruling. Yes friends, now let us see your IGST Act, very important from your exam point of view as well. Now when you see your IGST Act, initial first sections that is section 1 to section 6 are only talking about title and other aspects not important for exams, and last 5 sections 21 to 25 translation provisions and other provisions. Now when you talk about the other provisions, right, starting from section 7 to section 14, this talks about your location of supplier and place of supply, basically including section 2, including your section 2. So when you talk about section 2 and section 7 to section 14, location of supply and place of supply, to find out CGST or SGST or IGST. And when you talk about section 17, 17A and 18, and including 19 also, the 19 is a special provision. Section 17, 17 and 18, it talks about distribution of IGST by the central government. Distribution of IGST, what needs to be done by the central government. 19 we have already discussed when we have discussed your demand and recovery. Section 77 read along with section 19. If you have paid wrong tax, instead of CGST, SGST, intrastate supply, you paid IGST. So first pay CGST, SGST, correct tax without interest, then claim the refund of wrong tax paid. So this we have already covered in your demand and recovery. And when you talk about your section 15 and section 16, it talks about your zero rated supply, section 16, and you're talking about supply to international tourist, refund in that scenario. So they are independent cases. Basically, place of supply is required to find out whether a transaction is intrastate or interstate, which will be discussed in section 2 and section 7 to 14, and distribution of IGST, which is discussed in section 17, 17A and 18. The other provisions are also there. There is one section called as section 20, which tells that many provisions in IGST go back to your CGST Act. Various provisions of CGST Act are mutatis mutandis applicable to IGST Act. So it gives back reference to your CGST Act. Now, when you talk about the definitions, make one thing very clear, that few definitions you already discussed. So when you talk about the term supplier and recipient, you already discussed long back when we have seen your RCM chapter. Supplier means a person who's supplying goods, services, includes his agent. Recipient basically means a person who's liable to pay consideration, not who's receiving, liable to pay consideration. Right? If at all there is no consideration, the person who's getting the goods or person who's getting the services. Export of goods means taking goods outside India to a place out of India. That is export of goods, which is the same in your customs also. Import of goods means bringing goods into India from a place outside India. So taking goods from India to outside India is export of goods. Bringing goods from outside India, bringing goods from outside India to India is import of goods. Export and import are always interstate transactions. But when you talk about services, import of services and export of services, you have to be very careful. For import of services, there are 3 conditions. Supplier should be outside India, location of supplier, location of recipient should be in India, and place of supply should be in India. Import of services, RCM will be there basically, except for OIDR's category. So supplier outside India, location of supply, location of recipient in India, and place of supply in India. When you talk about export of services, there are additional 2 conditions. Reverse it. The export means supplier is in India, location of supplier is in India, recipient is outside India, and place of supply is outside India. Now, apart from that, there are other two conditions which tells that you have to receive convertible foreign currency, or wherever permitted by RBI, rupees is also fine. But normally you have to receive convertible foreign currency. If RBI permits it, then bring Indian rupees. Otherwise, convertible foreign currency. Also, you're not talking about establishment of distinct persons. You're not talking about same company, head office, branch office. So you're not talking about the establishment of distinct person as per explanation 1 to section 8. What is establishment of distinct person? You're talking about same company, head office, branch office, one being in India, one being outside India. Now, if you see, these two conditions are not there for your import. They are only there for your export of services. Which means in import of services, whether you pay by Indian rupees or foreign currency, it is still import. In import of services, even if you bring from your own establishment, then also it is import of services. So that you need to understand. And when you talk about establishment of distinct person, what is meant by establishment? Establishment is defined. You are talking about branches. So branch may be in India or outside India, or branch may be in one state or other state, which means Reliance Limited having branch in Tamil Nadu, Maharashtra, they are establishment of distinct person. Reliance Limited having a branch in India, having branch outside India, establishment of distinct persons. Reliance Limited having branch within Tamil Nadu, but separately registered. So two branches in Tamil Nadu, both are separately registered, they are also establishment of distinct person. Basically, establishment of distinct person means in India, outside India, in one state, in another state, but within the same state, two branches are establishment of distinct person if they are separately registered. Right, so that is establishment of distinct person. Now, talking about location of supplier and place, location of recipient. Understand that to find out whether a supply is interstate supply or intrastate supply, you require two things. One is location of supplier and one is place of supply. Only when you understand both these concepts, you will get whether it is intrastate supply or whether it is interstate supply. Now, location of supplier or location of recipient definition happens to be on a very similar context. When you talk about location of supplier or location of recipient, definition is in the same language. When the supply is made or received by a registered place of business, if at all it is made or received by a registered place of business, it is location of such registered place of business. So if you are getting supply or making supply from a registered place of business, it is that registered place of business. Now, if at all you are making supply or receiving supply from a place other than registered place of business, then it is location of fixed establishment. But if at all you are talking about a scenario where your supply is made from multiple establishments or multiple establishments including your place of business and fixed establishment, that is your head office and branch. Place of business is nothing but head office, fixed establishment is nothing but branch. But if it is related to both head office as well as branch, that is principal place of business and your fixed establishment, then you are talking about location of that establishment which is more directly concerned, which has got more connection. To put in simple terms, if you see the first 3 points, location of supplier or location of recipient is the principal place of business or fixed establishment which is more directly concerned. Either the principal place of business or fixed establishment which is more directly concerned. Now, if at all there is no principal place of business, there is no fixed establishment, if you don't have head office as well as branch, in that scenario, it is location of usual place of residence. So, if you have a place of business, head office and branch, then it is though priority to head office over branch, then it is head office or branch, that is place of business or fixed establishment which is more directly concerned. If you don't have anything, then it is usual place of residence. Now, what is fixed place, fixed establishment or your branch office? Not every establishment that you have can be called as your branch office or fixed establishment. Two important condition: it should be having some degree of permanence. So there should be some permanence. You cannot be working at client place and call client place as your fixed establishment, because there is no permanency. You will complete the work and come back here. Some degree of permanence, and it should have some human and technical resources in order to receive the goods or services or to supply the goods or services. So two important condition. It should be having some degree of permanence, which means you are there working in a place which is you're going to work for a longer span of time. You cannot call your client place as a fixed establishment or your branch office. And plus, it should have some human and technical resources to make the supply or to get the supply. So that is all about the definitions here. When we are discussing your place of supply, you will be finding a term called as intermediary, because for intermediary there is a separate place of supply in section 13. Intermediary means an agent, whether you call him by name him by agent or you're talking about broker, any name you give, broker, agent or whatever name you call, who's arranging or facilitating supply between two or more persons. He is just an intermediary. He is just connecting two persons and getting his commission. But your term intermediary will not include a person who's making goods or supply of goods or services or both on his own account. If you are making supply of goods or services on your own account, then you are not intermediary, which means I am a commission agent. I connect my supplier and recipient and get a commission. I am an intermediary, whether it is of goods or of services. But if I get the goods and I am supplying on my own account, then I am not intermediary. So that is all about your definitions. Now friends, talking about your nature of supply, where you have to read nature of supply in terms of section 7, section 8 and section 9. You have to understand these three sections to understand the nature of supply. Please remember one thing, that basically lot of scenarios your supply is by default interstate supply. Like when you talk about your import of goods till they cross customs frontier of India, or import of services, by default it is always interstate supply. So import of goods by default interstate supply. Import of services, it is interstate supply, but the difference is for import of goods you need not even check place of supply. For import of services you have to check whether place of supply is in India. So location of supply should be outside India, location of recipient should be in India, and place of supply should be in India. And when you talk about supplier of goods or services in India and place of supply is outside India, if your supplier of goods or services you are in India, place of supply is outside India, it is interstate, which means here also you are required to find place of supply. But please understand that just because supplier of goods is in India and place of supply is outside India does not mean that it is export. It may or may not be export. It may or may not be export. Specifically when you talk about your services, supplier, location of supplier of goods may be in India, place of supply may be outside India, but if the location of recipient is also India, then it is interstate supply. IGST will be there, but it is not export. Because for export of services, location supplier India, place of supply outside India, these two conditions. In addition to it, location of recipient outside India, convertible foreign currency. You are not talking about establishment of distinct persons. So these all 5 conditions should be satisfied. So make one thing very clear. When you talk about location of supplier and place, location of supplier in India, place of supply outside India, it is interstate supply. IGST will be there, but it may be export, may not be export. And just like that, when you're talking about supply of goods or services to or by special economic zone, it is by default IGST. So when you're supplying to special economic zone, it is IGST. When you're getting from special economic zone, it is IGST. But it is zero rated only and only when the supply is to special economic zone. So when supply is by special economic zone, it is IGST but no zero rating. But when supply is to special economic zone, then it is IGST plus it is zero rating. So again in a similar context, so whether supply is by SEZ or to SEZ, it is IGST. But only when supply is to SEZ, then zero rating will apply. Only for exports and supply to special economic zone, zero rating will apply. But these transactions by default will be IGST, but they may not be always export, they may not be always supply to special economic zone, not always zero rating will be applicable. Next, we are talking about supply of goods to tourists as given in section 15. So we are going to see in your section 15 that when you are supplying goods, not services, here it is only and only goods. Only and only goods. Supply of goods. If it is supply of services to international tourists, it may be interstate supply or intrastate supply. But if it is supply of goods to international tourists, it is always interstate supply. Here you are not required to see place of supply. Directly it is interstate supply. Now, when you see this point, you need to see section 15. Because section 15 clearly tells that when the goods are given to an international tourist, this is section 15. When the goods are given to an international tourist, what is an international tourist? International tourist means a person who's normally not a resident of India, plus who's coming to India for not more than 6 months for legitimate non-immigrant purposes. So he's not a resident of India, he's coming to India for a very short span of time, not more than 6 months. He is an international tourist. When such goods are given to him, it will always be IGST. So that when the tourist is leaving India with a proof of the goods in his hand and the invoice. So when he's going outside India, he'll show the goods which has not opened, it has not been used, and invoices in hand. He'll get the refund of the IGST paid. So as a shop owner, when I see an international tourist, he has to give me the proof first of all. I will not know he's an international tourist or not. The moment he gives me a proof, his visa copy, then I may understand that he's an international tourist. I will charge only IGST. I will never charge GST. I will charge only IGST. So that when this person is leaving India with the goods in hand and the document, he'll get the refund. Right, so this point we have already discussed, that supply of goods to a tourist is always interstate supply. Please make a note of this point, that it is applicable only and only for goods, not for services. Both, that it is interstate supply and refund will be given as only and only for goods. So that is all about your section 15 here. Now coming back to section 7, 8 and section 9. Now, for the first time we are talking about interstate or intrastate. So when you see this particular chart, you have to find location. If at all it is not covered anywhere what we discussed, then you have to find location of supplier and place of supply. Both are in India. Then you have to ask a question. If they are in the same state or different union territory, then it is interstate supply. You have to find both now. For the first time you are required to find both location of supplier and place of supply. If they are in different state, different union territories, or a state and union territory, it is interstate supply. If they are in the same state or same union territory, then it is intrastate supply. You have to find both location of supplier and place of supply. Then it is intrastate supply. Now, if you take the first transactions, when you talk about import of goods, import of services, supplier of goods services in India, and place of supply outside India, or buy SEZ to SEZ, or supply of goods to international tourists, by default it is always IGST. And in few cases you are required to find place of supply, like import of services, or when you talk about supply of goods or services in India, place of supply outside India, you are required to find place of supply. But when you talk about this scenario, you are required to find both location of supplier and place of supply. It may be IGST, it may be CGST plus SGST or CGST plus UTGST. Right, for the first time here. So this is second category. And third category, if at all you are not covered anywhere above. So this is third category. First category, second category, third category, you are not covered anywhere above. You are not at all covered here. A classic example of this category is your security lending scheme. Security lending scheme. When you can never find location of supplier. Place of supply you will find. Security lending scheme comes under RCM. So both the lender and the borrower of security will never know who each other. So you may find place of supply as a recipient because you have to pay under RCM, but you will never know location of supplier. If you are not covered anywhere above, then by default it is IGST. By default it is your IGST. If you are not at all covered, if you are not able to find out any of them, then you are covered by default under interstate supply. If you see the first part and last part, it is IGST. In second part, you are talking about IGST or CGST and SGST. Now what is section 9? Section 9 is a mere time pass clarification. If at all either the location of supplier or the place of supply is there in a coastal state or union territory. Supposing it is somewhere in the coastal area of Kerala and Karnataka, then from Kerala, nearest point of Kerala to that coastal area, and same nearest point of Karnataka to that coastal area, find the small distance. If from that coastal area to the nearest point of Kerala is say 10 nautical mile, if from that coastal area nearest area of Karnataka is say 7.2 nautical miles, so 10 nautical miles and 7.2 nautical miles, which is the nearest one? From coastal area to Kerala 10 nautical miles, coastal area to Karnataka 7.2 nautical miles. So smaller distances from coastal area to Karnataka, then you will take that location of supplier as or place of supply in Karnataka in our example. So if at all you find either the location of supplier or the place of supply in the territorial waters of India, from that you connect it to the nearest coastal state or union territory and find the shortest distance. In our example, from the territorial waters of India to that coastal state, that is Kerala, it was 10 nautical miles, nearest this shortest distance. From that territorial waters of India to Karnataka, it was 7.2 nautical miles. So 10 nautical miles to 7.2 nautical miles. 7.2 is the nearest. So you will treat that location of supply or place of supply as in Karnataka. So that is a clarification given in section 9. So when you talk about section 7, 8, 9, it talks about when it is interstate and when it is intrastate. Section 9 is more of a clarification. Now, talking about section 10 and 11. Section 10 and 11 talks about your place of supply for goods. Place of supply for your goods. Section 11 talks about when it is import and export, and section 10 talks about other than import and export. So first let us see section 11, where it talks about import of goods and export of goods. For import of goods, your place of supply is location of importer. When the goods are imported into India, the place of supply is location of importer. Which means if the importer is in Chennai, but the goods are imported in Mumbai, place of supply is not Mumbai, it is Chennai, because location of importer, not location of where goods are imported, location of importer. Place of supply is location of importer. And friends, when you're talking about export of goods from India to outside India, it is place of supply is location outside India. The goods are exported from India to Germany, it is Germany, location outside India. Friends, when you talk about section 10 and section 11, please keep one thing in mind, that we are discussing only about supply of goods. We are not talking about supply of services. So for import of goods, POS is location of importer. For export of goods, place of supply POS is place outside India, location outside India. Now, if at all it is not import and export, it is covered in section 10. Section 10 has got 5 categories: 10.1a, 10.1b, 10.1c, 10.1d and 10.1e. The first is a category where you are talking about supply of goods involves movement of goods. That is supply of goods which involves movement of goods. Then the place of supply is location of goods at the time where the movement terminates for delivery. Where the goods are located when the movement terminates for delivery to the recipient. So when you are talking about supply of goods is there along with movement of goods. Normal supply of goods. Supply of goods is there along with movement of goods. Place of supply is location of goods at the time where the movement terminates, when the movement is stopping for delivery to the recipient, for handing over the goods to the recipient. Now, supposing you are talking about an example here. Mr. A of Maharashtra is selling 10 laptops to Mr. B of Delhi for delivery in Delhi. Place of supply is Delhi, because location of goods when the movement of goods terminates for delivery to the recipient is Delhi. But make one thing clear. Supposing if in the same example I tell that Mr. B of Delhi came to Mr. A of Maharashtra, took the laptop, and he never said where he is going to take. He came as a B2C customer and took the laptop, he is not informing. Then place of supply is Maharashtra, because for the supplier it is very clear that movement terminates in Maharashtra itself. He does not know where the goods are going to be taken. So it is location of the goods where the movement terminates for delivery to the recipient. If the supplier is aware where the goods are going to be taken, then it is where the goods movement will terminate. But if supplier is not aware where the recipient is going to take the goods, then the moment he is handing over the goods to the recipient, that is place of supply, because for him the movement terminates and the goods are delivered to the recipient. So if in the same example I said Mr. B of Delhi is not giving any details to the supplier and is going to retail shop and taking the goods, place of supply would have been Maharashtra. Now second scenario, where there is supply of goods but no movement of goods. So there is supply of goods but there is no movement of goods. Place of supply is location of such goods at the time of delivery to the recipient. Constructive delivery, when the goods are constructively with the recipient. It is location of goods when the goods are constructively given to the recipient, because movement is not there. Let us understand with the help of example. Mr. A of Tamil Nadu has leased the machinery to Mr. B of Uttar Pradesh. Understand that the initial part of the transaction is supply of services, which will not be discussed in section 10 or 11. It will be discussed in section 12 or section 30. Right, so I am Mr. A, you are Mr. B. I have given you the machine on lease. It is supply of services. Place of supply will not be discussed here. It will be discussed in section 12 or section 13 as the case may be. After 10 months, the same machine is sold to Mr. B as is whereas basis, which means now the machinery has gone to Uttar Pradesh and machinery was on lease for 10 months. After 10 months, Mr. A is selling that okay, Don't give me lease amount, I'm selling you the machinery, you take the machinery. So sale is happening after 10 months, and when sale is happening, there is no movement of goods. So supply of goods is there, but there is no movement of goods. Place of supply is location of goods where they are handed where they are constructively delivered to the recipient. So location of such goods at the time of delivery to recipient. So constructive delivery to the recipient in terms of title being transferred is in Uttar Pradesh. Place of supply is Uttar Pradesh. So when the title is actually transferred, when they are delivered to the recipient, the location of goods is in Uttar Pradesh. So answer is your Uttar Pradesh. Next, you're talking about a scenario where goods are delivered by the supplier to recipient or any other person on direction of third person. On direction of third person. Place of supply is principal place of business of such third person. Principal place of business of such third person. Now let us try to understand this. You are talking about three parties being involved. A in Tamil Nadu, B in Maharashtra, and C in say Delhi. So A is supplying to B, and B is say supplying to C. So there are two supplies involved, supply 1 and supply 2. But A is directly giving the goods to C. So movement is only one. Understand that we are going to find out place of supply for supply, not for movement. Now what is the place of supply for this scenario? Now what they are telling, they are calling Mr. A as supplier, Mr. B as third person. Actually it is an incorrect point. Mr. B technically is the recipient. Mr. B technically is the recipient. Why he is the recipient? Because for A he is the recipient and they are calling Mr. C as recipient. So there is an incorrect terminology given by the section. Let us go with this incorrect technology. I repeat, for Mr. A, B is recipient and C is third person. But in this provision they are calling Mr. B as third person and C as recipient. Now they are telling that place of supply for the first transaction is principal place of business of third person, which means Maharashtra. For A to B, place of supply is Maharashtra, and for B to C, it will be covered in the main part where the movement terminates. Place of supply is where the movement terminates for delivery to the recipient. Where the movement is terminating, it is Delhi. So when you talk about the first supply, A to B, you are talking about supplier and third person. Technically Mr. B is the recipient, but they are calling it as third person. Your place of supply is principal place of business of the third person, which is Maharashtra. So Tamil Nadu to Maharashtra, place of supply is Maharashtra. For B to C, it will be covered in the basic provision where the location of goods is there when the movement terminates for delivery to the recipient and the movement is terminating in Delhi. So it will be Delhi. Right. So that example, same kind of example is given here. Now friends, when you talk about the next scenario, you are talking about where the goods are assembled or installed at site. Where supply of goods involves assembly and installation as well. So supply of goods is there along with installation or assembly. Place of supply is such installation or assembly. Place of supply is such installation or assembly. Now let us try to understand this. Mr. A of Tamil Nadu gives contract to Mr. B of Madhya Pradesh. So supplier is Mr. B, recipient is Mr. A, to assemble a power plant in UP refinery. To assemble a power plant in UP refinery. Recipient is in Tamil Nadu, Mr. A, he is the recipient. But assembly of machinery will happen in Uttar Pradesh. So place of supply is Uttar Pradesh. So Mr. A being the recipient, he is telling the supplier Mr. B that you give the machinery to Uttar Pradesh and you assemble it there in Uttar Pradesh. Please understand that you are not talking about assembly services, you are talking about supply of machinery along with assembling or installation. So when that supply of machinery is happening along with assembling or installation, it is happening in Uttar Pradesh. So place of supply is Uttar Pradesh. If Mr. A wants a credit, he has to take registration in Uttar Pradesh. Obviously when he is having a power plant in Uttar Pradesh, he will be doing some work in Uttar Pradesh. Before invoice is being raised, Mr. A better take registration in Uttar Pradesh so that he can take the input tax credit. And when you're talking about the last scenario where the goods are supplied on board a conveyance, during conveyance the goods are being supplied. Supposing you are flying in aeroplane and suddenly watches are being supplied to you. They give an option that we have these all items, watches, gadgets, etc., etc., and you're purchasing those gadgets when you're in flight. Place of supply is location of goods, location where the goods are taken on board. Location where the goods are taken on board in that particular aeroplane. Now let us try to understand this. In a flight of Goa to Delhi, which is via Mumbai, flight is going from Goa to Delhi via touching intermediate place Mumbai. Watches are taken on board in Goa. Watches are taken when the flight is starting in Goa, but they are sold in Mumbai. So watches were taken on board in Goa. Supposing hundreds of watches are taken on board in Goa, but out of 100 watches, 10 watches are sold when the flight is in Mumbai. Understand that for all the 10 watches. So out of 100 watches which are taken on board in Goa, sale is only of 10. So supply is only of 10. You're talking about place of supply only for 10 watches, which is where they were taken on board a conveyance, which is Goa. Place of supply is Goa. You're not talking about all the 100 watches. You're only talking about your 10 watches. So that is everything about your section 10. 5 scenarios. Section 10. So when you talk about your section 10 and 11, it talks about place of supply for goods, not for services. Place of supply for your goods. Yes friends, now let us talk about your section 12, where you're talking about your place of supply for services, but a very important point, both location of supplier and location of recipient are in India. Understand that if location of supplier as well as location of recipient are in India, then you're going to apply section 12. If either location of supplier or location of recipient is outside India, please go to section 13. Now when you talk about section 12, it has to be categorized into two parts. The first part is where you're talking about place of supply is based on registration status, and the second part will be discussing where place of supply is not based on the registration status of the recipient. So we are not going to discuss the section in sequence. We are going to discuss that in two parts. One, where the place of supply is initially based on the registration status of the recipient, which basically means the general answer will be the location of registered recipient. Now, if you see the first part here, you are talking about general services which are not covered elsewhere. If this general services means any service which is not covered elsewhere, right, starting from section 12.13 to section 12.3 to section 12.14. Now, if at all you are talking about a service not covered anywhere in section 12, you are going to come to section 12 subsection 2 general category, where if at all supplies to a registered person. For all the first category, you have to ask whether the recipient is registered or unregistered. If the recipient is registered, then it is the location of such registered recipient. If it is not registered, if the recipient is not registered and you have the address of the recipient on records, you have still the recipient's address, then it is location of recipient. If at all recipient is not registered and you don't have the address of recipient, then it is location of supplier. So basic answer is very simple. If at all recipient is registered, it is location of registered recipient. If not registered, then do you have the address on records? If yes, location of recipient. If not, location of supplier. Let us try to understand this with the help of this example. We are talking about a scenario where Mr. DK, who is a chartered accountant of Tamil Nadu, is providing legal services to Mr. VK of Madhya Pradesh. If at all, you are talking about recipient being registered. If Mr. VK is registered person, if at all Mr. VK is registered person, it is location of registered person and recipient Mr. VK is in Madhya Pradesh. If at all I tell Mr. VK is not registered, recipient is unregistered person, ask next question whether address is there of the recipient on record. If at all address of Mr. VK Madhya Pradesh is there, again place of supply is Madhya Pradesh. If the supplier DK is not having the recipient's address, then it is location of supplier. Where is the supplier located? Supplier is of Tamil Nadu. So that way you have to understand. Now the next category you are talking about, we are not talking about section 12 in continuation. You will be finding ups and downs. Now you are talking about section 12 subsection 5, where you are talking about training and performance appraisal services. Service in relation to training and performance appraisal, which means the location of the recipient or the individual will be must for when I am taking training or performance appraisal, the individuals will be in front of me. Now, if at all the recipient is registered, that is location of such registered recipient. If he is unregistered, location where such services are actually performed. Location where such services are actually performed, performance based category. But if you look at this particular provision, there is a problem that if at all performance is in multiple place, if at all you have performance is in multiple place, law is not giving the answer. Law is silent if performance is at multiple places. Law is not giving the answer. Now let us take an example to understand this category. Mr. DK of Tamil Nadu is giving training to employees of Mr. VK of Madhya Pradesh. Supplier is of Tamil Nadu, recipient is of Madhya Pradesh, both are in India. Then section 12, training to employees of Mr. VK in Madhya Pradesh. Now let us assume that Mr. VK is registered, recipient is registered. If the recipient is registered person, then the place of supply is location of such registered recipient, that is Madhya Pradesh. Whether the training happens in Tamil Nadu or whether the training happens in Goa or whether it happens in Maldives. But if at all you are talking about Mr. VK is unregistered, if the recipient is unregistered, then place of supply is a location of performance. If training happens in Tamil Nadu, then place of supply is Tamil Nadu. If training happens in Goa, then place of supply is Goa. If training happens in Maldives outside India, then place of supply is Maldives outside India. But if training happens in multiple places, then law is silent about it. So these are all individual cases. If I tell training happens partly in Tamil Nadu, partly in Goa and partly in Maldives, there is no answer for this category. Law is silent on this particular answer. That is all about section 2, subsection 5, performance training and performance appraisal. Now friends, we are talking about organization of an event and ancillary services, first category. So you are talking about organization, you are not talking about admission to an event, you are talking only about organization. You will be understanding the importance when you see section 13, because there admission and organization are together. Here admission is separately given and organization is separately given. Organizing an event including ancillary services and also sponsorship to that service to that particular event. So you are talking about organization of an event and related services, also sponsorship service to that particular event. Again, if the recipient is registered, that is location of such recipient. If the recipient is not registered, and if all the events are held in India, if all the events are held in India, it is place where the event is held. If events are held outside India, if events are held outside India, it is location of recipient. They don't want place of supply to be outside India. So if recipient is registered, answer is simple, location of registered recipient. If the recipient is not registered, ask another question. Events are in India? Yes, then it is location of event. Then it is location of event. Events are not held in India, they are held outside India, then it is location of recipient, because recipient is in India. Because recipient happens to be in India in section 12. Now you may wonder, what if you are talking about events in multiple states? If at all I tell that the events you have in multiple states, then you have to refer rule 5. Now what rule 5 is telling? Rule 5 tells that if at all events are in multiple states, place of supplies each of such state or event in proportion to, so you will be having multiple answers. And always whenever you go to rules, these are rules of IGST, first they tell that go as per contract. If the contract is giving the bifurcation, what proportion to which state, then go as per contract. If contract is silent, then you have to go as per generally accepted accounting principles. Now what is generally accepted accounting principles? Let us see the example. If assume that Mr. A is charging 10 lakhs to organize event in 3 states, to organize 3 events, charging 10 lakhs to organize 3 events in state 1 and 2 events in state 2. So totally there are 5 events, out of which 3 will be in state 1 and 2 will be in state 2. Now if the contract is clearly bifurcating what is the value for state 1, 3 events, what is the value for state 2, 2 events, then go as per contract. If it is silent, then you have to go with generally accepted accounting principles. So normal understanding is your place of supply will be multiple states. So your place of supply will be both state 1 as well as state 2. To state 1, the value will be 6 lakhs because 10 lakhs multiplied by, the ratio is now 3:2, 10 lakhs multiplied by 3 divided by 5, and to state 2 it will be 10 lakhs multiplied by 2 divided by 5 because the ratio now will be 3:2. As per generally accepted accounting principles, you have to split place of supply in the ratio of 3:2 because 3 events are in state 1, 2 events are in state 2. So now total value is 10 lakhs, Answer will be both state 1 and state 2. For state 1, it will be 10 lakhs multiplied by 3 divided by 5. For state 2, it will be 10 lakhs multiplied by 2 divided by 5. Now coming to the main answer, we are talking about actually organization of event, related services, ancillary services and sponsorship to that event. If you are talking about Mr. DK of Tamil Nadu is organizing an event for Mr. VK of MP event. So recipient is in Madhya Pradesh. If at all I tell Mr. VK is registered person, whether the event is anywhere, answer is very simple. It is location of registered recipient. Whether the event is there in Tamil Nadu or Goa, Maldives, forget about it. If at all, Mr. VK is not registered, then if the event is in Tamil Nadu, answer is Tamil Nadu. If the event is in Goa, answer is Goa. But wait. If the event is in Maldives, if the recipient is unregistered, ask a question whether the event is in India or outside India. If the event is in Maldives, outside India, then it is location of recipient. Madhya Pradesh. Now, if events are in multiple places, Tamil Nadu as well as Goa, then we have already discussed how it will be the answer. Either split that into value of as per contract, if not, go as per generally accepted accounting principles. Now, look at the difference. When you are talking about training and performance appraisal, if the recipient is not registered and if training is at Maldives, you go with Maldives. But when you talk about events, if the recipient is not registered and if the event is outside India, place of supply is location of recipient, Madhya Pradesh. So that is a clear-cut difference that you can find out. Now, next we are talking about transportation of goods. Goods transportation services. In goods transportation services, before asking whether the recipient is registered or not, first there is one more bifurcation. If the goods are being exported, then the place of supply is destination of goods. If the goods are not being exported, then if the recipient is registered, location of that registered recipient. If the recipient is not registered, then it is origin of goods, where the goods are handed over for transportation. Now, a very special point here for transportation of goods. Before checking whether recipient is registered or not, ask yourself a question whether the transportation is of goods for export. If it is so, then destination of goods. We are not talking about goods, we are talking about transportation of goods for export. Then it is destination of goods. If it is for movement within India, if the recipient is registered, it is you are talking about location of that registered recipient. If not, where the goods are handed over. Now let us see this example. Mr. DK of Tamil Nadu is giving the goods to GTA of Tamil Nadu for delivering to Mr. VK. So you are talking about consignor DK of Tamil Nadu, consignee VK. So consignee, we are talking about consignee, and the supplier is GTA. Recipient will be either consignor or consignee depending on who is making the payment. Now let us first understand. If at all I tell it is for transportation, if Mr. VK is in Nepal, so now the goods are being transported to Nepal. If it is for export of goods, then place of supply is destination of goods, that is Nepal. So if at all you are talking about export, don't ask any question. If the consignee is in Nepal, then you are talking about you are exporting the goods. Then you are exporting the goods, place of supply is destination of goods, Nepal. Don't check anything else. If at all it is for movement within India, then ask yourself a question: who's paying the freight? Is Mr. VK is paying the freight or Mr. DK is paying the freight? Who's paying the freight? Whether Mr. VK is paying the freight or DK is paying. If VK is paying the freight, then VK is the recipient. If DK is paying the freight, DK is the recipient. So ask yourself a question: who's the recipient? Now, if at all I tell that Mr. VK is paying the freight, that is consignee is paying the freight, and Mr. VK is registered. Mr. VK is registered. So if he is registered, Mr. VK is registered person, and assume that he is in Madhya Pradesh, answer is Madhya Pradesh. If Mr. VK is not registered, answer is where the goods are handed over. The goods are handed over at Tamil Nadu. Now, in the next case, you are talking about DK. It's not VK anywhere. It's all DK. Supposing DK is in Madhya Pradesh. Initially VK was in Madhya Pradesh, DK is in Madhya Pradesh. If DK is registered person, registered person. The moment DK is registered person, please understand that again there is one more correction. DK in our example was clearly in Tamil Nadu. If you see the question, DK was clearly in Tamil Nadu. So if DK is registered, first one correction is here you are talking about DK, and second correction is DK is there in Tamil Nadu. Clearly question is telling VK's place was not disclosed, but DK is clearly in Tamil Nadu. If DK is registered person and he is in Tamil Nadu, place of supply is Tamil Nadu. If DK is not registered person, even then place of supply is Tamil Nadu because the goods are handed over for transportation in Tamil Nadu. Look at the difference. First, in this case, you have to ask yourself question whether it is for export. If it is for export, forget about who's there and who's the recipient and all. Answer is destination of goods, Nepal. If it is not for export, in all these cases, it is not for export. If it is not for export, then ask yourself who's the recipient. Whosoever is paying the freight is the recipient. If he is registered, location of that registered person. If he is not registered, location where the goods are handed over for transportation. That is all about your transportation of goods. Section 12, subsection 8. Now you are talking about passenger transportation services. Passenger transportation services. Now in passenger transportation services, if the recipient is registered, location of such person. If the recipient is not registered, then if at all, you have to ask one more question whether it is going by a pass or it is not going by a pass. If the embarkation, place of embarkation is known at the time of supply, which means you are getting the ticket for each travel, then it is a place where you are embarking for a continuous journey. For a continuous journey. What is a continuous journey? Continuous journey means there is no stopover. There is no stopover between two legs of journey. Right? And it is against a single invoice of the particular person, or if it is multiple invoice given by the single supplier or agent representing the supplier. So whether it is single invoice or multiple supply is not important. There is no stopover. Supposing I am going from Coimbatore to Delhi via Mumbai and the train is changed. If it is a single ticket, the second ticket is a zero ticket. It is a continuous journey. If I have two tickets and both are separate tickets, Coimbatore to Mumbai, one ticket, separate ticket, and Mumbai to Delhi, second ticket, then it is not a continuous journey. So in a continuous journey, generally it is against a single invoice or multiple invoice, but the second invoice will be a zero ticket. The entire value will be charged initially. Now that is meant by continuous journey. I repeat, Coimbatore to Delhi via Mumbai. Two trains are being changed or flight is being changed. If at all, it is a chain ticket where first ticket will have the value, second ticket will be a zero ticket. If at all that is the scenario, there is continuous journey from Coimbatore to Delhi. If at all it is Coimbatore to Mumbai separate ticket and then Mumbai to Delhi separate ticket, then there are two journeys, two continuous journeys. Now talking about the answer, if at all you know the journey, each we are paying for each of the ticket. There is no pass concept. There is always a pass concept. If you are not going by pass concept, it is place of embarkation, which means where you are getting inside the conveyance, where you are getting inside the train or where you are getting inside the flight. If at all place of embarkation is not known, which means if at all I have a pass to travel in a train or flight for the entire year, and I am paying for that entire year. So it is not for each of the ticket. I am paying for that entire year, which means during the year in a flight I can go 10 times within India. From where to where and all is not there. So I am paying single shot for entire year, and I have a pass kind of thing where I will be using that pass for my 10 next time journeys in a particular flight, and I don't know from where I will start, where I will end, but it should be within India, say for example. Then if the address of the recipient is there on records, location of recipient. If address is not there, location of supplier. Obviously generally address will be there, but if it is there, location of recipient. If not there, location of supplier. If you see, if the recipient is registered, the chapter ends there. If not registered, then if it is for a single ticket, then where you are embarking. If it is not for a single ticket, it is for a passage, whether the location of recipient is there in records or not there in records, will have the answers. 4 categories. Assume that Mr. DK of Tamil Nadu is paying 50,000 to Indigo flight of Madhya Pradesh. Now understand that this time DK happens to be the recipient and Indigo happens to be the supplier for passenger transportation service. Now if the recipient is registered, forget about everything else. If it is registered Answer is location of registered recipient Tamil Nadu. If the recipient is not registered, DK is not registered, and there is a pass concept, which means I'll be using that pass for my next 5 journeys or next 10 journeys. I don't know where I'm going to embark. If DK's address is there on records, Tamil Nadu. If DK's address is not there on records, it is location of supplier, Madhya Pradesh. If DK is unregistered and it is for a single each time travel, there is a separate ticket. There is no pass concept. Then if DK is entering inside the conveyance, if he is entering inside the train or flight in Tamil Nadu, it is Tamil Nadu. If he is entering inside the train or flight or any other conveyance at Uttar Pradesh, see, DK may book a ticket from Tamil Nadu but for his return travel, then it is Uttar Pradesh. Whereas embarking the conveyance for a continuous journey. So from Coimbatore, I can book a ticket from say Ladakh to say Mumbai. So when I am embarking the conveyance, it is Ladakh. So place of supply would be Ladakh. So that is all about this particular point. As I said, if it is a continuous journey, Coimbatore, Mumbai, Delhi, but it is a continuous journey, single invoice is there, then place of supply is Coimbatore. But if I am taking 2 tickets, Coimbatore to Mumbai and then Mumbai to Delhi, 2 separate tickets, then there are 2 supplies. For the first supply, it is Coimbatore because I am embarking the conveyance in Coimbatore. For the second supply, it is Mumbai because I am embarking the conveyance in Mumbai. But this is when I am not registered. If I am registered, then for both the tickets, it will be location of registered recipient. And lastly, friends, we are talking about insurance services. Insurance services, if recipient is registered, location of such registered recipient. If the recipient is not registered, then location of recipient, because for insurance cases, location of recipient will be surely there on the records of the supplier. Now, if you are talking about a scenario where Mr. A working in Tamil Nadu buys the LIC policy giving his residential address of Madhya Pradesh. So in this scenario, obviously when I am taking an LIC policy, I am talking about recipient being not registered. So here place of supply is Madhya Pradesh, because what is the address on records of the insurance company? Address on records of the insurance company is Madhya Pradesh. If I tell Mr. VK of Tamil Nadu, who is registered, is buying stock insurance for his stock, place of supply is Tamil Nadu, that is location of registered recipient. Now this is not completing section 12, it is completing the first part of section 12, where you are talking about place of supply depending on registration status of the recipient, be it general category, be it training and performance appraisal category, be it organization of event including ancillary services and sponsorship to that event, passenger transportation services, you are talking about goods transportation services, you are talking about insurance services. Now next we are talking about a scenario where your place of supply is not depending on registration status. Your place of supply is not dependent on registration status of the recipient. Now you need not worry whether the recipient is registered or not. So first category, you are talking about your immovable property services, where the services are directly in relation to immovable property. Example, construction services, architect services, real estate agent services, interior decorator services. Also accommodation by hotels, motels, guest house, etc., including for organizing an event in that hotel, services ancillary to above. Here you are not only talking about immovable property, but also you are talking about boats and vessels. Then place of supply in that category is, if at all the boat, immovable property or boat or vessel is located in India, then it is location of that immovable property, boat or vessel. If it is located outside India, then they tell that no, it is location of recipient. So they'll ask whether the immovable property, boat or vessel is in India. Yes, then location of that immovable property, boat or vessel. If it is outside India, then it is location of recipient. Now let us see this scenario. If at all DLF is engaged in drawing design for construction of a building of Mr. DK of Tamil Nadu. So supplier is DLF and recipient is DK of Tamil Nadu for 1 lakh. And this is drawn for a building. This is drawn for a building in USA. If it is for a building or immovable property, boat or vessel outside India, then place of supply is location of recipient, Tamil Nadu. If it is drawn for a building in Madhya Pradesh, then the place of supply is location of immovable property. If you are talking about an immovable property, boat or vessel outside India, place of supply is location of recipient. If you are talking about an immovable property, bought a vessel in India, then the place of supply is location of that immovable property or your boat or vessel, right? So that you need to remember. Now, when you're talking about this immovable property related services of boat or vessel, it might happen that place of supply is multiple states or union territory. If at all you are getting an answer where place of supply is multiple states or union territory, the moment you get multiple answers, it is in multiple states or union territory for a single contract. First, always when you talk about first solution is always go as per your value as per contract. Split the answer as per contract. If the contract is not there or if it is silent, then go as per your rule 4. Now what is rule 4 telling? If you see rule 4 here, they have bifurcated that into 3 categories. First, you are talking about accommodation and ancillary services at a houseboat. They are only talking about boat or vessel. They are only talking about boat or vessel. Second, they are talking about immovable property. Accommodation and ancillary services by a hotel other than a scenario where a single hotel is located in 2 states or 2 or multiple states. There is one more category. You are talking about accommodation, which means when you talk about accommodation or ancillary services in a hotel where a single property is located in multiple states, it will come in third category, plus all other immovable property related services. If you see, first it is talking about boat or vessel. Second and third it is talking about immovable property. In boat or vessel, obviously there is only one category, accommodation services in houseboat or vessel. But in immovable property, in second category, they are only talking about accommodation in hotels. But that it should not be a hotel which is located in 2 states. Single hotel located in 2 states, border of the state. If it is a single hotel located in 2 states, go to the third category. And if other immovable property related services, what is other immovable property services? Architect services, construction services, interior decorator services, all these services will come here. Now, let us first talk about your accommodation and ancillary services in a hotel, in a boat or vessel. Then the answer will be split. If at all you get multiple answers, the answer will be split as per logical answers. Time spent by the boat in different states. Time spent by the boat in different states. Now let us take an example to understand this. There is a guest boat house in Kerala, the boat house office of Kerala, and it is going 22 hours in Kerala and then goes to Tamil Nadu for 2 hours. So it is spending 22 hours in Kerala, 2 hours in Tamil Nadu. Place of supply is both. Your place of supply is both Kerala and Tamil Nadu because it is spending time. That boat or vessel is spending time in Kerala as well as Tamil Nadu. But 22 hours in Kerala, 2 hours in Tamil Nadu. Then as declared by the supplier, it will tell that how much time in Kerala and how much time in Tamil Nadu, because it will always, supplier will always know. The value will be apportioned in the ratio of 22:2 or 11:1. If at all you are talking about accommodation or ancillary services in a hotel in multiple states, how it is possible? First of all, you are talking about a scenario where hotel is charging you a consolidated 30,000. Let us understand the example once to understand the answer. 30,000 for 2 nights stay in Delhi. Say Taj Hotel is charging you 30,000 consolidatedly for 2 nights stay in Delhi Taj Hotel and 1 night stay in Agra Taj Hotel. So you have gone to Taj Hotel for 2 nights stay in Delhi Taj Hotel. There are 2 separate hotels but the same group, same company. For 2 nights stay in Delhi Taj Hotel and 1 night stay in Agra Taj Hotel, consolidatedly 30,000 is charged. Now it is very clear that the answer is both Delhi as well as Uttar Pradesh place of supply. But now how you will bifurcate the value? The value will be bifurcated based on the number of nights. Right, so the ratio now will be 2:1. In Delhi to Agra, that is Uttar Pradesh, 1. Now the last category of immovable property talks about 2 scenarios. Accommodation services in a hotel which is single hotel on border of 2 states, plus other immovable property related services like your interior decorator, architect, construction, etc. etc. In that scenario, place of supply will be based on the area of immovable property in each of the state. The space of the area of immovable property in each of the state. Say for example, you are talking about excavation services on a land of 2000 square feet. Partly that land is located in Tamil Nadu, 1000 square feet, and partly that land is located in Kerala, say 800 square feet. Now it is very clear that it is the other category, it is covered in the third category where the place of supply will be Tamil Nadu as well as Kerala, and in the third category you have to bifurcate that in the ratio of the area of land in Tamil Nadu, which is 1200, and the area of land in Kerala, which is 800. So 12:8 will be the ratio. That is nothing but rule 4. So 3 categories of rule 4 we have discussed. Now talking about other services covered in the second part of section 12, where it is not based on registration status. We are talking about restaurant services, catering services, personal grooming services, fitness, beauty treatment services, health services including cosmetic and plastic surgery. These are all the services where the presence of the individual is must for you to give the service. I repeat, these are all, again, they are all performance based services. The presence of the individual is must. The presence of the individual is must for you to give the services. Whether it is restaurant or outdoor catering services, recipient should be that for me to give the services. Personal grooming, fitness, beauty treatment, health services, cosmetic plastic surgery, the person, recipient should be there for me to give the services. In that scenario, place of supply is your location of performance. So for example, you're talking about a scenario, Mr. DK, a fitness expert of Tamil Nadu, goes to Madhya Pradesh for assisting Mr. VK in bodybuilding. Mr. VK may be of Delhi. Mr. VK may be of Delhi. So supplier is of Tamil Nadu, recipient is of Delhi, but bodybuilding assistance is given in Madhya Pradesh. So place of supply is Madhya Pradesh, where it is actually performed. Supply is in other state, recipient is another state, but place of supply is the third state because of location of performance. Next, you're talking about services provided by a way of admission to an event or amusement park and ancillary services. Now, you're not talking about organization of event, you're talking about the entry ticket, admission to the event, admission to the event or admission to amusement park, including ancillary services. The place of supply is where the event is held, location of the event or the park. Right. Supposing Mr. DK of Tamil Nadu buys a ticket for a circus organized by Uttar Pradesh supplier. So recipient is of Tamil Nadu and supplier is of Uttar Pradesh. But the recipient is of Tamil Nadu. The circus is organized by a company of Madhya Pradesh. Supplier is of Madhya Pradesh, but the circus is at Uttar Pradesh. So you have a recipient of Tamil Nadu, supplier is of Madhya Pradesh, but the event is there in your Uttar Pradesh and you are getting a ticket. You are not talking about organization, you are talking about ticket, admission. Then the place of supply is location of that event or amusement park. So that event or amusement park is in Uttar Pradesh. Next, friends, you are talking about services on board a conveyance. You are not talking about passenger transportation services. During passenger transportation services, there are certain services given by the airline or the trains or the bus on conveyance. Then that scenario, place of supply is first scheduled point of departure of that conveyance. First schedule, where the conveyance starts the journey, not where you are entering the conveyance, where the conveyance starts the journey. Supposing Mr. DK of Tamil Nadu, there is a flight from Goa to Delhi via Mumbai. He is buying movie on demand. Mr. DK is of Tamil Nadu. He may have entered the flight in Goa or he may have entered the flight in Mumbai. But he is getting the services during on board a conveyance. Then the place of supply is the first scheduled point of departure of the conveyance, which is place of supply is Goa, because the conveyance is starting from Goa to Delhi. It may be going via Mumbai, but it is starting from Goa to Delhi. So whether Mr. DK is of Tamil Nadu or he is entering the flight in Goa or he is entering the flight in Mumbai, not important. Place of supply is Goa. Place of supply is Goa. And friends, when you're talking about banking and financial services, including stock broking services. So when you talk about banking and financial services, including stock broking services, your place of supply is if the address is there on records, location of recipient. If the address is not on records, location of supplier. See, in the second part of section 12, you forget the fact whether the recipient is registered or not. The answer is same for the recipient who is registered. The answer is same for the recipient who is not registered. Now, Mr. DK of Tamil Nadu buys shares from a broker of Madhya Pradesh. So, supplier is in Madhya Pradesh, recipient is in Tamil Nadu. Because it covers banking, financial services, including stock broking, if the address is there on records of the recipient, that is Mr. DK. Place of supply is Tamil Nadu. If the address is not on records, it would have been Madhya Pradesh. So that is all about your banking financial services, including stock broking services. Now friends, we are talking about your telecommunication services. You are talking about your telecommunication services, including data transfer services, all related services, broadcasting services, cable, DTH, all these services, telecommunication services. Now we are talking about telecommunication services. Please ask yourself a question: whether it is landline category or it is without landline, which means it is other than landline. There is no cables and all. If it is fixed telecommunication lines, lease circuits, internet lease circuits, cable or dish antenna, you will find wire. You may make it very simple: wire category, wireless category. You may make it very, very simple: wire category, wireless category. Wireless category. If it is wire category, if at all it is wire category, then your place of supply is location where the wires or the devices for the wires are installed. When it is wire category, there will be a central device where the devices are installed. If that installation is in multiple states, then the answer will be multiple states and you have to split that value as per contract. If contract is silent, then go as per rule 6. Now what is rule 6 telling? Rule 6 is, let us understand this rule 6 with the help of an example. This example is very clear. If there is a lease circuit, wire category, installed between Chennai, Bangalore and Mysore offices. So there is a company which is having branches in Chennai, Bangalore and Mysore, and the common lease server, dedicated lease service. So when you talk about big companies, they'll have a dedicated line. They'll not have use normal line, dedicated line, which is installed between Chennai, Bangalore and Mysore offices. So that particular line is going to Chennai, Bangalore as well as Mysore only for that company. So that company will be paying a bigger amount because it wants a dedicated line for all its offices between Chennai, Bangalore and Mysore offices. Now understand that first point will be in Chennai and the other 2 points will be at Karnataka. So 1 point, 1 device will be there in Chennai and 2 devices will be there in Karnataka, that is Bangalore and Mysuru. So place of supply, because now the device is installed in 3 places, Chennai, Bangalore and Mysuru. Place of supply will be both Tamil Nadu and Karnataka. If the contract was giving the split up, go as per contract. You need not even come to rule 6. If the contract is not giving split up, then it will be apportioned in the ratio of 1:2 because of the number of points in that state. Number of points in Tamil Nadu is 1, number of points in Karnataka is 2. Number of points or devices in Tamil Nadu is only 1, Chennai. Number of points or devices in Karnataka is 2, 1:2. So that is nothing but your rule 6. This rule 6 is only for wire category. It's only and only for your wire category, because where only you are talking about where the device is being installed. Now when you talk about wireless category, telecommunication services, where you talk about wireless category, mobile connection, you have internet services, mobile connection, data transfer, wireless category. Then ask another question, whether you are talking about prepaid, postpaid or prepaid. Next question should be whether we are talking about your postpaid category or whether we are talking about your prepaid. Postpaid category, prepaid category. If it is postpaid, the answer is pretty simple. You are going to go with the location of billing address. Location of the billing address, because if it is postpaid, billing address will surely be there. Place of supply is the location of billing address of the recipient. Now the problem comes only if it is prepaid. The supplier may not have the address of the recipient. Then you have to ask another question, whether the prepaid is through selling agent or a reseller or distributor of SIM cards or recharge vouchers. But you are not directly contacting Jio. Supposing you are recharging Jio on internet, whether you are directly contacting Jio or not directly contacting Jio. Supposing you are going via a reseller or a selling agent or a distributor, then please understand that there are 2 categories: Jio to reseller, reseller to you. Jio to reseller, it will be address of the selling agent, reseller or the distributor. Jio to reseller will be address of the selling agent, which means the location of the selling agent, reseller or the distributor. Now you may ask a person, when you're talking about the second limb, The second limb you are talking about any person to final subscriber. This any person, here you are talking about only Geo to reseller. Here you are talking about Geo to final consumer or reseller to final consumer. Both are covered. Both are covered. Then in that scenario, place of supply is location where the payment is made. Where the reseller will not know where you are located. So location where the prepayment is made or such vouchers are sold, which basically means location of the supplier, where you are getting the payment or where the vouchers are being sold. Basically nothing but location of supplier. Now in other cases where you are making the payment by internet banking, this and all you are talking about other than internet banking. If you are making the payment by internet banking, then place of supply is address of the recipient on records of the supplier if it is available. If not, location of supplier. So when you talk about prepaid category, first you understand there are multiple access. If at all I tell that it is by way of payment is by way of internet banking or electronic mode, debit card, credit card, then the place of supply is the address of the recipient on records. If address of the recipient is not on records, not always address of the recipient will be on records, then it is location of supplier. If at all you are not making the payment by internet banking or electronic mode, then ask yourself whether you are talking about Geo to reseller or Geo to final customer or reseller to final customer. If it is Geo to reseller, for Geo to reseller, place of supply is that reseller place because he can take the credit. For Geo to final consumer or reseller to final consumer, where the payment is received or the vouchers are sold. So that is all about your telecommunication services. Now friends, the last category we are talking about advertisement services to government. Please make one thing very crystal clear, that you are talking about advertisement services to government. If it is to other than government, it will go in normal category, section 12 subsection 2. It is advertisement services to government. Advertisement services to government. When you are giving advertisement services to central government, state government, statutory body or local authority, and it will be obviously given in a place where multiple states are covered, then place of supply is each of the state where advertisement is given. If at all you can split the value as per contract, then go as per contract. If not, go as per rule 3. When you see rule 3, you will understand whenever you see the advertisements of government, whether be it Delhi government or be it Rajasthan government, Maharashtra government, Tamil Nadu government, all the governments will try to give advertisements of their state. So you are talking about you are giving advertisement services to government. You are the supplier and government is the recipient. The answer will be multiple states, because advertisement will not be only in that state, it will be in multiple states. If at all the advertisement is shown in television, anyone sitting in India can see, or rather even outside India can see that particular advertisement. Now, if the advertisement, now you have to ask yourself multiple questions. If the advertisement is by way of newspapers or printed material, like your pamphlets, diaries, or even t-shirts, because it is a printed material, you are giving the advertisement of say a particular Delhi government on t-shirts or Gujarat government on t-shirts, right? Now in that category, bifurcation will be based on number of editions or materials given to each of the state. Physical location of press is not relevant, where they are printed is not relevant, which means if at all the advertisement is given on newspaper or say for example t-shirts or pamphlets or diaries, and if these newspapers are 1 lakh copies is given to Tamil Nadu and 2 lakhs in Karnataka, so the answer will be Tamil Nadu and Karnataka in the ratio of 1:2, number of editions of that material. If it is on hoardings on train, not on any other place, hoardings on train, hoardings on other places is different. Hoardings on train, if at all you see an advertisement on a train which is running from say Mumbai to Delhi, there's a train between Mumbai to Delhi, the advertisement is on a train, then the bifurcation will be based on length of the railway track in each of the state of the train. Supposing, I'll change the question, supposing there is an advertisement on a train which is travelling from say Coimbatore to Karnataka, Coimbatore to Bangalore via Kerala, Coimbatore to Karnataka via Kerala, if at all there is a train, right? So Coimbatore touching Kerala, then going to Karnataka, that train and supplier is the person who is giving advertisement services, recipient is the government. Then you have to see that train route, how much kilometers in Tamil Nadu, say 150 kilometers in Tamil Nadu, 200 kilometers in Kerala, and 300 kilometers in Karnataka. So now the answer is Tamil Nadu, Kerala and Karnataka in the ratio of 150 is to 200 is to 300. Length of the railway track in which the train is going. If I tell that you're talking about hoardings but not train, or cinema halls or multiplex, advertisement on hoardings, normal hoardings which you can see when you're traveling on road, or cinema hall or multiplex, then in that scenario there's no clear cut answer. You have to refer the contract actually. The answer is you have to see the amount payable for the hoardings in Tamil Nadu, amount payable for the hoardings in Karnataka, amount payable for the hoardings in Kerala and so on, or amount payable for the showing the advertisement in cinema halls in Tamil Nadu, say PVR in Tamil Nadu, amount payable in Karnataka, amount payable in Kerala. You have to break. Actually, you have to refer the contract. There's no option. Whenever they refer to amount payable, they tell that contract should give the bifurcation. Contract should give the bifurcation. Now, the next category you're talking about on the back of utility bills, which means on the backside of railway tickets, on the backside of gas company, or on the backside of electricity bill. If it is on the backside of railway ticket, if at all it happens to be on the backside of railway ticket, supposing you're talking about advertisement given by railway station, I mean a particular station, you are paying that advertisement on backside of the railway ticket, paying for the advertisement on the backside of the railway ticket, where this on the print backside of the railway ticket, it will be printed in entire southern India. Entire southern railways, on the backside you will be having the advertisement of government. Say Tamil Nadu government is paying to railways for printing on the backside of railway ticket for the entire South India, including Tamil Nadu, Kerala, whether the ticket is printed, railway ticket is given in Tamil Nadu or it is given in Kerala, Karnataka, Andhra Pradesh, Orissa. When the printout is given on the backside of the railway ticket printout, you will be finding the Tamil Nadu government advertisement. Now, if at all the payment by Tamil Nadu government is to railway department for single contract, the value of the contract is not split. Understand, supplier is railway, recipient is government, Tamil Nadu government. Supplier can be anyone, recipient should be government. Then the apportionment will be on the basis of ratio of number of railway stations. Ratio of number of railway station in each of the state. So then you will find out, okay, if at all, assume that, let us make it not entire southern India. Supposing Tamil Nadu government is paying to railway department for printing Tamil Nadu government's advertisement on the backside of the railway tickets which are given in Tamil Nadu or Kerala or Karnataka and Andhra. And you have to find the number of railway stations which are there in Tamil Nadu, Kerala, Karnataka and Andhra. On that particular ratio, you have to split. If it is on the backside of other utility, other tickets, not railway tickets, say on the backside of gas company, gas bill, or on the backside of EB bill, let us say that Tamil Nadu government has paid to LP gas company, Indian gas company, and said that on the backside of your gas bill, give our advertisement. Supplier is Indian company and recipient is Tamil Nadu government. Now, the contractor says that Indian company has said that whether we are giving the gas cylinders in Tamil Nadu or Kerala or Karnataka or Andhra, on the backside you will be having Tamil Nadu government's advertisement. Now, from the point of view of Indian company, think how it will be split. Supplier is Indian, recipient is Tamil Nadu government. Whenever Indian company gives the gas bill in all these 4 states, it will on the backside will be having the advertisement of Tamil Nadu government. In that scenario, how many consumers Indian is having in Tamil Nadu, Kerala, Karnataka and Andhra will be the basis. So, number of consumers of Indian company in each of the state. Number of consumers of Indian company in Tamil Nadu, number of consumers of Indian company in Kerala, number of consumers of Indian company in Karnataka, number of consumers of Indian company in Andhra will be the ratio in which it will be split. Next, you are talking about if government advertisement is given in radio. Again, when you talk about advertisement by hoardings other than rail, advertisement in cinema hall, multiplex or radio, there you don't have a clear cut answer. They just simply tell that it is amount payable to each of the radio station which is part of the state, which means if at all my advertisement is on say Radio Mirchi Chennai, Radio Mirchi Mumbai, Radio Mirchi Delhi, right? So Chennai, Mumbai and Delhi will be, the value will be split based on how much I am paying to Chennai, how much I am paying to Radio Mirchi Mumbai, how much I am paying to Radio Mirchi Delhi. So again, for this contract should give an answer. For this contract should give an answer. Whenever I am talking about amount payable, my contract should give an answer. Obviously, studio location is not important. From where you are going to tell is not so important. Studio location is not relevant. Finally, you are talking about advertisement given to government on television channels or on internet or on SMS. TV, internet or by SMS. If it is television channels, friends, you are talking about viewership in that state. How many, supposing Tamil Nadu government is giving advertisement in Republic TV. So how many viewers of Republic TV are there in each of the state? That will be the proportion. And that information will be given by BARC, Broadcast Audience Research Council. If Tamil Nadu government is giving advertisement on internet or by way of SMS, which means it is making the payment to Jio company. Supplier is Jio and the recipient is Tamil Nadu government. Then how much Jio company subscribers are there in each of the state? Will be the answer. So Jio will be having subscriber base in Tamil Nadu, Kerala, Karnataka, all the states. So the bifurcation will be based on the number of subscribers. Now there's a special point here which tells that if at all there is a region when this information of internet and SMS number of subscribers, that data will be given by Telecommunication Regulatory Authority of India. If at all you are while doing such calculation you are getting an answer which is a region comprising more than one state, then that need to be further apportioned on the basis of population. Now for this you need to understand, supposing there is an advertisement given by Jio to Tamil Nadu government on internet or SMS, but it is only restricted to say Tamil Nadu and Kerala, and there is a common area also. So now that will be split in the ratio of what? That will be split in the ratio of number of subscribers. In Tamil Nadu, the number of subscribers say are say 1 crore. In Kerala, say it is in Tamil Nadu, say it is 5 crores. In Kerala, let us say it is 2.5 crores. In the common area, let us assume there is a common area. There is a common area where it is 1 crore. Now place of supply will be Tamil Nadu, place of supply will be Kerala. This will be split in the ratio of, and place of supply for common area Tamil Nadu and Kerala, this is a common area, will be there. So now this will be split in the ratio of 5 divided by 8.5. Here 1 divided by 8.5. Here we are talking about 2.5 divided by 8.5. But the problem is whatever is the value multiplied by the value, total value, multiplied by the total value. But again the problem is, in the second part you are getting the answer as Tamil Nadu and Kerala. Again whatever answer you get, you have to split again between Tamil Nadu and Kerala. This common area is there both in Tamil Nadu and Kerala, you have to split that. Now that second splitting will be done by population census. In that common area, how many people are there? So whatever value you get, say supposing you get answer X, again you have to split between Tamil Nadu and Kerala, multiplied by the population of that common area in Tamil Nadu region and total population of the common area. Here population of the common area in Kerala region divided by total population of the common area. So this will be done by population census. In that common area, how many people are there? That of Tamil Nadu and that of Kerala, that will be the ratio. So second time you will split up. So first time when you split up, you get answer as Tamil Nadu, Kerala and Tamil Nadu, Kerala. Again that needs to be split up between Tamil Nadu and Kerala. Now this time when you are splitting the second part, first part answer Tamil Nadu, Kerala is very clear. Second part, you have to take the basis of population in that common area. So that is given here. So that is everything about your section 12. Now let us see section 13. When you talk about supply of services, section 13 is helping you in place of supply, where either the location of supplier or location of recipient is outside India. Either supplier is outside India or recipient is outside India, or both are outside India, then you are going to apply section 13. Now when you talk about section 13, again here there is no categorization like 12 where it is based on registration status, not based on registration status. There's no categorization. It is not at all based on registration status. All the services are, all the place of supply are not based on registration status. Nothing is based on registration status. So first category we are talking about general services, where it is not covered anywhere in section 13.3 to section 13 subsection 13. In that scenario, place of supply, if at all location of recipient is available in ordinary course of business, then location of recipient. If it is not available, then it is location of supplier. Now one thing, make it very clear, if you are seeing section 13, either supplier is outside India or recipient is outside India. So Mr. DK of Tamil Nadu, who is a chartered accountant, is giving a legal opinion to Mr. VK, who is a foreigner, which means now recipient is outside India. If at all location of recipient is available, then place of supply is USA. If at all location of recipient is not available, then it is location of supplier himself, that is place of supply is Tamil Nadu. That is the first category. Now second category, you are talking about performance based services. When you talk about performance based services, you are talking about two parts. One, performance based services on goods. Second, performance based services on individuals. So when you talk about that particular category, understand that the presence of goods or individual is must for the supplier to give his services. The presence of goods, physical presence of goods is must, or the physical presence of recipient person is must for the supplier to give his services. So if the goods are not with the supplier, in front of supplier, he cannot give his services. If the recipient or the individual representing recipient, if the recipient himself or the individual representing acting on behalf of recipient, the individual is not present, I cannot give the services. In such scenario, your place of supply is place of performance. Place of performance. You see the example. If Mr. DK of Tamil Nadu is taking the service from an engineer of Germany. So either supplier or recipient is outside India. Now the supplier is outside India for installation of a machinery, which means if at all the machinery has to be installed, the person has to come near machinery has to go there. Now in this case, installation of machinery, the supplier will come to India. The engineer has to visit India and give his services for installation. Place of supply is place of performance, where the installation is happening, Tamil Nadu. Or if at all you are talking about Mr. DK, a tattoo artist of Tamil Nadu, supplier is of Tamil Nadu, is going to USA to tattoo the arm of Jacqueline Fernandez, who is a resident of Sri Lanka. Supplier is of Tamil Nadu, recipient is of Sri Lanka. So either or one of them should be outside India. But where the tattoo is placed, when both of them are in USA, tattoo is given there. In that scenario, place of supply is where the performance is done, USA. But when you talk about goods, there are exceptions. Now what are the exceptions? For goods, you will find exceptions. For your individual, either acting recipient himself or individual acting on behalf of recipient, there is no exception. For goods, there are exceptions. When you talk about exception, if you are talking about performing on goods from remote location, you are performing on goods from remote location, goods are in India, the supplier is outside India, or supplier is in India, the goods are outside India, then it is location of goods. A company of USA is taking services from Mr. DK of Tamil Nadu. Supplier is in Tamil Nadu, recipient is in USA, to repair the server. Server is in USA, remotely from Tamil Nadu. Understand that partly performance is in Tamil Nadu because supplier in Tamil Nadu will perform something on system, and part performance is in USA because whatever action he does, it will be reflected in goods. In our example, server in USA. Then they tell that if part performance is in Tamil Nadu and part performance is in USA, give priority to where goods are located. In this case, where server is located? Server is located in USA. Place of supply is USA. Why? When, see, understand there are two performances. Supplier in Tamil Nadu is doing something on the system. That is part performance. And what is happening in USA is something is happening on goods in USA. So you give priority to location of goods. In this example, it is USA. It can be reverse also. Supplier can be of USA and the goods can be in India. Then place of supply is India. Now second exception. If at all the goods are temporarily imported, condition number one, for repairs or treatment or any other process, in India, and after repair, treatment or process, they are exported again without being used in India. So first the goods are temporarily imported, then in India there is repair, treatment or process, and after that the goods are going on. This is repeatedly asked question by ICA. In this scenario, they are telling that go back to your general scenario, general situation. When you go back to general situation, what will be the answer? The answer will be, if location of recipient is available, location of recipient. If not available, location of supplier. So you are taking the answer from the general situation. Basically, it tells that section 12 subsection, section 13 subsection 3 is not applicable. Go back to section 13 subsection 2. Right. So when you are talking about this scenario, understand the conditions are prefixed. The goods are being imported. So if you look at this example, Mr. DK exports a machinery to USA. That was export initially. There is some problem with the machinery, and the goods, the machinery is sent back to India. So temporarily imported for repairs in India. And after repairs is that it will be re-exported to USA. And say you are charging 1 lakh rupees. So understand that, forget about the fact that it was exported. Now the machine is coming back to India, temporarily imported. For what? For repairs, process or any treatment. And after it is done, it will be resent. All the 3 conditions are satisfied. Then they tell that don't focus on performance. If at all, place of supply would have been location of performance, it would have been India. Answer would have been India. Now they are telling that place of supply is by general rule. If the location of recipient is known, then it is location of recipient. In our example, recipient is there in USA. Then the place of supply is USA. This is to make sure that this is treated as export of services. Why? Location of supplier, India. Place of supply, now from India, by shifting it to general rule, it is USA. Location of recipient, USA. If you get convertible foreign currency, it will be treated as export. So only thing is, you have to get convertible foreign currency, it will be treated as export of services. Now, the next category, you are talking about your immovable property related services. Any services in relation to immovable property. So, you are talking about a scenario where services are directly in relation to immovable property. Let it be construction services or expert services or estate agent services, interior decorator services, architect services. Right, starting from construction, works contract, architect, interior decorator services, expert services, estate agent services, all are covered here. Including accommodation in a hotel, motel, guest, it's also covered here. Resort, it's also covered here. Or renting of immovable property, grant of right to use immovable property, leasing or renting of immovable property is covered here. Any services directly related to immovable property, right, starting from your interior decorator, architect, construction, works contract, your export services, real estate agent services, or your accommodation services, or your leasing or renting of immovable property. Location, place of supply is location of immovable property. Right. If at all you're talking about Mr. DK, who is architect of Tamil Nadu, supplier is providing services to Mr. VK of New York. Either supplier or recipient should be outside India. Here recipient is outside India. In relation to immovable property of Mr. VK in Rajasthan, a place of supply will be Rajasthan. That's location of immovable property. And next category you are talking about, friends, your event related services. But here, unlike section 12, you are talking about organization of event including admission. Both are together. Admission to or organization of an event including ancillary services. So admission of service events is covered here. Organization of event is covered here including ancillary services. Place of supply is where the event is actually held. Again, you have to understand that either the supplier or recipient is outside India. Mr. Trump of USA attends an entertainment event in Tamil Nadu. So here supplier is of Tamil Nadu, recipient Trump is of USA. Place of supply is where the event is held, that is Tamil Nadu. Now if you look at the note, when you are applying section performance based category, when you are covered in performance based category, or when you are covered in immovable property related category or event category, that is by application of section 13.3, 13.4, 13.5, you may get multiple answers. Right. Now, if you are getting multiple answers, few events are in India and few answers are in India and few are outside India. If it is in more than multiple location, and if you are getting multiple answers, one in taxable territory, one in non-taxable territory, first make sure that you remove non-taxable territory. Answer is India, taxable territory. And within taxable territory, if it is more than one state or union territory, then go with contract or go with your rule 7, 8, 9. understand that if at all there is an event in Tamil Nadu, Maharashtra, Delhi and USA, right? So two events, 3 events, 4 events. Now first step they tell that whenever you get the place of supply multiple, few being in taxable territory, few being in non-taxable territory, they tell that first step is place of supply is taxable territory, which means they rule out USA. They tell that answer is Tamil Nadu, Maharashtra and Delhi. And if you get multiple answers, go with the contract or split as per 7, 8, 9. When you talk about split as per 7, 8, 9, we have discussed how to split the events. We have discussed how to split the immole property. So that we know. In this case of event, you will be splitting in the ratio of 2:3. Event 2:3, generally accepted accounting principles. For event, it is generally accepted accounting principles. For immole property, we have seen the answer already there. Whether there is a single immole property in multiple states, multiple immole properties in multiple states, you are talking about based on number of nights, or single immole property accommodation services in multiple hotels, multiple states based on number of nights, accommodation services in single immole property, multiple states, or other immole property related services. It is based on the area of immole property in each of the states. So that we have already discussed. So when you get multiple answers, first remove whatever answer is outside India. Then within India, you have to apply your rule 7, rule 8, rule 9. Now as far as rule 8 and rule 9 is concerned, rule 8, which talks about immobile property related services, it tells that go back and refer rule 4, which you have already discussed in section 12. Rule 9, which talks about events, it tells that go back and refer to rule 5, which you have already discussed. This rule 5 was talking about generally accepted accounting principles, and rule 4 was talking about either number of nights, or it was talking about the area of immobile property in each of the state, depending on which category it is. Now performance based category, if you remember in section 12, when the performance is in multiple states, you don't have an answer. But in section 13, when the performance is in multiple states, you have an answer. In section 12, when the performance is in multiple states, there is no answer. But in section 13, when the performance is in multiple states, you have an answer as per your rule 7. Now, how to bifurcate the answer? If at all performance is on goods, that's a separate answer. If at all performance is on individuals, that's a separate answer. So if at all performance is on goods, you have to ask a question. This is performance on goods, this is performance on individuals. If performance is on goods and performance is on same goods, so on the same item, partly performed in one state, partly performed in other state, you have to just divide the value. You have to just divide the value in each of the state. A company located in Tamil Nadu is providing the services of testing of a same car, same goods, and the testing is carried out partly in Pakistan and partly in India. In India, it is carried out in Tamil Nadu, Madhya Pradesh. So it is in Pakistan, Tamil Nadu, Madhya Pradesh. First, rule out Pakistan. Place of supply will be only Tamil Nadu and Madhya Pradesh. We already discussed. If at all place of supply is outside India, forget that. Place of supply is only in India. Then in India, it is Tamil Nadu and Madhya Pradesh. Now you are going to divide equally between Tamil Nadu and Madhya Pradesh. First, understand that if you are getting multiple answers, partly in India, partly outside India, forget outside India. In India, if you are talking about performance based category of the same goods, divide it equally. If performance is on different goods, then part performance, they are on different items. It is not on the same item, but in multiple states. Then in the ratio of the value of the goods in each of that state. Now let us see an example. A company located in Delhi is providing the service of repairing 2 cars belonging to Mr. X. One car is there in Delhi and it is serviced. One car is there in Tamil Nadu and it is serviced at the Tamil Nadu workshop. One car is located in Madhya Pradesh and the service is in Madhya Pradesh workshop. Supplier is the same and recipient is the same, but there are two cars of the recipient. The car which is there in Tamil Nadu is going to the workshop in Tamil Nadu, and which is there in Madhya Pradesh is going to the workshop of Madhya Pradesh. Place of supply will be Tamil Nadu and Madhya Pradesh, and based on the car value, supposing the car value is 2 crores and 1 crore each, based on the car value it will be split. It will be split. And if at all you are talking about performance on individuals, you have to go with generally accepted accounting principles. If you see the example, it will be very clear. There's a makeup artist, DK supplier, who's providing makeup services to SRK. Obviously, he should be outside India only, then you're seeing section 13. Now, when you talk about that particular scenario, SRK is shooting some scenes in USA and some scenes in India, that is Tamil Nadu, Madhya Pradesh. Now, understand that first of all, place of supply will not be USA, it will be Tamil Nadu and Madhya Pradesh. So, makeup services is given both in USA, Tamil Nadu or Madhya Pradesh, but you remove USA, answer is only Tamil Nadu, Madhya Pradesh. In what ratio? It will be based on number of days of shooting in Tamil Nadu and number of days of shooting in Madhya Pradesh. Generally accepted accounting principles will be only that. How many days the shooting was there in Tamil Nadu, how many days shooting was there in Madhya Pradesh would be a reasonable answer. So that is all of yours, rule 7. Now you are talking about other categories, other services given in your section 13.8, 13.9, 13.10 and 13.11. So when you see section 13.8, you are talking about banking services, intermediary services, hiring of means of transport. So when you talk about the first category, you are talking about banking services given by banking sector to account holders, including NRO account, NRE account, banking services. Second is you are talking about intermediary services. You are talking about intermediary services. We have seen the definition of intermediary in the beginning. And then you are talking about hiring of means of transport, but that should be up to 1 month. You are hiring a vehicle, means of transport, but up to 1 month. Even that there is an exception. You are not going to include aircrafts and vessels, but including yacht. Including yacht. Now in that case, your place of supply is location of supplier. Now what all services are covered? Banking services. Second, intermediate services. Third, hiring of means of transport. In hiring of means of transport, you have to be very, very careful. If at all you are hiring aircraft or vessel, you forget about yacht because it is a recreational ships, that is covered here. Other vehicles. Now, hiring of aircraft or vessel for up to 1 month, more than 1 month. Here, please understand that whether it is up to 1 month or more than 1 month, your place of supply will be decided by general category. Location of recipient, it is known. If it is known, if not known, location of supplier. If recipient's address is available, location of recipient. If not, location of supplier. But when you talk about yacht, vessel, you remove yacht. Recreational ships, you remove, which is only for tourism, relaxation purposes, personal purposes, you remove that. Or other vehicles. If it is up to 1 month, place of supply is location of supplier only. If it is more than 1 month, it goes to general category. Location of recipient if address is there on records, if not, location of supplier. So here, the exception is only this. You are talking about hiring of yacht and other vehicles, not including aircraft and vessel, and up to 1 month, it is location of supplier. Location of supplier. So the examples accordingly are given. When you talk about the next category, you are talking about transportation of goods other than by way of mail and courier. If it is by way of mail and courier, it will go in general category. If the location of recipient is known, location of recipient. If not, it is location of supplier. But if it is other than by way of mail and courier, which means by GTA or by rail or by airways. So when I talk about other than rail, mail and courier, you are talking about GTA or air or vessel or rail, that is covered. Place of supply is your place of supply is destination of goods. Where it is going, destination of goods. For passenger transportation services, place of supply is where the passenger embarks the conveyance for continuous journey. We have already discussed that concept in section 12, where the passenger is going inside the conveyance for continuous journey. And for services provided on board a conveyance during passenger transportation services. Services provided on board a conveyance when you are going by passenger transportation services. Again, the same concept that we have discussed in section 13. It is location of first scheduled point of departure of that conveyance. Supposing you are talking about a particular train which is going starting at say Tamil Nadu, going via Karnataka, going via Maharashtra, and then finally going to Delhi. Right. In that particular journey, one passenger is getting inside Tamil Nadu, one passenger in Karnataka, one in Maharashtra, and all the three passengers are getting services on board a conveyance. All the three passengers are getting those services on board a conveyance. Now first you are talking about passenger transportation services. For passenger transportation services, place of supply for the first passenger is when he is getting inside the conveyance Tamil Nadu. Place of supply for the second passenger is Karnataka, where he is getting inside the conveyance, and place of supply for the person in Maharashtra, where he is entering the conveyance for continuous journey, if at all he is entering in Maharashtra. And for all these three passengers, place of supply for the services that they are enjoying on board a conveyance, place of supply will be equal to first scheduled departure point, which is Tamil Nadu. For all these, this is when you are talking about services on board a conveyance. This is where you are talking about passenger transportation services. So that is all about your section 13.8 to section 13.11. And in all these categories, please remember that we are talking about a scenario where either the supplier or the recipient is outside India. Now the next category, friends, we are discussing a scenario where we are talking about OIDRS services, online information and database access and retrieval services. Here clearly place of supply is given as location of recipient. Online OIDRS services, please remember that it is automated online services. There's no manual intervention, minimum human intervention, automated online services which are getting with the help of internet or any net facility. Location of recipient. Now recipient is deemed to be located in India if any of the two conditions are satisfied. What are the conditions? If you see the conditions, you will find that if the address of the recipient is of taxable territory or billing address is of taxable territory. The address given by recipient is of taxable territory or the billing address is of taxable territory. Or if you're talking about landline, fixed landline which is using for his net is of taxable territory, or the SIM card that is using for net is of taxable territory. If he's using landline, fixed landline route wire net, then that is of taxable territory, or the SIM card that is using wireless, it is of taxable territory, or the bank account used for making the payment is of taxable territory. If it's making payment by debit card, credit card, then that is of taxable territory, or the system which is using IP address of that system is of taxable territory. So any of these two conditions out of 7, if it is taxable territory, then the recipient is deemed to be located in taxable territory. First they tell that place of supply is location of recipient. Then recipient can be said to be in taxable territory if these two conditions are satisfied. What? Location of recipient is of taxable territory, or the billing address given by recipient is of taxable territory. Landline connection, if you are using net by landline, is of taxable territory, or if you are using a SIM card, that is of taxable territory. Bank account which you are using for payment is of taxable territory, or credit card, debit card that you are using for payment is of taxable territory. Or finally you are talking about your IP address of the system that you are using is of taxable territory. Now understand that who is liable to pay for your OIDRS services? Who has to make the payment? If I am telling that the supplier is of taxable territory, if the supplier is in India, supplier has to pay FCM. If the supplier is in India, supplier has to pay. If at all supplier is in non-taxable territory, if at all supplier is in non-taxable territory. Then ask yourself a question, whether the recipient is a non-taxable online recipient, that is in simple language non-business entity, government or individual, not for business, not for profession, or business entity. If the recipient is business entity, then recipient has to pay under RCM. The recipient is business entity, then recipient has to pay under RCM. Understand friends, we are talking about importation of services. Supplier is in non-taxable territory, recipient is in taxable territory, but recipient is non-business entity or business entity. If it is business entity, RCM. If it is non-business, if the recipient is non-business entity, that is technically non-taxable online recipient, then it is FCM. If you see all these three categories, then it is FCM. But the difference is, who has to pay? Supplier has to pay. Now who is the supplier? If directly supplier is giving the services to recipient, supplier has to pay. If the supplier is giving, the content creator, the app creator is giving the services through an intermediary, then the question comes, who has to pay, whether the supplier or the intermediary. Now understand that if at all, just understand this, directly you are getting the services from supplier to non-taxable online recipient, or supplier through intermediary through non-taxable online recipient. Supplier is nothing but your app creator. Intermediary, you can understand it as an app store. Now, if in the first case supplier is directly giving to non-taxable online recipient, supplier has to pay under forward charge mechanism. In the second case, either supplier has to pay or intermediary has to pay under forward charge mechanism. When supplier has to pay, when intermediary has to pay is the question. Either supplier or intermediary. If this intermediary is pure intermediary, then supplier will be paying. If intermediary is not pure intermediary, then intermediary has to pay. Now what is meant by pure intermediary? Pure intermediary means he is telling that, see, I am only the intermediary, I have got nothing to do with this supply. Everything is to be done by the supplier. Then he is a pure intermediary. He will not come into picture and supplier has to pay it. Now what is the definition of pure intermediary? If intermediary wants to escape tax, he should prove that he is a pure intermediary. What is meant by pure intermediary? The invoice of the intermediary clearly tells that what is the supply and who is the supply. It will clearly that this is the supply, this is the service, and I am not the supplier, someone else is the supplier. And intermediary clearly tells that he is not responsible for payment, neither he is collecting the payment nor is processing. He is nothing, he is not doing anything with the payment. The payment will directly go into the account of the supplier. He is neither processing it nor collecting it nor responsible for payment. Intermediary is clearly telling that he is not authorizing the delivery of supply. If something wrong happens with the service, I am not responsible. I am not authorizing this. And the general terms and conditions which are there along with the app, intermediary clearly said that I am not setting these terms and conditions. The real supplier is setting these terms and conditions. If at all these conditions are satisfied, then intermediary is a pure intermediary. Intermediary will not pay. It is the supplier who will pay under forward charge mechanism. If any one of these conditions are not satisfied, then intermediary is not a pure intermediary. He becomes deemed supplier. He has to pay. Now, what are the other important points when you talk about this OIDRS services? OIDRS services we have discussed in registration chapter that Pan India they will get one registration. Pan India they will get one registration, and their registration may not be based on the PAN number. They may not have the PAN number. If at all OIDRS is not having presence in India, their representative has to pay tax under forward charge mechanism. If they don't have representative, they have to appoint a person for paying the tax. Normally import of services under RCM, but OIDRS services to non-taxable online recipients under FCM, the person outside India has to pay tax. So simplified registration, full India one registration. It may be based on PAN or no PAN, sufficient. And if you have a representative, ask them to pay the tax. If you don't have the representative, appoint someone to pay the tax. So that is all about your section 13, subsection 12, right along with section 14 for OIDRS category. And the last category in section 13 is residuary category, section 13, subsection 3, where your place of supply is based on effective use and enjoyment. Why this is introduced is in order to prevent your double taxation or non-taxation, or for uniform rules. Government can notify certain services where place of supply will be effective use and enjoyment. Have government notified services? Yes, government has notified 2 services. If you see the first category, they are talking about specified R&D services related to pharmaceutical sector. So you are talking about R&D services. You need not see the specified list, not at all relevant. Just remember R&D services related to pharmaceutical sector. Very clearly they have said that supplier is there in India, recipient is there in outside India. And if you see the condition, they are telling that we will treat place of supply as location of recipient if it is satisfying all the other conditions of export of services other than place of supply. See, basically understand that they want to make this as export of services. And what was problematic is when you talk about R&D services related to pharmaceutical sector, supplier, location of supplier, they were very clear that it is in taxable territory. Location of recipient, it is very clear that it is in non-taxable territory. Place of supply, normally it will be performance based, location of performance which is in taxable territory, which will not make it as export of services. To make it as export of services, they tell that place of supply, we will treat it as location of recipient which is non-taxable territory if you get convertible foreign currency. So out of 4 important conditions, obviously we are not talking about head office, branch office, so I am not taking that 5th condition. The problem was, first condition was satisfied, second was satisfied, fourth was satisfied. The problem was place of supply, it was location of performance which is taxable territory, and if at all this was the case, it would not have been treated as export. Now when they make place of supply as location of recipient, it will be categorized as export of services. Why? Supplier is in India, recipient is in outside India, you are getting convertible foreign currency, you are not talking about head office branch office transaction. Now the only problem which was there was place of supply. If it was location of performance, it would have been taxable territory, it is not export. Now when they make it as location of recipient is in non-taxable territory, it will be export of services. Likewise, they have this same thing for maintenance, repair and overall maintenance services, repair services and overall services of aircraft, vessel and their engine components and parts. Not only of aircrafts and vessels but also of their engine component parts. But there is a condition here. They should be supplied to a person who is using it further in his business. So they should be supplied to a business entity. Then in that case, again, place of supply is location of recipient. Again here, the concept is very simple. They are trying to make it as export of services. Because supplier is of taxable territory, recipient is of non-taxable territory. Again here, place of supply would have been performance based. Normally, place of supply would be your place of performance, and if performance is in India, it will be India. So they don't want it to be place of performance, they want to shift it to your location of recipient. From place of performance they are shifting to location of recipient so that it may be qualifying as export, but here there is something else to differentiate. The condition is different. It may or may not be export finally. This may or may not be export of services finally. And second important point, here this is applicable only if the recipient is using it for business purposes. If the recipient is not using for business purposes, then the place of supply will remain as location of performance. So 2 special points here. Here it may or may not be export of services, unlike the first category. It may be, it may not be, depending on the situation. Second, here the recipient should be using that for business purposes, only business purposes. If the recipient is using that for non-business purposes, then it is not coming here. It will be normal category, which is say place of performance. So that you need to differentiate. So that is everything about your section 13. Now friends, finally discuss about the other provisions which are there. Out of other provisions, starting at section 15 to section 18, we have already seen section 15. Now let us focus on section 16, which talks about your zero rated supply. We have discussed this a lot of times. Zero rated supply basically means it should be a supply plus it should be either export of goods services or supply of goods or services to special economic zone. So first it should be a supply, then it should be either export of goods or services or it should be supply of goods or services to special economic zone. Now what is the speciality of zero rated supply? You have two options. The first option is you can go on payment of IGST and claim the refund of entire IGST. So the first option which is available is pay IGST, claim the refund of entire IGST. When you're making the payment of IGST, you'll be using your credit ledger as well as cash ledger, and whether you're using credit ledger or cash ledger, entire IGST will come to your bank account. Second option which is available is you go under bond or LUT, don't make the payment of IGST. Still, the benefit of this point is even if at all you're having, if you're not paying your output IGST, still you can have your input tax credit. So that is the speciality of your input tax credit. ITC may always be available for zero rated supply. So normally you pay output tax, you get credit. You don't pay output tax, you don't get credit. But for zero rated supply, even if you don't pay output tax, you can still claim the credit. Right? Even if the outward supply is exempt. Even if you're not paying output tax because of bond or LUT or because it is exempt, even if you're not paying output tax, if it is zero rated supply, you can claim credit, and that credit you can get the refund. So for zero rated supply, you have two options: either pay output IGST by using credit ledger, cash ledger, get the refund of entire output IGST in your bank account, or don't pay output IGST, go under bond or LUT. Even if you're not paying output IGST, you'll be getting the credit and get the refund of that unutilized credit. So there are two options that you have. Now there are certain circulars about your zero rated supply, very basic circulars. Now the first circular is telling that you are making a supply to foreigner and foreigners making supply to you. So India to USA, you have made an export of services for $5 lakh. USA to India, you are importing services for $3 lakh. So they are telling that if at all there is export of services and there is import of services, there is export of services and there is import of services. You are exporting for $5 lakh, you are importing for $3 lakh, but final settlement when it happens, it is only for $2 lakh. So you are getting only $2 lakh. Now understand that this circular clearly tells that for $3 lakh that you are importing, you have to pay RCM. For $3 lakh that you are importing, you have to pay RCM. Numbers, don't see the numbers here. Numbers here might be different. In our example, for $3 lakh that you are importing, you have to pay RCM. And for your, this is, I'll give the numbers that I have taken. So there is an export of services for $5 lakh and import of services for $3 lakh. Net amount that you are getting after set off 5 lakh minus 3 lakh, you are getting $2 lakh in convertible foreign currency. Now understand that on this import of services, you have to pay RCM on entire $3 lakh. The question is whether this entire $5 lakh is at zero rated supply. Answer is yes, it is. For entire $5 lakh you will be treating it as export of services. Though you have received only $2 lakh, but export of services will be for $5 lakh because setting off is also receiving convertible foreign currency. When they talk about receiving convertible foreign currency, 2 lakhs is actually received in convertible foreign currency. 3 lakhs which is set off, it is equivalent to receipt of convertible foreign currency. So here on import of services, entire 3 lakhs you have to pay RCM. On export of services, for entire 5 lakhs you will be getting the benefit of zero rated supply. Though you have got physically only $2 lakh, but it is as good as getting entire $5 lakh. So that is the first clarification that is given. The second clarification that is given, we have already discussed in your document chapter. Nevertheless, we will be discussing again. When you are taking the goods out for exhibition, it is not at all supply, delivery challan. So when it is not at all supply, it cannot be zero rated supply. When it is not at all supply, it cannot be zero rated supply. Yes, the goods are being exported, but when you are taking the goods outside India, say USA, for exhibition, for it to be zero rated supply, first it has to be supply. For it to be zero rated supply, first it has to be supply. So when you are taking the goods for exhibition outside India, it is not at all supply. It is just a movement from India to outside India. Though it is export of goods, but technically it is not zero rated supply. It is under delivery challan. So there is no need of any bond or LUT. It is not at all supply. When in USA certain items are accepted, then it becomes supply, and when it is supply, it is zero rated supply. Normally for export you have two options, on payment of IGST or without payment of IGST under LUT or bond. But in this case, after you're taking say 100 items you're taking to USA, it is not at all supply, no need of zero rated supply, no need of bond LUT. In USA 10 items are selected and they are sold. Now that 10 items is supply, it becomes zero rated supply, but you will have only one option, going under bond or LUT. You cannot go for payment of IGST, because payment of IGST has to be done when the goods are actually going outside India. So only option that you have for the 10 items that are selected when they are in USA is go for bond or LUT. Don't pay output IGST, get the refund of unutilized credit. Now the next clarification is for special economic zone. Whatever service you give to special economic zone, they will always be treated as interstate supply. Whatever service you give, even if the service given are accommodation services to special economic zone, it will always be treated as interstate supply. So any service you give to special economic zone, including accommodation services, which is normally not interstate supply, you don't see place of supply for special economic zone. It is always interstate supply. And the last clarification is whether zero rating will apply even for compensation cess, whether you will get the refund even of compensation cess for exports and supply to special economic zone. Yes, even for compensation cess you will get the benefit of zero rating. Either pay output compensation cess, get the refund of output compensation cess, or don't pay output compensation cess, get the refund of unutilized compensation cess input tax credit. So that is equally applicable. Now friends, we are discussing about your section 17, 17A and 18. Now before we take 17 and 18, first we'll take 17A. All these three sections, 17, 17A and 18 is all about transfers between government, not by SSC to government. It is all between one government to another government. The 17A, we have already taken this up in your payment chapter. The 17A is already taken up in your payment chapter. Assuming you have amount in SGST cash ledger, you have paid the amount in SGST cash ledger. Now you want to clear your CGST liability. So what you will do, from SGST cash ledger you will transfer it to CGST cash ledger. Then you will close your CGST liability. That is two steps. You have amount in SGST cash ledger, but you want to pay your CGST liability. You have amount in your SGST cash ledger, amount in your SGST cash ledger, but you have to pay your CGST liability. So first step, transfer from SGST cash ledger to CGST cash ledger, then close your CGST liability using CGST cash ledger. Now when you are doing the transfer, when you are transferring from SGST cash ledger to CGST cash ledger, what happens? You have paid it to state government, but the liability is closed off central government. So that state government has to pay central government. That state government has to pay central government. Why? You paid it to state government in SGST cash ledger, but it was first transferred to CGST cash ledger. The CGST liability was closed. Central government never got that amount. So now that state government, that particular state government has, in the back end, it has to give to central government. It can be reverse also. Supposing you have amount in CGST cash ledger, CGST cash ledger, but you are using it for paying, you have SGST liability. Now you have amount in CGST cash ledger, but you have to pay SGST liability. First step, transfer the cash ledger from CGST cash ledger to SGST cash ledger. Then close the SGST liability using SGST cash ledger. Now you gave the amount to central government, but it was transferred to state government's cash ledger, and state government's liability was closed. State government has to get the liability, has to get the payment, but it never got. Who got the amount? It was central government. Now central government in the back door will pay to that state. So that is nothing but section 17A. That is nothing but section 17A. This section 17A was already discussed in your payment chapter. Now talking about section 18 and section 17. Section 18, when the opposite person has got input tax credit, when the opposite person has got input tax credit, what it will happen? If at all opposite person is getting input tax credit, you have to remember the simple formula. Whenever your IGST, rather we are talking about your IGST credit is used for SGST output. Remember the section 18 in a very simple manner. Whenever you are talking about your IGST input tax credit paid for SGST output tax, IGST input tax credit paid for SGST output tax. Understand that. Then in the back door, assessee to government is different. Then what will happen in the back door? SGST government never got. Central government will pay to state government. And whenever SGST input tax credit is used for paying IGST output tax, state government will pay to central government. So remember these steps. Other than that, you need not remember anything. So whenever your IGST input, which basically central government will have, is used for paying SGST output, state government has not got the revenue because the credit was of credit usage was done. Then central government in the back door will pay to that state government. And whenever your SGST input is paid for using IGST output, that state government will give to central government. So that is summary of your section 18. Now when you talk about your section 17, when the opposite person is not eligible to take the credit, when it will happen? When you are talking about IGST is paid on interstate supply. See this issue, CGST will go to central government's pocket, SGST will go to state government's pocket. Now the issue is only about IGST. IGST, which is on interstate supply, is opposite person is not taking the credit, or it is on import of goods. IGST on interstate supply or IGST portion of customs duty on import of goods, that is by unregistered person who cannot take the credit, composition taxable person who cannot take the credit, registered person but not eligible for ITC, registered person but not claim the ITC. In simple language, ITC of IGST is not booked. Input tax credit of IGST is not booked. ITC of IGST, input tax credit of IGST is not taken. Why? The recipient is unregistered or composition scheme dealer or not eligible for ITC or not taken ITC. Then central government will take 50% and balance 50% will be given to the state government. Union territory share will go to central government. Now what you have to do? You have to ask yourself a question. For that particular transaction, whether you know the taxable person who has paid that IGST and you know the place of supply. Whether the taxable person and the place of supply is known, give it to that state government. If you know the person who has paid that IGST, if you know the place of supply, give it to that state government where place of supply ends. If you know who has supplied that particular transaction and you know what is the place of supply, give it to that state where if place of supply is West Bengal, give it to West Bengal state. If at all you know taxable person but you don't know place of supply, you know who has paid IGST but you don't know place of supply, then that taxable person would have paid to various state governments, right? Give in the ratio of total supplies made by the taxable person to each of the state. That taxable person, suppose he is in Tamil Nadu, so find out that taxable person supplies within Tamil Nadu, in West Bengal, in Maharashtra, in Delhi, and give it in that ratio to all the states. See, if you know the taxable person who has paid IGST, you know the place of supply, give it to that particular state. If you know the taxable person but if you don't know the place of supply, that taxable person would have paid to different governments. He would have had supplies in Tamil Nadu, West Bengal, Delhi, Maharashtra. Give it to all the states in the ratio of total supplies made by the taxable person to each of that state in that financial year. If taxable person himself is not identifiable, if you cannot find out the taxable person, forget about place of supply. Now, tax collected by each of the state or union territory in the preceding financial year will be the ratio. So there will be some IGST portion where you know taxable person and the place of supply, give it to that state. Some IGST portion where you don't know place of supply but you know taxable person, give it to those states in the ratio of supplies made by taxable person to those states. It may not cover all the states. If you don't know taxable person itself, give it to all the states in the ratio of the tax collected by all the states in the preceding financial year. Also understand that your apportionment of interest penalty will also happen in the same manner. If at all IGST apportioned, finally IGST now it is apportioned to different states, finally it is refunded back, then that state has to give back to the central government, or central government will reduce next time when it is given to that state government. The actual figures will be worked out in the end of the year. So when you see the actual figures, they'll be worked out in the end of the year. So ad hoc basis, if central government wants, if they might give 50% to state governments. So that is ad hoc apportionment. So that is all and all about your section 17. We are done with your IGST Act.